our bet. The story is over much earlier. 129 seats for the NDA. Yes, this will get tweaked up and down, but unlikely to be a huge change because there are about 39 seats left to even start counting. There will be several rounds of these seats as well. So this seems to be a done and dusted game. The gap widening right now. I want to just pull up the Nifty and the Nifty contributors while we're speaking, and I wonder if we can show at some point the Nifty, what's happening in the markets and what's happening with the Bihar tally. The Nifty showing signs of weakness, about 102 points down. But look at it this way, that global market cues were weighing heavy on the Nifty right from the start, and the Bihar result was pretty much priced in. So maybe that's what you're seeing. Mid cap and small cap looking fairly benign. Nothing too much happening over there to worry about. Nifty contributors. Let's just pull that up very quickly for a second and see what's happening there. Bharat Electronics is okay. What's weighing down are the banks. ICICI Bank, HDFC Bank, all of them weighing down. The chances of a Fed cut have lowered dramatically. On the other hand, the chances of a cut in India have gone up after the CPI inflation number. So nevertheless, banks seeing a bit of profit booking today, 100 points down, odd on the Nifty. Let's look at the sectoral heat map and see what's working and what's not. Well, Nifty IT, the big drag, not too surprising. Looking at the AI bubble crack that we've seen, the Nasdaq was about 2.5% down in overnight trade, and the Nifty IT possibly mirroring this trend. Nifty Realty also taking a breather after being one of the top performers yesterday, but the weakness definitely continues. India Defence looking good, and some good results over there have also helped. PSU banks doing okay as well, but more red than green on the screen. I want to look at the VIX just for a sec very quickly and just look at what's happening with India VIX right now. Mild uptick over there, which was about 3.5% down yesterday, and rising quickly, so 1% up. We have to wait and see how those numbers fare and break down as far as Bihar is concerned, and that seems to be a done story, but nevertheless the VIX going up, bit of a sign of concern. Let's look at individual stocks and what's moving, because at the end of the day, the results and the corporate action matters as well. So among other things that you're seeing this morning and good results, Muthoot, wow, Muthoot is really shining bright and is the winner of this morning. 8.5% up as we start off trade. Jubilant Food, great numbers and very positive brokerage reviews as well, 7% up. Bharat Dynamics doing well and possibly lifting the entire defense pack. Let's look at the consumer durable segment. They would have gotten a boost from GST, but it didn't show this quarter. Voltas down. LG Electronics also not great results. PG Electroplast was also not good, but relatively between the three, definitely doing okay. I want to look at GMR, Airports and Vishal, Megamart, some others that have reported. Dollar Industries actually a turnaround quarter. Very strong numbers with Dollar, and what's happened in that company deserves a little bit of a deep dive, because there's been a whole restructuring in how they've run their business. So 6.5% up for a Dollar coming in. I want to look at Manappuram. Is there a Muthoot impact on Manappuram, because this large players upped their guidance to 35%, 1.5% up there as well. So Agility has a huge block which has come off, but it's the last of those blocks has been absorbed very quickly, clearly. 3.5% up. Numbers were decent as well. So these are some of the numbers that we're seeing. Tilak Nagar and Akums, if you can just look at those, also have reported, and those have not been great numbers as well. So some howlers, pretty a number of good ones, but the market having its doubts right now on what to do next. That weakness continuing, Alex.
Yeah, absolutely, but significantly off what we were initially expected, or what that open had suggested. But take a look at what's on your screen. Tamanna began by telling you about where the leads stand right now and crossed the halfway mark for the NDA. But I think what might just be more telling, and I'm going to be very curious about what she thinks about this, is a vote share. And that's very healthy for the NDA and Nitish Kumar, as much as 66%, and that's a significant uptick. Make sure that you pay attention to the number at the bottom of that tally, which is the increase from the previous time. And you've seen a substantial double-digit increase for the NDA as a whole, which likely indicates to me that the leads could well be held. And so therefore, you have a situation where, rightly enough, the number is being called significantly earlier than anticipated. Only 210 out of 243 so far being counted. or in the process of being counted, but already you have a pretty substantial number that is gone in favor of the NDA.
The 65% vote share is insane.
Yes.
for an incumbent. This is a
for anybody, right?
For anybody. I mean, this is a wipeout. If this flows through, and probably it won't because everything hasn't been counted yet, but if you look at the majority mark being crossed and in the rear view mirror, you're looking at the NDA coming back with a whopping majority. So all of all of those 9 polls on the first day of the post the election, the exit polls, the first lot of the exit polls seem to have gotten it correct. Let's just cut across to NDTV and editor Rahul Kaval breaking down the data.
Currently the Minority Affairs Minister, he's been fielded again from Chenpur on a JDU ticket, and guess who is leading right now?
The Jan Swaraj is leading. Hemant Chaubey. So a Dalit dominant seat with a Muslim candidate and a Jan Swaraj Brahmin leads.
And an upper caste.
Of course, but Veer Sanghvi, what's quite clear is that no matter where this ends, Prashant Kishore in his debut election in Bihar is not headed for the ceiling. It could be somewhere around the floor, but he's definitely not heading for the ceiling. That's very, very clear.
I think that was probably clear from the beginning to everyone except for Prashant Kishore, who said he was heading absolutely for the top. You have to admire what he's done. What he's done is very creditable, but we won't only because he's raised expectations to fever pitch.
But I must just add to what Veer is saying. I think Prashant Kishore himself knew, because when we met him at the conclave after that, he said, "मैं November में आपको Tamil Nadu में मिलूंगा." So if he did manage to win many seats here in Bihar,
because he spent so much money in Bihar, and now as a consultant he has to recover some of it.
But the fact is that
it's a good life, Chetan. You earn money through, say, Jagan and TDP and wherever else, Tamil Nadu, and then you can spend it in
he's
Bihar.
putting it back in the business.
And that's his
11
business.
crores for
But
2 hours.
other ways
That's
of
what he
spending
said.
their money.
He has
The
been
long
paid
lasting
for
elections.
consulting with a company that is making some
Padmaja.
fungicide out of mushrooms.
Padmaja, all of
11
us put
crores
together
for
should
2 hours.
reverse aging mushrooms. Padmaja,
I don't think
Padmaja,
he's as
reverse
successful
aging
as
mushrooms.
Prashant
Be
Kishore.
specific.
Reverse
Aging
You
mushrooms.
can also get electoral bonds now.
Well, he already has substantial fees. He doesn't need electoral bonds.
Sanjay Jha, senior leader of the Janata Dal United, is speaking at this moment, pretty much runs the JDU at this moment. Let's listen to what Sanjay Jha is saying.
मैं उसी समय से ये सब बात कर रहे हैं। आप बताइए, मैं आप लोगों से भी पूछ रहा हूँ, आप लोग भी फील्ड में गए थे, पत्रकार है, आप जो रिस्पांस लोगों का देख रहे थे जिस तरीके एनडीए को लेकर के और खास करके मुख्यमंत्री जी को लेकर के, वो रिस्पांस कैसा था? यही लोग यात्रा निकाले वोट चोरी का, चुनाव से पहले यात्रा निकाले ना वोट चोरी का, तो एक वर्ड चुनाव में वोट चोरी पे बोले? कहीं एक कंप्लेन आया किसी का वोट कट गया हो? संविधान खतरे में है, वोट चोरी हो रहा है, केवल झूठ का नैरेटिव फैलाना, और जनता समझ चुकी थी। लेकिन अब फिलहाल एक बार रिजल्ट आ जाए उसके बाद हम लोग।
सर लास्ट बात है सर, उन्होंने कल कहा प्रेस कॉन्फ्रेंस करके कि हम
In confidence is someone who thinks he's winning. The moment he's saying, where was vote chori? Kiska vote chori hua? He's already got his mojo out. He's conveying that he thinks he's won.
On this vote chori, sometimes people will buy it if somehow the results are not adding up. Somehow it cannot be explained. But you can explain these results. You can. I think it's the 3 Ps. They get it right. They get the person. You have a Nitish. You have to have a passion, which we've been discussing, that there's a far more passion in some of these parties. And the policies, which is like the welfare schemes and all. So the results can be explained. It's not like, oh my God, what happened here?
No, but
so vote chori tab माने ना जब ऐसे कुछ एकदम ही उल्टा हो जाए.
No, that's one part of it. The other part of it is what Sanjay Jha said, that if there is chori, you'll have hundreds of people in the villages in different seats of Bihar saying my vote has been snatched away from you. That didn't happen. There may have been the odd isolated case of somebody's name being stricken off, but it wasn't en masse.
Okay, so all of that fast-paced action, if you want to look at pure politics this morning on NDTV 24/7. Of course, we're talking about markets here, and as 143, I mean, this is whopping. I wonder if you can pull up that vote share chart again and where that is at this point, because 143 is just, I mean, phenomenal for a party to come back with, and all of the votes have not been counted yet. 65% of the NDA. I mean, even if this tweaks down a little with the remainder of the 23 seats that will be counted, it's not going to change dramatically. This is done and dusted. Everyone here at the anchor table has lost their bet. But before 9:30, it's done.
Yeah, so I was the closest by the way.
No, this is
Or
not.
whatever, of
this
course
is
I
not
was the
first
closest.
past the post.
No, I was the closest. I'm not saying I won, but you guys were saying 12 and 1. I was 11 at least. You got to give credit for
This
that.
is 9:20. We've not even hit the 9:30 mark. But let's talk markets just for a second, because markets are in their own mood and it's a bit of a funk, to be honest. A recovery, some recovery there, 0.25% down now on the Nifty, less than 100 points down. But the story this morning really is about a Muthoot Finance. Dharmesh, I want to come to you. First, comment on the result, which seems to be done and dusted. Because, you know, as someone who is invested in this as well as hailing from the state, is this something that you're happy with? And then, of course, we'll talk about Muthoot.
Yeah, definitely. I mean, it's a very good result, and surprisingly, 65% kind of a vote share I have never seen in my history of whatever tracking I have done for political elections. So, excellent set of numbers, very encouraging, and I think things should look up from here on. As far as Muthoot Finance is concerned, the numbers were excellent. I mean, with gross NPA reducing by more than 200 basis points is what was very encouraging, because that was a segment where talks were there that asset quality was a concern, which is no longer there a concern as of now. At the same time, gold prices continue to be in the upside trajectory. And going by the way, I mean, Mr. Trump and everything is playing out, I don't think gold prices are here for a meaningful correction. It may correct a bit, but it's likely to be on the upside. Management will likely meet their guidance and will continue to do well. There are new players also who have entered into gold finance business. Things are picking up very fast out there. So this is one stream where in the NBFC space is likely to perform better than the normal NBFC space, is what our sense is as of now. So if somebody's a buyer, continue buying that. As regards to Manappuram Finance, I mean, let's wait a bit. I mean, they still have that microfinance problem playing out. So go with the larger boy in the pack, and I think Muthoot stands about 15-20% kind of upside in next 6 months is very much on the cards.
Dharmesh, Kush, on that note, thank you so much for joining us this morning. Pleasure having you as always. But our coverage on markets and on elections continues this morning, and joining us to speak about perhaps both and the implications of the election result in Bihar is Vikas Khimani, the founder and chief investment officer of Carnelian Asset Management and Advisors. Vikas, as always, thank you so much for taking the time, and good morning to you. It seems like, and we had a bet on this table, which is when will the results be evident, and the earliest bet was 10:30-11. It's just about 9:30, and that seems to be already the case. 65% vote share for NDA, thumping victory. What are the implications, according to you, for India and the markets?
Good morning. I think it's one more state elections. It's not the first time we've seen state elections. I mean, we see very often, and I think every time there is a sort of big fight. This was anyway not to be big fight, not expected to be a big fight. So I think by and large, during the election, post-exit polls, I think it was more or less clear which direction it is moving. So I don't think this will be any major shift in any way, in any case. So I think markets are, that's the reason if you see, it's a kind of irrelevant from a market's perspective. It's just one more state election. Anyway, state elections, don't play much role in any specific way of economy in a longer term.
But Vikas, having said that, there was a little bit of attention that was paid to the Bihar elections this week at least. And I know that you have a longer lens on the market. But having said that, once we go past this and start Monday onwards, what according to you is the focus? Because we'll be done with the Q2 earnings season at that point. And the earnings in a large number of pockets has actually been better than anticipated. That's what the numbers show. And the second half is likely to be even better. So what attention are you paying to that, and where would you be focusing start Monday onwards?
I think we will be focusing on Monday onwards what we've been focusing always, in the sense nothing changes. We've been maintaining for quite some time that second half of this year will be far better in the terms of earnings growth. We were never pessimistic on earnings growth, and I think that is what has played out. We remain quite positive. All the structures, drivers of economic growth in India is in place. I think RBI policies are very, very growth boosting. Government policies are very growth boosting. So when both of them are there, I see no reason why growth will not come. And that's the reason I think so. The focus is again going back to identify companies, identify stocks, and work on that. So nothing changes, to be honest. We remain positive in the market, very, very strongly. and there will be some short-term volatility which can come from any news flow, including US markets or something. But I guess if the US deal happens, that could be another potential trigger which is around the corner. Otherwise, I think market continues its trajectory, and interest rates cut will come. There's always something happening around, so don't worry. You will have enough to cover.
Vikas just yesterday wrote this letter, this newsletter, which is the optimist's take on managing risk, and I'll talk about that. But because we are optimists about things happening, for sure, because we're in a country wherein a lot of things are happening, so not worried about coverage at all. I'm wondering if you are a bit worried about earnings as they shape up or not, because the opinion today on the channel from two very different people was completely divergent about whether Q2 leaves the stage for an earnings trough behind and chances of an set of upgrades, or is it the other way around? How do you think about it?
We've been saying this, if you remember our previous all interaction, including Q1 and any time in Q2, we've been saying that the second half of this financial year will be very, very strong in earnings growth, because all the policies which government took, RBI took, which was kind of either to boost liquidity or to reduce interest rates, they all tend to have impact with the lag on the corporate earnings, and that we think that will be very strong. So you will see upgrade cycles. Analysts will be upgrading, and I don't think in this Q2 also there are any major disappointments. I mean, there's some disappointment always happens in any kind of markets, but I think it's broadly has been better than expectations. So I think that will continue. I am not at all worried about earnings cycle. There's no reason to worry. I don't see what will pull earnings down.
Okay, no reason to worry. By the way, the markets as we speak as well, presumably because of this election verdict, I know it's just a day's trade, and Vikas is right, it's just another day, but that just another day has brought our markets higher despite the US markets not doing well and the rest of the Asian markets sulking. In fact, the small caps are in the green as we speak. So pretty good going for our markets, you have to admit. Because I'll come on the optimist take on managing risk in a bit, but let me ask you about the optimist take on how to manage the portfolio. And I wonder if based on and I know you don't hesitate from taking concentrated bets, and which is why my question is even more important. Have you done some rejig in the asset allocation in the listed market portfolios?
I mean, it's again, we increased our banking quite a bit, early part of this year, post 15th August, when Prime Minister made an announcement on potential GST expectation cut. We made a lot of, we bought automobiles and some of the consumer names because we thought they would do well. And that has played out. So I think you don't make very, on a day-to-day basis judgments, calls in your portfolio, but structurally we did make some changes in our portfolio. And I think it's all likely to play out further from here. I think, automobiles and consumer-related plays will play out well. I think banking sector will play out well, where we are significantly heavyweight. We have been quite positive and continue to remain very positive on the entire CDMO manufacturing place in various spaces. So all of them are broadly in place and nothing has kind of changed. Of course, last few quarters ago, there was some little bit of questioning around the earnings season, so some stocks got punished, but they're all coming back. When when earnings come back, they will all again be cheered up. So I think against more or less, so we haven't really made, other than the consumer and increasing our banking weight, we haven't made any major changes. Now incrementally we are looking for a little bit more IT addition. We think that IT can do well over next 12 months. Last 12 months it's been underperforming, so we're kind of thinking around that. We already have some weight, but we might probably add some more.
Specific on the financial space, Vikas, and I want to ask you this because you clearly have an opinion on this because of the portfolio holding that you have. But what Neeraj was speaking about earlier, the other commentator talking about the fact that 11.5% credit growth that we've seen recently, perhaps to a certain extent nudged into double-digit territory because of gold loans. So I'm just wondering whether you have a different take on why you anticipate that the pickup will take place in the credit growth cycle. Of course, interest rates going down, but do you think that that's going to be capex led? Do you think that that's going to lead to it?
See, it's demand is, if you see last year, I think a lot of credit growth slowdown happened because of also availability. There was a liquidity squeeze in the system. Deposit rates had slowed down. Now, I mean, interest rates have come down. Consumer demand is picking up. capex cycle is on the rise, no doubt about it. Though this time around, capex cycle has been funded mostly through equities. But related to that is working capital cycle, where working capital loans have been growing up. SMME is going very, very well. So I think, I don't see any reason why. And plus, if you see recent policy measures of the RBI, there were some number of measures to boost growth, including, increasing the limits of the loan against shares of the banks from 20 lakhs to 1 lakh to M&A funding. There was a plethora of measures. So basically, when your regulator is giving you clear message and opening up the more and more spaces where credit growth can come for, that just tells you. And I have never seen when regulator is trying to be growth boosting and growth does not come. And economy, like I said, there's nothing wrong. Economy is progressing very well. So if that's the case, I see no reason why credit growth will not happen.
Well, technically never find the regulator as well, but because that's the arguments that pessimists make, that regulator is doing this but it may not happen. You're an optimist. Your newsletter suggests that. I read through it, some key points out there. You quoted Morgan Housel as well a couple of times. I was just wondering, what was that one original piece that you've put in which mirrors the psyche and mirrors your current sentiment on the market as an optimist?
I think again, if you like you said rightly that optimists are, like, very often very common comment, you say fund managers are supposed to be always bullish, but that may not be the case, right? So I've been maintaining my bullish stance for quite some time, and I think that's how it's been playing out. But that does not mean that there won't be any drawdown, there won't be any short-term corrections. All those will happen, but broadly speaking, the market trajectory is quite optimistic, quite positive, quite robust, and I think next 12 months market looks 12 months, 3 years, and 5 years market look pretty good. Intermittently there will be cycles, so there's no question on that. But I think the stores are in favor right now. Valuations are reasonably on side, reasonably good. Markets have not done well, so we are sitting on a consolidated market. Earnings are picking up. Liquidity is strong. I do believe that next calendar year FI flows will be quite positive. So I think all those things, to my mind, my hypothesis points out towards a good, optimistic, positive outlook of markets over the next 12 months.
Okay, Vikas, lovely having you as always. Thank you so much for taking the time out, and great newsletter. Keep them up.
Thank you very much, Neeraj. Lovely talking to you.
Yeah, always. Okay, 45 seconds and we get the management of SAMIL. But Puneet, quick 30-second view, Puneet, strictly 30 seconds. Set it up for us.
Well, thank you for that. It's been a tough quarter for the company, but the larger outperformance that we're seeing in the share price today might be the steep correction that we've seen in the stock over the last few months. Largely, there are some key aspects that we need to work on in terms of the vision systems as well as the wiring harness business that got impacted in this quarter because of US and the other operations. But that will be something to watch, and we've had a conversation with the management today on all of these factors as well as, among others, the new emerging business and why the margin was impacted there. So these are some of the key highlights that you need to watch out for from this conversation.
Got it. All right. On that note, let's bring in the management of Samvardhana Motherson. It has posted a net profit of close to 830 crore rupees, as Puneet pointed out. Let's get in the management. In fact, we're joined by Pankaj Mittal as well as Kunal Malani of the company. Let me start by asking gentlemen about that global environment, which seems to have been challenging. What were the implications on account of that on the Q2 numbers?
I think we had highlighted this in the first quarter as well, that is probably going to be the lowest quarter of this financial year, in spite of all the volatilities that we were seeing. What gave us this confidence was the fact that we had already started working on many initiatives in order to take care of some of the volatility, whether on account of tariffs or some of the supply chain related elements. And at the same time, we had the tailwind coming from a large order book, tailwind coming from a non-automotive business, which continues to grow, thereby aiding both top line and bottom line growth. In April, actually, we had also highlighted some transformative measures that we had taken to reduce our cost structure, specifically in Western Europe and Central Europe, which is what part of it that we executed during the last 2 quarters, and some more will get done. But the benefits of those have started becoming visible, and more of it will happen as we move through the rest of the year. On top of it, I think across the world, I think the tariff-related aspects have got somewhat clarified or somewhat clearer, resulting in everyone being able to take measures to work around these new world dynamics. And thereby, the automotive volume trajectory continues to be relatively resilient. On top of it, while the North American market on the CV side did go down, but with our diversified business model, I think we were still able to be fairly resilient even in the commercial vehicle space. So overall, I think the platform, the mix of businesses that we have, the mix of or the diversity that we have has all aided us to get to us to where we are. And we do anticipate that this momentum continues and H2 will likely look better than H1.
Okay, so H2 will likely be better, but margins seem to have been impacted by some of those challenges in global auto production. When do we see that double-digit margin returning?
Well, definitely there has been a impact of the changes in the models and other disruptions which have been caused with the as we all know that EVs were growing, and then EVs are still growing but at a much smaller pace, and the customers brought in more and more hybrid models and ICE models. So definitely there has been an impact on account of that, and that's what Kunal mentioned, that very early in the year we had announced transformative measures to reduce our overall cost base also, and also transform our businesses to take care of all these changes and work along with our customers. And they have started to yield results, which we can see today. So mostly in the polymer and module division, we had taken various actions, and you see that on a sequential basis, our profitability is improving, although we are also still having certain costs which we have booked in, but much less than what we had booked in last quarter.
But Pankaj, specifically on the emerging businesses, was there something that impacted the margins in the quarter gone by?
Well, emerging businesses are a combination of many businesses put together. As you see, that there has been a very good growth over a period of time in the emerging businesses. They also include the merger of the bringing in together of Atsmitech business into it. And so it's a amalgamation and combination of all the businesses. And many of the new businesses in the emerging business side are, as you know, are growing. They are at a ramp up phase where we are growing at a very fast pace in high double-digit margins numbers. And therefore, the profitability will come in over a period of time in the, not far, but in the near future itself.
There's quite a bit of work, gentlemen, that's being done on CapEx as well. I just want to know in the second quarter what was done, how does that relate to the first quarter, and what's the plan in the rest of the year?
In the current quarter, we have done a CapEx of slightly over 1,400 crores. The previous quarter was 1,200, so the trajectory has gone up. Again, we expect H2 to look even further up. And this is part of the overall guidance that we had given that for the year we would be doing a capex of 6,000 crores plus minus 10%. We would likely to be at the upper end of this rather than the lower end of this guidance, driven by strong traction in many of our business lines, as well as expected capex that needs to happen on the larger consumer electronic facility that is due for launch in the middle of FY27. So we do anticipate that we would be in around our guidance, maybe at the upper end of our guidance rather than the lower, but we will still meet the guidance.
Okay. What about, and I'm going to end by asking you this. You mentioned that the second half is likely to be better. What are the factors that will contribute to this? Is it going to be the automotive side, where you're seeing domestic auto as something that a lot of people are optimistic on, or is it going to be non-auto for you?
That for sure, but I think more importantly, when you think from a global space perspective, one, we have seen that there is a greater amount of comfort around the tariff issue and its implications on demand is now a little bit more clearer. And that implication seems to be relatively muted. So we do anticipate that the volume trajectory should look better. Europe seems to have bottomed out from its production levels. So with some of the new launches expected in H2, we do anticipate that some of that volume should flow through. Also, I think the content part of the automotive piece of the business continues to do well, which should again aid a growth higher than the industry. And then you layer that up with the fact that our non-automotive business continues to grow much higher, and as they ramp up more, their impact on the profitability will start becoming more visible because they are much higher margin businesses than the automotive itself. And then you have the lead lag effect of tariffs, etc., which should kick in. You should have some of the transformative measure pieces for which execution is happening now would also start playing out in H2. So hence multiple drivers to give us the confidence to say that H2 should be better than H1.
All right, gentlemen, thanks so much for joining in and wish you all the best for that second half. Thanks so much for speaking to us. The stock has in fact moved up about 1.2%, 1.3% at the high point of the day, but do remember that the stock has taken a bit of a battering in the recent past and it might just be recovering a little bit of lost ground. But speaking about a stock that has moved up, Muthoot Finance, arguably the stock of the day today, has delivered what analysts are calling a golden touch this quarter, and the Q2 numbers are a strong beat across the board. And not just that, they're also anticipating the second half will be better. They've raised their guidance. I believe we've got Sharad joining in to tell you more about those numbers. Sharad, what stands out?
Well, the entire counter is shining and there's a golden commentary coming in and golden results, and interestingly golden broking upgrades also coming in. Let's go in one by one. Strong beat coming in estimates for AUM growth and the NI part, and the street is really liking the company's important loan growth guidance. That has been upped. The guidance has been increased. Now it's coming at 30 to 35% for FY26. Interestingly, the yields have also improved from the liquidation of old NPAs and higher gold prices, and now we are going into the wedding season as well, and we are seeing channel checks are suggesting there are strong inquiries coming for the gold loan segment. Asset quality also we are seeing an improvement, and looking at the brokerage stake, that has also seen a significant upgrade when it comes to the target prices. CLSA maintained outperform rating, but the target price has been hiked by almost 10% from 3,600 to 4,000 odd rupees, and overall they're expecting that this momentum would continue in the third quarter as well. And Bernstein lastly maintaining outperformance, and they have increased their target price, and this is more than 10% from 2,700 to 3,400 rupees. So the stock itself is firing all the cylinders.
Okay, Sharad, now it's very boring to see you without any props after the Bihar piece that you did. So you should talk about Muthoot only with a big gold chain and a Bappi Lahiri look. Otherwise, it's no fun. So
well, yes, that was the idea, and our entire production team and Sohana will of course get us some more interesting props as well.
No real gold chains for us here. It'll have to
it's a little too expensive.
The gold prices are too much. All right, Sharad Dubey there. Market mood improving. Market mood improving dramatically. I just want to show you the intraday and the recovery from the lows as far as markets are concerned. And there, you're almost at the flat line as far as the Nifty goes, which is important considering at the lowest point of the day, you were over 100 points, 120 points down. What's helping perhaps boost that mood is the staggering victory. This is now not just a victory, it's a staggering victory of the NDA in Bihar. 242 out of 243 leads are out. This game is done and dusted. It's not yet even 10 a.m. in the morning, and it's pretty much done. So that is perhaps what you're seeing panning out as far as markets are concerned. I want to pull up the vote shares if we can, and the breakdown of within the NDA, what's happened in terms of Nitish Kumar's party and the JDU versus the BJP. The vote shares are 64.6% with most of the leads counted, which is going to create records, I think. Some would put it down to a sympathy vote, a thank you Nitish vote, however you want to look at it. But this is unprecedented in a state like Bihar, which is a highly political state. This is not a state that gives a walkover to its politicians. They extract a lot out of them. Just that breakdown once again of within the NDA, how the BJP has fared and how the JDU has fared relatively, neck and neck. This is important because even that dynamic within the alliance becomes important, and you've seen the BJP and the JDU absolutely neck and neck, 72 and 72. I mean, even if this is Nitish's swan song as chief minister, and that is just because of age, I mean, that's how life is. Wow, what a strong showing for Nitish Kumar.
Because in 2020, Tamanna, just looking at the numbers, 43 at this point was where the BJP was, and they're up to 72 at this point, which is quite dramatic.
Yeah, and what was JDU in 2020?
JDU was 74.
Yeah, but the BJP has obviously jumped up, made its place. JDU has held its
Retained.
own. So
that is the difference.
So that what's helped is the BJP coming up, on par, and this whole Mahagathbandhan operation has not worked. Maybe Prashant Kishore has hurt the Mahagathbandhan more than the NDA, or maybe he's hurt nobody. I think those numbers are not quite updated on the AR graphics. We'll stick to these for now. So that's Bihar. It's worked well as far as the markets are concerned as well. And that's what you're seeing, the Nifty recovering up and down, about 0.25% down. So much happening in the markets though, isn't it?
Yeah, and the other piece of news that I think we flagged, but just want to mark again is...
We haven't actually spoken about it yet.
It's transformers and rectifiers. Okay, so transformers and rectifiers, and we hope the management will be joining us very, very shortly, but the World Bank has taken them off from the list of banned companies, and as a result of which I think that stock is up 10% as we speak. We should be getting the management soon to talk about this as well. So let's hope that happens, because guys, you would remember that they spoke to us earlier.
They did. In fact,
I think we have Mr. Rajoda.
Let's go.
Go ahead.
Yeah.
Okay, Chanchal Rajoda, Group CFO and Advisor to Transformers and Rectifiers, Johnson. Mr. Rajoda, thank you so much for joining us and congratulations. Your conviction has been founded to be true, so good stuff there. But I remember when this event happened, you mentioned that there were not too many orders in the offing, which would have gotten subdued because of the World Bank ban. Now that it has been lifted, does the situation change for you?
Good morning, Neeraj, and thank you for me to having here. Neeraj, if you remember when I came Tuesday to your studio, I told that we have taken this issue very strongly with the World Bank, and World Bank has listened our view basically in a very positive manner, and they have removed this ban actually this morning. As I told you that we are the company which always works on the corporate ethics and corporate governance, and we have been doing it since ages, right? This issue has come up because of the certain things which I explained you, and I'm sure that we will bounce back very, very strongly from here.
Hi, and thanks so much for joining us on short notice, but just want to get a sense. The last time we spoke, and you came in on Tuesday, thanks so much for doing that, but does this change anything from the outlook standpoint? Because you said very clearly that on the global stage, in the export market, you're not really going towards these government contracts anymore. So do you change that?
It is not related to the business or business outlook. It is more related to the organizational image and organizational standings, right? Yeah. We always work on that things. Business keep coming and keep going, but the organizational image needs to be intact, right? And that's the reason we reached to the World Bank and requested them for all look into this, and we got the result in place now.
Mr. Rajoda, I recall when you came just a few days ago, I think 3 days ago, you came to our studios, you sat with us here and you said that you would be working on it. I'm just wondering what exactly was the pitch or the communication to the World Bank, because they have changed this quickly. Are you putting it down to a technical error they did, or was there some kind of explanation given? Just give us some more details on that, because clearly the street has reacted well to it, but what exactly was the issue?
अमन्ना, I quote this in basically in Hindi. हिंदी में एक चीज कही जाती है, जब आप अपना पक्ष ईमानदारी से और सत्यता से प्रकट करते हैं तो ऑटोमेटिकली उसको सुना जाता है, right? And we did the same thing. We presented our view and our point of view to the World Bank on a very honestly manner, and they also understood our point, and they acted accordingly. And it's not that happened overnight. We have been in touch with World Bank on every day basis, and they are kind enough to respond very quickly on these subjects. That's much I can say. And in every time, I told you when I came on Tuesday also, we work on the ethics, we work on the integrity, and we work on the corporate governance. And this company's legacy is like that, and that has been paid off.
That's fair. That's fair. You had come in here and you were very sure that this would be reversed. Now, in terms of actual impact, Mr. Rajoda, since it didn't make a huge impact to your order book then, it doesn't make a huge impact to your order book now. What is the order book outlook?
The So as I told just now also, this we have done not for the order book.
Yeah.
This we have done for the integrity and the respect of the organization.
Yeah.
And that was the prime factor for us.
No, Mr.
So,
Mr. Rajora, sorry. So one, on that, kudos to you that you've been able to work for that. What I think maybe Tamanna was trying to ask and what I was trying to ask earlier was, does this have any impact now on ordering? Because back then you had said that you do not get negatively impacted as well because of this. So
no, it will not have the order book impact on the order book.
Okay.
It will have the impact on the positivity approach.
Right.
And the processes of the organization. Please understand that.
Yes.
And for every organization, these are the main prime pillars.
Sir, I take your point. I'm just trying to make sure that your investors understand exactly how significant this is. So, if I were to ask you that if this sword was hanging on your head and you had to go to the international market and you had to sell your product, this would have been a problem. But now that it's gone away and the reputational risk is gone, this is positive, right? That's the way to look at it, right?
Yes, that's right.
So from that perspective, I think what your investors and our viewers would really benefit from is an outlook, perhaps, considering that this is no longer a problem. Is the export book expected to grow much faster than previously anticipated?
Definitely, the confidence of the foreign customers will enhance and increase in the organization, and we will get benefited for that.
All right, Mr. Rajora, thanks so much for taking the time, and again, congratulations. It's a very sharp and very quick resolution that you have seen. Stock price, by the way, it was revised downwards, that circuit. It was 20%, was revised to 10%, and so therefore that's why the circuit currently stands at 10% upside right now. But having said that, I was looking at the trailing PE, currently stands at 38.6, and the 3-year average is 70 plus.
Yeah.
78 actually.
Yeah, and you know, I mean, this helps the multiple a bit simply because the trailing PE, the forward PE, because of the kind of growth that they are showing, is a lot lower.
Yeah.
It would have been impacted negatively if this would have stayed true. Now that is not happening, so normalcy probably restores. Keep in mind though, Tarrell as a company much more expensive than some of its peers because the growth rates are higher.
No,
so Voltam is much cheaper.
So today, not so much about the valuations and the fundamentals about the company, like Mr. Rajora said, it's about clearing their name.
No, but this would help the multiples for sure.
Yeah. Definitely. What I find astonishing also is that World Bank reversing its position in 3 din mein. So I don't know. I mean, was there a technical error? Was there a Tuesday, right?
Yeah, they got it, I think, on November 4th. They made an application as per what he said was November 9th or November 10th. So technically, from the date of the order, 10 days. From the date of the appeal, 3 days. You are right.
Yeah, I'm talking about the date of the appeal.
And despite the uptick today, they're still down 18.8% for a week.
No, that of course the stock price might move wherever it does. But yeah, that's the transform and rectifier story. So much action this morning. Let's cut across to the Pine Labs listing on your screen right now. Listing on the bourses. So much happening. 3,900 crore issue. Out of this, 1,800 crore odd is the OFS. You see Amrish Rao and family there. Important moment for them as you go along. It's listed at a premium, about 8% up. I mean, this is now another play in the BFSI space in that sense. It's a leading Indian merchant platform and provides point of sale solutions. You would have seen when you go and swipe or tap your card or whatever, you have those machines, and those are all Pine Lab machines. So that's what they do. They provide those solutions of processing and merchant financing as well. So they make POS, point of sale devices, buy now, pay later funding as well. And in that space, I would say peer to Paytm, maybe to some extent.
But didn't they cut their valuation before the IPO?
It seems to have helped them.
It helps?
7.5%, 8% up. Maybe learning from others' mistakes, and that's no harm at all.
In fact, it's much positive. Yeah, but just that, just the tap of the card, almost every machine that you see is a Pine Labs machine. So in some sense, there was stranglehold on that market.
On that particular market, yes. So Pine Labs, decent debut there, and we'll wait to hear from the management, Amrish Rao and team as well. Very short break, but all the action continues. This is an action-packed day right here at India Market Open. On the other side, we're breaking down Bihar elections. We're getting you the market view. We're getting you the political view. We're getting you all of the analysis. Don't miss our special programming when we return from the break.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
जीप से लेकर शिप तक आत्मनिर्भर भारत, आत्मविश्वास से भरा हुआ भारत है.
At the NDTV World Summit, Prime Minister Modi presented a vision of self-reliant India, in which Uttar Pradesh is playing a major role. There was a time when Uttar Pradesh was counted among the Bimaru states, but under the leadership of Chief Minister Yogi Adityanath, the state has now become the growth engine of India's economy.
आने वाले समय में जो स्पीड है उत्तर प्रदेश की, ये बताती है उत्तर प्रदेश को नंबर 1 पर आने पे कोई रोक नहीं सकता है.
In the past 8 years, the double-engine government has carried out such works in Uttar Pradesh that 6 crore people have been lifted out of poverty, and the per capita income has increased by more than 2.5 times.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian.
Astonishing results coming in from Bihar. The battleground of Bihar has been demolished, won, done and dusted. It's quick, fast and furious. Just telling you about how clear-minded and clear-eyed the Bihari voter is. She's very, very sure what she wants, who she wants to vote for, and has been empowered. Now the world can say, oh, freebies.
Because this is
I love
true.
that.
This is the
I
women's
love
vote.
what, no, I love how you are addressing that. That she's clear-minded, she's doing this, because that's what's happened. Very well done.
It is her victory.
It is her victory. It is her victory, and it is showing that you look at women voters beyond just a constituency and make their lives better. Then they come out and vote. So much to pick from takeaways of this election. First, the numbers: 243 out of 243 leads out. NDA has not just won; it has smashed this election. Mahagathbandhan has been reduced to 77 seats. As far as the leads are concerned at this point. So a big drop over there. We'll have to see what his Jan Swaraj actually opened at, but nothing really much in terms of having an impact. It's all about Nitish Kumar today, isn't it? And that alliance making it through. You will have, of course, some boost to what this means for the central government. You're seeing it in the markets as well. So what are we bringing you today? We're bringing you Bihar election results with a market perspective, which is relevant for all of our viewers here at NDTV Profit. Pankaj Murarka, CIO, Renaissance Investment Managers with us. We're joined by Surjit Bhalla, economist, author and columnist. Welcome to both of you, and thank you so much for speaking with us. Surjit, I'm going to start with you and your take of what's worked. We talked about a note this morning from Christopher Wood, Jefferies, and in his Greed and Fear column, he has raised concerns about the freebie culture which was seen in the Bihar elections. Now, some will say that that is what has won the NDA, the elections, the largesse which has been offered to women voters, etc. How do you see it as economic impact?
I think, coming first to the freebie and the 10,000 rupees, I think had zero effect on the election. And I've said that before the election. So we need to ask, why was it introduced? And why was it done? And I think I would agree with Christopher Wood. This is a terrible sign. It comes with Prime Minister Modi has gone out of his way condemning the freebie culture. And here is his ally, which I would presume is also him, endorsing this. So, and particularly since it was not needed, if you look at the record of the NDA, and in particular the Nitish Kumar's record, JDU, you find from the last 20 years that he's performed rather well. Not in growth terms as much, but even in growth terms, it's still at the bottom. But what is revealing is that the opposition, there was no opposition, there is no opposition. And the figures show this. Mahagathbandhan at 77. This is a 2-1 victory, 2/3 majority for the NDA. And I'm willing to argue, debate with anybody whether the freebie was needed. There was nothing. So therefore, we need to ask that question as to why was a freebie given? Is it so lax that you can just about do anything the government wants when the opposition is very weak? So that's my question.
And it's a fair question to ask. I guess this debate, Surjit Bhalla, will go on for the rest of today as to what really was the clincher, because at this point, as I'm looking at the screen, the share or the leads for JDU, as things stand right now, at 75, 43 was what they had at the same time in 2020. So they've got a higher share by as much as 32 seats. Similarly, BJP is more or less where it was at this time in 2020. So it's retained its share. I want to come to you, Pankaj, on, of course, we're speaking on the day of the Bihar election results. How much attention do you give to state elections? And purely from a sentimental standpoint, because this indicates stability politically, even in state elections, what do you take from the lens of the market?
Well, from I think market's perspective, clearly markets are not concerned about it. as it is, the prognosis that came before elections, it seemed like it's going to be a foregone conclusion that India will come back. And I'm just saying, just in case had they had a narrow victory or a reversal, I don't think so. The market would have been too concerned because the central government is pretty much comfortable in terms of the majority, and they're still just about year and a half into their tenure. So I think it does not impact as much from a market perspective. What markets are really looking forward to once we have political stability at the central government level is more about a growth outlook, global issues around tariff headwinds, and which all has a trickle-down impact in terms of corporate earnings growth and investment cycles. And probably I think the bigger thing market would look forward to is probably the upcoming budget, because this year has been a year where we've seen it started on a note where the economy had slowed down considerably, and we have seen both the central government and RBI pitching in terms of fiscal and monetary stimulus that has been infused into the economy. So what kind of growth recovery we have from the lows that we've seen, what kind of cyclical recovery that economy faces, and what does that mean for earnings growth going into the next year? I think those are matters of consideration or data points that matter to the markets.
I'm sure Surjit Bhalla has a strong view on this, but Pankaj, I want to come to you. Do you believe, first on this, do you believe that this could result in a perilous situation for state finances over the course of the next couple of years as more states go to fight and this becomes more a norm rather than an exception?
Well, Surjit will have more comment on it from an economist lens, from a markets lens. I think that's become the template. We have seen that, right? From state after state, that's been a template that's been followed. Maharashtra followed the same template, and it's somehow helping them get back to office when elections. So India's state fiscal finances, as it is, if we see over a period of time, have, states have run fairly high fiscal deficits. Governments, few times have trying to push states or nudge states to get into fiscal consolidation by escrow mechanisms, by holding back their grants and stuff like that through escrow, through RBI and all of that. Aggregate India's fiscal deficit, central and state taken together, is reasonable, I would say, though I think states still have some tightening to do, but I don't see that happening in the near term.
So, Mr. Bhalla, I'll take this same thing to you, right? I mean, there are some states where the state finances are okay, some where there are not. Could this lead to a perilous situation at some point of time in the next couple of years? Or do you reckon that states will strike a balance between giving out freebies to, win elections versus managing what could be a reasonably respectable fiscal situation?
Look, it depends on how the center handles it. The states legally are not allowed, or in practice are not allowed to go much beyond 3%. And I think it has to do with the macro choices. I would say I'm not that pessimistic that this situation will get out of hand, for the simple reason that I think there are various macro controls that are in possession of the government. For example, interest rates are way, way too high. We are running a real interest rate of something close to 5. So let's not take the latest one. Let's make it 4. Let's not take that. Let's make it 3. I mean, a 3% real interest rate is abominable and way above what most other countries, indeed, I don't know, I'm working on this, no other country has this high a real policy rate. So I think I'm hoping that sense will prevail, interest rates will come down, the economy will grow, and that will take care of the deficit not going out of hand.
Okay, in view of how the markets were looking at Bihar, Mr. Bhalla, I'm actually going to come to you on this point. The markets had decided after the exit polls and seeing what the polls were showing that this is a foregone conclusion. The reverse would have been a bit of a concern with a question mark on the alliance at the center. Now that's clearly out of the picture. Is there then positive momentum that comes in terms of how the central government sees further stability and how markets would be viewing it? Just wanted your thoughts on that.
So look, the big issue for the government and for our economic growth and for policy is what happens on the trade deal. That has been continuously postponed. And I think that will be the clincher one way or the other in terms of where India proceeds. For example, if you will, if we don't have a significant trade deal, I'm not talking about naam ke vaste trade deal, but a significant trade deal with the US, then I'm afraid we are looking at best, a real GDP growth rate of somewhere around 6.5%. And that is clearly way off the charts for what is needed for Viksit Bharat. So I think the fiscal deficit issue that we're talking about is really secondary. The primary issue, in my view, is where does India's growth rate go? And do we proceed towards Viksit Bharat, or are we staying in the doldrums of 6.5% GDP growth rate for the last 35 years? So let me repeat, I don't place that much emphasis on the fiscal deficit. I think the handouts or the freebies were absolutely unnecessary. And I think the government should try and explain as to why it was done. And last but not the least is the trade deal stupid, as Bill Clinton would say. So let's wait and see. I hope the trade deal happens and that it is a significant trade deal. That will change the map. That will change any discussion about markets, any discussion about stocks. If not, we'll continue rolling along as we have.
Rolling and inching along. I think one positive imperative has also been that the corporate performance in the second quarter has been much better than expected. Welcoming on board this conversation, Kanchan Gupta, Senior Advisor, Ministry of Information and Broadcasting. Mr. Gupta, great to have you on NDTV Profit. We're talking about Bihar and Bazaar this morning as we look at the impact on markets, sharp recovery from the lows of the day as the mandate becomes clear. How do you see this mandate? How would you look at it at this point? It's more than just a pro-incumbency vote, isn't it? Is it women voters responding to the 10,000 rupee payout? Is it a thank you Nitish Kumar vote? How do you look at it?
I think let us not overestimate this 10,000 rupee thing, that just because 10,000 rupees were given to some women voters as part of the social welfare measures has resulted in this kind of a result. Now, these are early times. The numbers will change, but more or less what we have before us is a very resounding endorsement of the BJP-JDU alliance in Bihar. Now, this could also be projected at the national level as sort of a public endorsement of the government and its policies, and the fact that people are still positive about the third NDA government. Number two, I think the amount of economic activity which we are now likely to see in Bihar, because certain commitments have been made, and frankly, they have to now start delivering, because the alliance, for the alliance to stay afloat and to carry forward the mandate, that delivery has to happen. Some amount of work has already been done. There is bound to be greater work, especially on the infrastructure front and setting up industry in Bihar. Three, when all that is added together, you get you have a national impact on the economy, and as Surjit Bhallaji was saying, that if your rate of growth goes up and you are then seen to be moving towards what the Prime Minister calls Vikasit Bharat, and that plus the positive sentiment generated by the Bihar election, I think the markets should be reacting positively to the outcome, and the coming days are also going to be on the same lines.
On that note, Kanchan, let me ask the market man here, Pankaj, what he thinks about this, because ultimately, Pankaj, if we're talking about spending by some of these governments and that capex cycle on the government side kicking in, what according to you would be the implications, and do you anticipate that that will happen? Because to a certain extent it hasn't been as high as it has been in previous years.
Well, from a market's perspective, my simple view is that one, this election outcome was a foregone conclusion because market was clearly expecting that. From a market is more, many markets, as I said, is more interested or looking forward to in terms of the cyclical recovery that can be anticipated in the economy. And while I'm very happy with what Mr. Surjit Balla said, because this is the first time I'm hearing from someone in Delhi who's really thinking that 6.5% growth is not good enough for India. While it might still place India amongst the fastest growing major 20 economies, but it does not get India where it wants to be. So someone sitting in Delhi calling that out, I'm pretty pleased to hear that. But having said that, because apart from looking at top-down macro data, because we look at companies from a bottom-up perspective across sectors, and we look at over 500 companies, and we understand their business plans over the next 3 to 5 years. My inference or assumption is that we don't see a significant material. One, private capex has been insipid all through post-COVID, and I don't see that materially changing from where it is, kind of a thing. So this is going to be a fairly lackluster investment cycle from the private sector. I think the government capex is at its peak given government finances. We've seen a very sharp increase in government allocation towards capital expenditure from where we were pre-COVID at about 1.5% of GDP to about 3.5%. But I think I don't see that number increasing further from here on. So I think the aggregate growth in central government investments will be in line with nominal GDP growth at about 8 to 10%. So I think probably this is my inference that the Indian economy has had a downward reset. 3 years out of COVID, FY21 to 24, the economy grew at 8.4%. It's now we are in the second year where the economy is growing at 6.5%. And to me, that's the new normal for the Indian economy, at least from a medium-term perspective over the next 2 to 3 years. Even if we get one of the best trade deals from US, it takes a while for trade deal to translate into trade and to have a trickle-down impact on growth in the economy and so on and so forth. I don't see that will change. While that will help sentiments and we badly need it, but I don't see that will change our growth over the next 4 to 6 quarters. So I think in the medium term, we are probably poised for a 6.5% economy. And as again, Surjit highlighted, I think that's been our Hindu growth rate for the last 35 years.
Yeah.
So
No, entirely. I think, we are also showing on our screen listed companies that have an exposure to Bihar. We need to start hearing about Bihar in a different context now, and not just about, the poverty lines, and we need to see some growth there. So Kanchan Gupta, on that note, before we close this conversation and we're talking about Bihar and Bazaar has already baked in Bihar and has moved on to other concerns right now because it works in a forward-looking way. But having said that, what do you think we should look out for as a change? Because a pro-incumbency vote also comes with higher expectations. I mean, that's a fact. This is faith that has been redoubled and expectations have also gone up.
Well, what this result reiterates is that the popular trust still rests with the BJP-JDU combination in Bihar. And you are right, that will automatically generate greater expectations. And it is a challenge, or it will be a challenge for the government to deliver on those expectations. But, to say that we cannot go beyond what has already been done on the capex front, I think that is not entirely correct, because if the government wishes to, the government can continue to spend or spend more on capital expenditure, essentially on infrastructure development, and for Bihar that is important. And lastly, I would like to say this, that there is always this apprehension about political change and what it will mean for the future, whether there will be turbulence, whether there will be social turbulence, political turbulence, cultural turbulence, and that keeps investors away. But here we are assuring a continued political stability, a continued predictability of policy, and that these two things together should bring around investors.
Yep.
And convince them, as the Prime Minister would say, yahi samay hai, sahi samay hai.
So investors also come when there is an atmosphere which helps industry grow, enough labor available, and not just subsidized lands. So a lot will need to be done on that end, and I'm sure that will definitely be on the agenda. But Sujit Bhalla, Kanchan Gupta and Pankaj Murarka, thank you so much for joining us on this special edition where we talk about Bihar and Bazaar. As we wrap this conversation up, just talking about where the leads are at this point, and it's astonishing. If you really look at the breakdown of these results, this is Nitish Kumar all the way. If I look at just the JDU breakdown, out of that 162 for the NDA, you have 75 for the Janata Dal United, which is an increase of 32 seats. This is Nitish Kumar pulling this on his back. I mean, if you look at it in a nifty parlance, he's the heavyweight in this index right now. The BJP at 74 seats, of course, huge, but down 4 from last time. The LJP has come in also in a big way, up 11 seats. So big changes there within that whole breakup of the NDA, which have pulled forth the BJP and JDU neck to neck as alliance partners. Nevertheless, they're so far ahead of the halfway mark that there's no question over here. Who has really lost out? It is the RJD, which has been the big loser for Tejasvi Yadav. This will be a concern. 15 seats down from last time. Congress has lost 4 seats as well. So that is where the pain point has been. Prashant Kishore's new party, Jan Swaraj, has 2 seats at this point. So that's the election roundup. The market roundup very quickly before we wrap, then where markets are. Markets are flat. Markets are flat. They have other fish to fry. Not so much Bihar elections, about 90 points down, but it's 0.35% down right now.
Tech is under a problem though. Nifty IT is down about 1.3%.
And that's global led.
That is completely global led.
And profit taking also, because you've seen a sharp run up.
5% in the last 5 days.
If there is an AI bubble, then IT stocks in India should be up, because wasn't the problem that we skipped the AI mode?
But the first port of call will be that if Nasdaq goes down, everything else goes down along with it. Then the resurface of IT will be faster. But right now, because of the Nasdaq pullback and the global markets being so bad, IT has a problem.
And a good reason for people to take money off the table after 5% gain, as you pointed out.
Yeah. So a lot happening this morning. We're continuing our coverage right here on NDTV Profit, but for now, from the team at this table and the team behind the scenes, thank you so much for watching.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizens.
Hello and welcome. You're watching Ask Profit right here on NDTV Profit. My name is Puneet Zaveri, and over the next hour or so, we'll try and solve all the stock related queries that you might have. So do start sending them on the number that is flashing in a while. But first, the key big talking point for today has to be the Bihar election. The numbers we have been showcasing from the morning is coming at a very, very interesting juncture. And to talk more about some of the key takeaways, as well as a lot more, I'm now being joined by Nisha to take us forward with some coverage on the Bihar elections before we get to all the stock queries. Nisha, over to you.
Thanks for that, Puneet. Yes, it's a very exciting day, not just for the markets, which is keeping a keen eye on Bihar elections. And remember, the euphoria in the market really came after the exit poll suggested a clear majority for NDA. The numbers are really trickling in since the morning, and by now, pretty much the leads are getting sorted. Of course, these are not the definitive numbers, but it gives an indication. So let's look at the Maha elections of Bihar. NDA at this particular point fight for 243 seats between NDA and Mahagathbandhan. NDA right now leading with 173 at the moment. Mahagathbandhan with 66, and others comprise of only 4. Taking a look at the two big alliance partners. Now, NDA 174 has BJP with 76 and JDU with 75. This is the biggest headline currently because the kind of lead NDA has got, it is looking clear that NDA wins this election. But now the bigger question is Nitish Kumar going to be the clear winner and the chief minister of Bihar after the NDA victory? And with BJP as well as JDU almost neck and neck, BJP is not looking like that it's going to be the single largest party, at least at this time, because JDU has also worked very clearly and is gaining momentum. When we look at the Mahagathbandhan, RJD is showing a poor showing with not 50 seats also captured at the moment when we talk about leads, but a knot needs to be unraveled when the final results really start trickling in. So the big news right now, saffron wave, as you can see when we talk about the vote share in the state of Bihar as part of the first 3 hours of the leads that we have seen. 72% with NDA, Mahagathbandhan with 26%, and others making little difference of less than 2% of the vote share coming in. So the biggest takeaways at this particular point, BJP as well as JDU neck and neck and emerging as the single largest party. Remember, this is a defining factor on Nitish Kumar being the clear winner as the Chief Minister of Bihar, and the pro-incumbency factor really looks like is working for Nitish Kumar. Let's take a look at the other important aspects here. So the women and pensioner largesse, which was doled out by Nitish Kumar's government just before the elections, looks like has weighed over the caste politics, because in caste politics there was a clear segregation of who votes for whom, like the Yadavs, the Paswans, the Muslims and the others. Now, highest voter turnout. This time, remember, Bihar has really broken all records in the highest voter turnout, with a lot of migrants coming back for Chhath Puja and also casting their vote. Also, they were under the worry that they would be taken off rolls if they really don't cast their vote. So this has worked for the NDA, while Tejashwi had earlier said that this could work in his favor. RJD's Tejashwi Yadav's employment push, that has really failed to make much of a difference. That was his one big agenda, because the women casting votes and higher number of votes have probably shifted the thing towards NDA. Prashant Kishore's Jan Suraj did not make much of a difference. It was told by the political analysts and critics that he will not make much of an impact, but it's a good sign that an urban, uber class, educated Bihar politics is probably taking shape, maybe for future. So these are the important key takeaways, but the numbers are neck and neck between JDU as well as BJP. NDA looks like a clear lead at this particular point in the Maha Bharat of Bihar.
Well, thanks so much for that, Nisha. So it's definitely a saffron wave that you're seeing currently. We'll keep getting you the key updates. As of now, seems to be the key number that we're pointing out, 176 for the NDA out of 243 in Bihar. But IRCTC posted a steady Q2 performance, though the numbers came in slightly below the expectations, remains broadly based with the internet ticketing continuing to lead the growth. My colleague, we've actually spoken to Sanjay Kumar Jain. He is the CMD at IRCTC, and let me take in the first question with him. Mr. Jain, a very good morning to you. Thanks so much for joining in today. The revenue did miss the estimates that we were working with as well. What led to a softer top line in this quarter despite being a festive quarter?
There is no softer. Basically, this quarter was not soft. It was stable and profitable. And all my segment has grew. You see, tourism has shown growth of 21%, catering by 8%. Even IT, because last year, see, the same period, the booking was open, ARP was open for 120 days. Now it has been reduced to 60 days. So winter season, this booking, we could not get in this quarter compared to the last year. So there also we have shown a growth of 4%. Our non-conventional revenue also grew by 13%. And there was 4% growth in Rail Neer, despite being a bad quarter so far as Rail Neer and catering is concerned.
Got the view, Mr. Jain, but also in terms of the ticketing margins, they've continued to remain strong for you in this particular quarter. Do you see that trend largely being sustainable going into Q3 as well as Q4?
See, our ticketing earning contains two parts. One is convenience fee and the other one is non-convenience fee. So, of course, last quarter, you people asked us the question that it is already 81%, where will you go? This year, it is 85%. thanks to our our focus on non-conventional revenue. We'll certainly try to improve our non-conventional revenue on ticketing part.
We leave it at that. Thanks so much for joining in, Mr. Jain, giving us perspective for what worked for IRCTC as well. But viewers, there's also another stock that you need to have your focus on, is something like a Muthoot Finance. Now, reported a strong Q2 earnings with a sharp growth in its AUMs as well, higher yields, and a big jump in profit, to say the least. Stocks flying in trade almost 9%. Now, that's led by the gold loan momentum as well. Our colleague Vishwanath got a chance to speak with George Alexander Muthoot. He's the managing director of the company. Let's listen into what he had to say.
Have you had customers who are existing customers and would have borrowed more from you during the quarter against the security that they hold, because obviously the value of that security has gone up?
Yeah, because there are some people who feel that they need more money, and when they feel that according to the present loan to value, they are eligible for more, they come and take more. But not a very few percentage only does that, because just because the price of gold has gone up, they need not take the money. They'll take the money if they really need it. If they need it, they'll take. If they don't need it, they don't take. So if you look at our loan to value today, at today's price, our loan to value is less than 60%. That means people have not borrowed to the hilt. People have borrowed only 60% of what is eligible to them. 75% is the RBI stipulated LTV. They have taken only 60% or less than 60%. That means, although the price is high, not that everybody has used up the full, headrooms.
Understood. You've also revised sharply your loan growth expectations for the financial year, AUM growth expectations, 30 to 35% compared to what was originally estimated about 15-20%. And I just wanted to get some sense from you about the reasons for this confidence that there's going to be so much more loan growth.
Last year, our growth was, last year also, we had earlier said the growth would be 15%, maybe a very small growth percentage, but we performed 38 to 39% last year. This year, in the last 6 months, we have already crossed 21%. So again, saying 15% would look very, very childish. So I think, and that is for the half year. Even now, the business is doing well. We see good growth coming in the next half year also. That is why we thought we should revise it to 30 to 35% at least. Yeah.
Your NIM has expanded, net interest margin has expanded about 50 basis points on a sequential basis, 12.66%. That's where it's at right now. Do you expect this to be maintained at this level going ahead, or are you expecting that maybe things will normalize? Because this quarter was also helped by some 300 crores worth of recoveries that you saw.
Yeah, I think that is one-off only. Probably the NIM should be maybe what is 11 point something should be about 10.5 should be the NIM. So that is what we should be getting it going forward. The bump which we saw this time was because of some of the old loans, the old NPA loans, which people had taken back or renewed, etc. The interest on that has come in. And the new NPAs which have come in their place are with much lesser interest. So that is why we see a big bump there. Normally, it should be about 50 basis points less than what we have this month.
Understood. Quick word on the borrowing cost side as well, because obviously you're seeing a lower interest rate cycle out there in the economy. MCLR cuts are still playing out in the system, even though the benchmark may have come down. What, to your mind, do you think that maybe the costs are going to also rationalize going ahead for this year?
Probably in the next 1 or 2 quarters, we should see about a 30 basis points dip in the borrowing costs. Our borrowing mainly comes from banks, and banks, it is linked to the 1-year MCLR. 1-year MCLR is just gradually coming down. So probably another 20-30 basis points, bips, can come down in the next 2-3 quarters. But after that, I think it should bottom out.
Okay, I've got 2 more questions, sir. The first question is with respect to your microfinance operations. There we've seen loan growth come down. We've seen that loss still there. However, the system seems to believe that things have peaked on the microfinance front. What is your outlook looking like?
Yeah, on the microfinance sector, I think all microfinance companies are on a rationalization mode. And of course, Muthoot is also, Wellstar is also doing the same thing. We are on a rationalization mode. And this quarter, we see only about 1% or 2%, almost flat. The growth is flat. So we are consolidating the portfolio. So I think in the next 2 quarters also, the consolidation should be happening. Thereafter, after 2 quarters, we should see gradual pickup in the microfinance sector. Gradual pickup. For the next 2 quarters, it will be flat.
Well, that was the management of Muthoot Group as well, and a stock that's done very well in a quarter where you saw the gold prices also actually inch up quite a bit. But let's quickly look at how the markets are doing, because we have seen while the Bihar elections has been one of the key talking points, the Nifty has largely remained subdued throughout the day, and we are almost recovering slightly from the day's low. In terms of the advanced decline ratio also, that'll give you some perspective as well. Before we move on, look at some individual stocks, because it's a day of individual stock movers and not so much of the index. You've seen the declines take a steady growth from the day's low, and now comfortably over 1,400 stocks that's declining in the trade. The BSE 500 also, the other one, very quickly if you can pull up, because individual names on the back of earnings and news flow are reacting today. Muthoot Finance, we spoke about, is buzzing in trade today. Something like a Jubilant Foodworks, post the change in management, has done very well for its investors in this quarter. Almost a 9% like-for-like growth is what they've reported. Stocks up 7.5%. Something like a Bharat Dynamics also reacting to earnings, as well as Ather Industries on the positive sides. While Sonata Software, the management also held a conference call this morning. There is uncertainty today in the IT space, and that's visible in this particular stock. Let's quickly pull up something like a PG Electroplast as well, where you did see that management has not cut guidance, and that's been taken well by the street. And they've also reported no losses in this quarter, which was expected given the results that we've seen of something like an EPAC, something like an Amber. Spandana Spurti and LG Electronics are the other couple of ones which are buzzing in trade today as well. LG, of course, reported results. Spandana almost up 8.6%, and we're seeing a spurt just over the last half an hour or so. And LG reported a weak set of numbers, largely led by the AC division of the company as well. But before we look at and move to the queries, let's take a quick check on and look essentially. Let's get in Sharad actually to get us some perspective on the derivative space. Sharad.
Puneet, a lot of, you could say, volatility in the market, and of course, we are seeing Bihar elections results expected to come out with a slight bump up, expecting the NDA majority to come in. It's even Stevens in the market right now, so we will be having a volatility across the segment today. And overall, if you look at the contracts also playing out, there is, you could say, positions are trading light, and today is Friday itself, and global cues have also told negative, so it's advisable to have lower positions in the market right now until we get clarity on Monday or Tuesday. Interestingly, let's look at the contracts where the action is happening, and it's even Stevens. It's distributed equally between calls and puts when it comes to the overall market setup for Sensex, and even the same thing goes for BankX also. Over here, volatility we are seeing. If you could just pull out the important constituents for the BankX and see how the numbers have been following apart. IDFC first on the green, but not much happening, and of course, the chart weakness was there for the last 2 trading sessions. Today and tomorrow, yesterday's session when after 2 o'clock when we saw a correction taking place. Also, we can see the congestion here equally distributed, but slight towards the call side. The build-up is happening, especially SBI is pulling this up, and we can see the active call and put options for this segment. But let's see whether the key longs developing, and the first one, long developing, there is no guessings, that is Muthoot Finance. Have strong fresh longs coming from there, and Jubilant Foodworks on earnings as well. Let's pull up the short covering stocks. These two make it to the list: Bharat Dynamics and Vodafone Idea. Interestingly, it's near that 11 mark. That's the FPO mark which I'm talking about. That's pretty interesting. Also, after short covering, let's look at the long unwinding. Very few names. Petronet, LNG, Prestige make it to the list, and at last the short build up. Let's pull up those 2 important stocks, which is very important for a trader to track. Astral and Emphasis, that's where the moves is happening. And Astral, the selling is deepening as well. So these are the important stocks in the FNO market. They are buzzing in space.
All right, Sharad, thank you so much for bringing us those details with the derivative space. But let's take a quick look as to how the markets are doing at this moment. And you have the Nifty 50 down by about 0.4% odd, and that dip has come in Not at its day's low point, slight recovery from there, but still trading around 0.4% lower. You have your bank nifty also, which is down by about 0.2%. The broader markets also are, the mid cap 150 is down by about 0.1%. The small cap 250 is largely flat as we speak. Let's try to pull up the Nifty 50 heat map and see as to how, the chart is looking like right now. You have your Asian Paints seeing gains of about 1% today as well. Adani Enterprises is also up 1%. Trent is seeing gains of about 1%. You have DRL plus Axis Bank that are gaining about 0.7%, and Geo Finance also up 1.2%. But IT names under pressure, of course, on the back of the global markets being under pressure. You have Infosys down by about 2.5%. Tata Steel, Eicher Motors, ONGC, JSW Steel, HDFC Life, as well as Wipro and Tech Mahindra, as well as Tata Motors, all down by about 1% each. So 3/4 of that map is in the red. So that's with regards to where the Nifty heat map is concerned. Let's try to pull up the sectoral heat map as well to see as to how sectors are doing right now. Can we get that chart? There you go. India Defence today is in the green, seeing some gains of about 0.7%, and PSU banks also in the green, up by about 0.5%. But Nifty IT, of course, we've seen a rally of around 5% on Nifty IT throughout the week. So today seeing some profit booking. If you try to pull up the constituents of the Nifty IT and see as to what are the counters that are actually seeing pressure. Infosys, of course, leading that pack, down 2.5%. You have Coforge down 1.7%. Something like an Emphasis also down by about 1.6 odd percent. So that's Puneet with regards to where the markets are concerned.
Well, largely, and I just discussed about some of the consumer names as well, and we'll get to all of those and a lot more. But the flashes on the bottom of the screen right now going on for Hero MotoCorp. It's been a good quarter for the company. I think in terms of numbers, it didn't get that much of a reaction because probably a lot of participants waited for the con call, which was at 10:30, and we are getting you some key flashes there that the Vahan market share of the company has expanded by 3.7% to almost 31%. For Hero as well as someone like a Bajaj Auto, that was a concern that the domestic market share had seen consistent fall over the last few quarters. Bulk of the sales are now coming in from the scooter segment as well, and here is where someone like a Hero MotoCorp actually differentiates from Bajaj Auto, that while both of them were absent from this segment, including someone like an Eicher, Hero has taken it on itself to go ahead, launch an electric vehicle scooter, but also in the petrol and diesel segment as well. And here, that has a strategy that has worked for the company. They've also maintained 14 to 16% margin guidance. There's no change in that as of now, but even able to maintain these margins is a key positive for all shareholders of Hero MotoCorp, and we'll continue to get all of those flashes and a lot more, because the two-wheeler growth is what they're expecting in terms of the industry is expected to be roughly around 8 to 10%. But that's largely on Hero MotoCorp, and we'll come back and get you a lot more on that. But one of the key stocks that listed on the exchanges today is Pine Labs. It has a decent listing today, and to talk to the management, let me go across to my colleague Vishwanath, who has the management with him, to get a lot more perspective of the company post-listing. Vishy, over to you.
Listing that you're seeing, you're becoming a little rare to see a nice listing pop out there.
Thank you very much. Thank you for getting me on your show. Look, it's a special day for us. We do a lot of work in the fintech space, and we are very focused on what we are doing in infrastructure building. This is all extremely new for us.
I just wanted to ask you about the fact that once now that you're listed, right? Like now you're going to enter this entire space of going out, describing the results to the public. You're going to be talking to analysts on a quarterly basis. How are you looking forward to all of this?
So, one of the things what I did was I did send out a statement in terms of how we are going to be operating and how we're going to move forward. The reality of it is we will continue to invest heavily in terms of products, platforms, and infrastructure building both in India and globally. Having said that, I think we are very clear that there's a need that as you go out into public markets, financials becomes extremely important. And you would have seen over the last 3 years, we've been able to show a consistent revenue increase, revenue growth of almost about 20. And we've been able to increase our EBITDA from low single digits to getting close to about 20% as we speak now.
Since I know you've got a very short time span available with us right now, but a quick two questions. The first one is, I read a question that somebody asked out there. Can Pine Labs be a growth lever company, or is it an essential financial utilities company? How would you describe it?
Clearly, we see ourselves in a sector where tomorrow will be better than today and today will be better than yesterday. What I mean by that is digital payment transactions will only continue to grow, not just international, not just in India, but also in all the various global markets. And hence we are in a sector where growth is almost quote unquote guaranteed. So we obviously want to capture the growth and at the same time drive operational efficiencies in our business.
Lastly, Amrish, when we were talking right before the IPO, you had said that your father-in-law pointed out that the bhav must che. That's the point that he had said. I'm guessing that he's being proven right now, looking at the way the stock is trading. But is this something that you lose sleep over at all? The value of the company on the exchanges?
See, look, going forward from here, our responsibility is to be completely focused on, delivering to our financials and our financials goal. Now, at the time of the IPO, what we wanted to do, we were very clear. Pine Labs has a lot of goodwill in the market, in the startup space. There are a lot of startups, who have a very similar mindset like ours, which is go out in a way where that the entire community can back you. So we did want to get a lot of support as we were going out. Now where we are here and as we get publicly traded, I think our responsibility is to continuously focus on the financials, build great products and drive value for the company.
Well, that's the management of Pine Labs, and it's a stock that's actually seen built up and buying as well, because it's opened at a premium of 10%. We've seen it now inch almost up 22%, something that we saw in something like Grow as well. But viewers, time for a very short break. We will start answering stock queries on the other side. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more
watching Ask Profit here at NDTV Profit. Of course, the first leg of this show was a lot of management conversations that we brought to you, and I hope that added value to your knowledge as well. But now we'll kickstart with your queries, and to answer those queries, we're joined by Sameer Dalal of Natwarlal Sons Stockbrokers joining us now, and with him is Rajesh Palavia, who's the Senior VP Technical and Derivatives Research at Axis Securities, joining us now. Welcome to both of you, and a very good morning to the both of you. I'll take up the first question, which is on LG Electronics. This is from Sivakumar, who's writing us from Bengaluru. He's bought around 26 odd shares at 1140 a piece and wants an outlook from 2 to 3 years. Sameer, I'll come to you on this one. It posted with its Q2 numbers, and of course it's a muted quarter for them. In fact, margins have slid quite significantly, but there was a one-off as well. But overall, from a long-term perspective, do you think this is a good counter to continue to hold? Because valuations were also, in line with where the peers were.
Yeah, absolutely. So, the results were a little disappointing, but if you have a 3-year view, I think the opportunity continues to remain very strong. We've had a bad year if you look at it from the AC segment across the board, because you had an early monsoon and the monsoons went on much longer, and now winter has kind of set in. So, this year the demand for the AC segment has taken a bit of a hit, because of which you're seeing across the board companies that are in that space, including LG, taking kind of slowdown in growth. But I think all of this will normalize going forward. They are a strong brand. Their sales will increase. We think the consumer discretionary spend over the next couple of years is constantly going to keep increasing because of all the tax benefits, GST benefits, all that has been given by the government. So continue to hold on to it. Yes, valuations a little bit on the higher side than what we'd like. But that doesn't mean that from a 3-year perspective you won't make money. You will. If it comes closer to about 1300, I would recommend one to add on to it.
And that's Sameer's view on something like an LG Electronics, a key listing, disappointing sort of Q1 numbers. But viewers, both numbers, WhatsApp as well as the number that you can call us on, flashing on the bottom of your screen. So do send us your queries as well. The first call that we're getting is actually from Hyderabad. Dhiraj is dialing in for a stock query. Dhiraj, very good morning to you and welcome to Ask Profit. What's your query?
Sir, my query is regarding Prestige Estates, sir.
Okay.
I am holding 100 shares at 1738, sir.
Uh-huh.
So I purchased this because the stock performed very well in the recent results it posted. And there is a brokerage upgrade to buy, and the target is around 2,100.
That's right.
So can I hold it for the next 2 to 3 months, sir? And what sort of targets could I expect? And what should be the stop loss, sir?
Got it, Dhiraj. Rajesh, let me come to you, and very good morning and welcome to Ask Profit. Prestige Estates, any view that you have, Rajesh, and what are some of the key stop losses and the levels to watch out for on the upside?
So if I describe on the technical front, yes, you may remain invested in this counter as stock is poised to giving a breakout of long consolidation. On a weekly chart, the immediate hurdle is placed at around 1740, 1750 zone. So any breakout above 1750 may attract more buying action, and then possibly really can extend towards 1850, even 1900 zone also. We do have coverage on this stock on a fundamental side also, and our target post this earning is around 2000 for the long-term perspective also. So yes, you can hold on. And now if you want to follow some stop loss for short-term bet, so your stop loss should be placed at around 1670.
Okay, all right. So that's the view with regards to where Prestige Estates is concerned. The next one is on Fusion Finance. Astha from Delhi is asking this question. She's got 500 odd shares at the levels of 193. Wants to know a short-term view on this particular counter. Rajesh, what's the view like on the charts?
So structure is weak. Stock is making a series of low top, lower bottom formation, though there was some recovery from the lower level. But still, if I analyze on the near term, short term structure, stock is trading below to all its near term, short term moving averages. So try to exit if you get opportunity in the pullback towards 188 or 195 zone. Until the stock not able to cross the level of 215, trend is likely to exhibit on the bearish side only. Though you have already bought the stock, so now 168 needs to watch closely and follow that stop loss also.
All right, so that's with regards to where Fusion Finance is concerned. We've got our next caller. Snigdha is calling us from Hyderabad. Snigdha, hi, a very good morning to you. How can we help you today?
Hi, good morning, everyone. So my query is regarding transfer rating.
Okay.
So I have 350 shares at 658 rupees. So as it posted good results, should I keep on holding or should should I exit and move into any other one? So I would like to hold it for next 2 months.
Next 2 months.
I also want to know what would be the stop loss.
Okay, all right, Snigdha, got your question. Then I'll take this up with Rajesh, since this is just for 2 months. Rajesh, she's sitting on a loss of around 2,800 rupees. Wants to know if she can continue to hold for the next 2 months or shift to some other counter. What's the view like?
So still, stock is in weak zone only. Stock tried to, show some pullback action, but again, witnessing the supply pressure at around 680, 690 zone, which is the stiff resistance for the stock for the any kind of pullback on the near term. So until the stock not crosses above 690, stock may remain in the weaker zone only. Looking at the stop loss now, 625 needs to keep as a stop loss. If at all stock crosses above 690, then pullback can extend towards 700 to 750 zone. That's the little 2 to 3 month kind of view. But 690 needs to cross. Then only we may expect these kind of up move. Again, try to exit if it reaches to around 720, 750 range.
That's Rajesh's view on something to translate. It's been a stock that we've gotten a query almost on a daily basis this week since there was a 10% correction, but definitely that's Rajesh. That's the technical view on that one. We have another query coming in on WhatsApp. This is on Equitas Small Finance Bank. G. Shrikant from Tamil Nadu is asking this question. He's bought it at 94.6, 13,500 shares. Stocks currently trading at over 58 to 59 rupees. So he is on a considerable loss as of now. Asking if he should average down or sell it right now. Samir, let me come to you very quickly on this one. Any quick view that you have on Equitas Small Finance Bank?
Yeah, so the microfinance industry had been going through a very tough patch, and obviously because of that, the profitability of the company got affected, given that's a large share of its overall business. But I think, a lot of the pain that is there in the system is now out. I think what you will see is a rebound happening in the earnings, even for an Equitas Small Finance. It's trading at about 1.2 times book, if I'm not mistaken. Look, for me, if I'm looking at investing in a bank, why would I do it in an Equitas or any, a smaller sized bank where capital can become an issue? There are some banks that have raised decent amount of capital, or the larger sized banks that are trading at a discount. So for me, not that Equitas is a sell, but I, as a person, would probably sell out and buy either IndusInd Bank or IDFC First Bank, where I'm way more positive. But Equitas by itself also has gone through all the pain, and I don't think there's more downside. It could go up. The question just remains is he wanting to stay in a bank which is working on the microfinance space, which is a problem point, versus something which does across the board business.
Okay, all right. So that's with regards to Equitas Small Finance Bank. But a quick answer, Samir, because he's sitting on a loss of around over 4 lakh rupees. What should he do? Because the losses right now that he's sitting at is very high.
For me, like I said, I would book the loss and put it into a bank where I think I have more upside capabilities.
So complete losses, not partial ones. Complete loss, right? Not partial loss.
Yeah, complete. Just book it and find something else.
All right. Okay. So that's the view with regards to where Equitas Small Finance Bank is concerned. We've got our next caller. Swapna is calling us from Nellore. Swapna, hi. A very good morning to you. How can we help you today?
Hi. Very good morning, everyone.
Good morning.
I hold 1,000 shares of Vishal Mega Mart at 146. My view is completely short term. Should I book my losses or should I hold for some time till it reach my level?
Okay, all right. Got your question, Swapna. I'll take this up with Rajesh. Then Rajesh, she's sitting on loss of around 8,000 rupees. What should she do with regards to Vishal Mega Mart?
So since last couple of months, we are witnessing some profit taking in Vishal Mega Mart from the higher level. Though we have seen a very strong rally from the March to August, and now stock is in corrective mode. Looking at the short to medium term structure, stock is almost trading near to its important support area, which is placed at around 130, 132 zone. This is very important and crucial for the counter. If it continues to hold above 132, 130 zone, so I think some pullback action cannot be ruled out. But again, in pullback, stock needs to cross 145 zone. If it all stock crosses 145, then I think we may see gradually stock will regain strength, and then we could see again stock to move back to again all-time high trajectory also. But it may take a little time. So maybe if you have horizon for next 2 to 3 month kind of time frame, then you can hold on. 130 needs to keep as a stop loss. 145 you watch closely. If it crosses, then possible next target would be around 160, 165 on a positional perspective.
Got the view, Rajesh, but we have another caller now dialing in from Dehradun. Ashok has a stock query. Ashok, very good morning to you and welcome to Ask Profit. Morning. What's your query?
My query is about Sai Life Sciences. I bought 300 share at the rate of 870.
Okay.
It went up to 904 something, and now it's come back to 860.
And so is it a long-term view that you want on the stock?
Yeah, I want to know, should I hold it for a period of 1 year or what? What should I do?
Got it, Ashok. Sameer, do you think that Sai Life Sciences could come back to the buying price of Ashok's about 870 and has a positive momentum going forward as well?
Sorry, no coverage on this one. So can you request the technical Rajesh to take
Rajesh, anything on the charts that suggests an up move back to that price of 870?
So overall structure looks on a positive side, though some profit taking is happening at higher level, but still if I analyze on the medium term to long term perspective, still stock is holding the support. So I think till stock is trading above 820 zone, I think trend is likely to exhibit on the bullish side for medium term to long term perspective. So 820 should be stop loss from my side. On the high side, if stocks manages to surpass again 900 mark on a weekly closing basis, then I think yes, there is a possibility that we could see another new all-time high trajectory. Also 980,000 would be the next target, but follow the stop loss of 820 if at 2830 zone, which is important.
Got the view, Rajesh. We have the next query now coming in on something like an Afcons. Now Satyan from Palakkad has actually been holding the stock since its IPO. He's bought it at 426. The company came out with his results as well. Not too much to talk about there, but he's sitting at a loss and he's asking he can hold it for the next 2 years. Asking he should average down right now. Sameer, would you recommend that trade?
So I would recommend him to average right now. The results were disappointing, and the company reduced its guidance in its con call this time around on the top line and the profitability. They are very hopeful of getting a few orders which they won where they L1, and that needs to come through. And once that comes through, I'm sure that for FY27 probably we could see the top line and profitability grow. But till we get some more clarity and till we think that growth is going to come back, because in the infrastructure space, everyone across the board has been winning orders quite comfortably. Their profitability is increasing. Look at L&T. But for some reason, Afcon obviously has not been able to deliver on that. So I would not recommend an average. I think continue to hold on. It's a good company. Wait for some more clarity. Wait for 1 or 2 quarters more to see how the numbers are panning out and where they're giving the guidance for FY27. Based on that, probably 6 months down, you can take a call, but hold on to what you're holding.
Okay. All right. So that's in regards where Afcon's infra is concerned. We've got our next caller. Arvind is calling us from Uttar Pradesh. Arvind, a very good morning to you. कैसे मदद करें आपकी?
गुड मॉर्निंग मैम मेरे पास एनटीपीसी है 351 पे। मैं एक्चुअली मेरे पास 80 शेयर्स है, मैं इसको और ऐड करना चाह रहा हूँ, पर टेक्निकल बेसिस पे तो ये खराब दिख रहा है, कुछ इसके ऐसा नहीं दिख रहा है। पर इसको गोल्डमैन ने भी ऐड किया है और भी ब्रोकरेज ने इसको अगले साल के लिए अच्छा उनको लग रहा है अच्छा मूवमेंट आ सकता है।
ठीक है, तो
ऐसा क्या कंपनी में ऐसा क्या देखते हैं इसको अगर फंडामेंटली बेसिस पे लिया जाए?
ठीक है, ओके, समझ गई आपके क्वेश्चन को। मैं ये समीर से पूछूंगी। समीर, व्हाट्स द व्यू लाइक ऑन एनटीपीसी? डू यू थिंक इट्स अ होल्ड और बाय राइट नाउ?
Oh, it's definitely a hold at this point of time. You could also look at it as, I mean, I wouldn't look at it as a buy from the very near term for the simple reason we don't think that you're going to get superlative returns in this, but you can definitely hold on. You can get your 13 to 15% CAGR returns from here over the next couple of years comfortably. We think there are better opportunities in this market correction, which one should look at. So hold on to your NTPC, no doubt, but don't add on anymore.
Okay, so that's with regards to where NTPC is concerned. The next one is on PI Industries, and this is, do we have the name of this person? Okay, we don't have the name of this person, but he's asking that he's bought PI Industries at the levels of 2902, wants to know if he can add more at the current levels considering that it's getting corrected. Rajesh, is that something that you would suggest, seeing the charts?
So overall, if I look at this structure, stock is in the downtrend, and now stock is consolidating after the corrective move. Looking at the near-term, short-term structure, 3450, 3460 is the key support area for the counter. If it breaks below 3450, then we may see further more, down move to extend, and then stock can slide further towards 3300, 3250 also. So stock have attempted to surpass its immediate resistance area, but failed in the recent past also. So immediate hurdle or major hurdle for the counter is 3750, 3780 zone. If at all stock crosses those levels, then we may see some reversal sign on the weekly chart, and then gradually stock can show some up move towards 4000 mark also. But at this juncture, 3450 needs to keep as a stop loss if you are holding the position.
Got the view, Rajesh, and some key updates coming in on the bottom of the screen right now that Tejasvi Yadav is currently trailing in his own geography of Raghupur. BJP's Satish Kumar is in the lead, and we'll continue to getting into those updates. For NDA, the number has crossed over 190. It's 192 right now. So we will be continuing to monitor that aspect as well, irrespective of that having an impact on the markets right now. No, and we'll see if it does in the second half of the trading session. But we have another caller coming in right now from Hyderabad. Praneeth is dialing in for a stock query. Praneeth, very good morning to you. What's your query?
Good morning. I need to know about the long-term view of Cohance Life Sciences. So do I need to average it at this time or sell it off?
And Praneeth, are you
I'm
okay?
sitting on losses.
And Praneeth, are you okay with holding it onto for a while and adding more if possible?
Yeah, I'm okay for 1.5 to 2 years.
1.5 to 2 years. Okay.
Yeah, may I know the where to shift my money if I need to sell this?
Okay, got it. Sameer, very interesting query on Cohance Life. Of Praneeth, there has been a change in management post that we saw the stock reacting down almost 8%. And continuing its downward momentum. Do you have a view on Cohance Life, if not on the sector, and if anything else that Praneeth can buy right now?
Yeah, so we do also cover Cohance, and look, we are also kind of surprised to see what we're seeing with the numbers in the current quarter. I think there was a couple one-offs which hopefully will get done, and now we'll see the profitability return. Yes, there's been an issue. The MD and CEO quit, and now the management has said that they're going to have a particular 3 people of 3 different divisions reporting into the board directly and things like that. So, we need to see how things eventually pan out. We did have a positive view on the company. We were invested ourselves, but we are reviewing that as we speak. But definitely, I think, given the kind of API, given the drugs that they're making and all of those things, I think the opportunity still remains very strong. And as long as they can get their business in order, which I think will happen, it is eventually private equity backed and professionally managed. So we think things will return to normalcy and profit will come back. So one should probably wait a little again for clarity, hold on to your stock. Once we see the clarity emerge over the next 2 quarters, one can average on some, because yes, even we are sitting on some amount of losses, but we are not going to be buying at this point, and that would be my same advice to your viewer.
Okay, all right. So that's with regards to where Cohance Life Sciences is concerned. We've got our next caller. Veer is calling us from Mumbai. Veer, hi. A very good morning to you. I believe you have a question on Medi Assist.
Yeah, I want to know a long-term view on Medi Assist. I'm holding 50 shares at 450.
Okay, got your question, Veer. I'll take this up with Samir then. Samir, any view on Medi Assist?
No, sorry.
Sure, no worries. Rajesh, from a slightly longer term perspective, charts are looking constructive for Medi Assist?
No, charts are weak and stock is almost now heading towards its all-time low trajectory, which is placed at around 420. So looking at the near-term, short-term as well as the medium-term structure is still weak until the stock not able to regain above 520, 525 zone. Trend is likely to exhibit on the weaker side. I think 420 is the next level where which was the previous swing low or all-time low trajectory, where again if it stocks able to defend this level, some pullback would be there. But again, my advice would be try to exit if you get any pullback in this counter, as trend is still weak.
Got the view, Rajesh. Another caller coming in from Pune this time. Ajita has a stock query for us. Ajita, very good morning and welcome to Ask Profit. What's your query?
Yeah, my query is, as you said, I'm Ajita Nair. I'm from Pune. I had bought 50 shares of Sterling Winsel Renewables on Mr. Samir's recommendations. Right now, I'm sitting on a huge loss. I can hold it for a year or so. I would want his view as to whether should I book out my loss or should I average, or I should just stay put.
Got it. Samir, any quick view that you have on Sterling and Wilson Solar?
Yeah, I'm very positive on Sterling and Wilson Solar. I would advise the client to probably not double but triple up, buy another 100, 150 odd shares. The price is extremely attractive. The order flows over the next 1 year are going to start coming. Execution of his current order book is also going to keep increasing. The EPC part of the business of solar is going to keep growing. We have a very positive long-term view. I continue to recommend buying this stock.
That's Samir's view on Sterling and Wilson. But viewers, it's that time of the show where we take the rapid fire round. It's extended to 3 minutes, so keep sending in your queries today. Samir as well as Rajesh, we hope you can keep your answers as short as possible on buy, hold or sell. The first stock the first question that's coming in is from Natraj. He's asking if he can buy into something like a Samman Capital or MCX for the short term. Rajesh?
I think both stock he can buy. Both stocks are looking bullish.
Okay, HAL is the next one. Jeet from Kolkata wants a 2-year perspective. He's got 36 shares bought at the levels of 4838. Samir, your view?
For 2 years, I say book out. If it's longer term, stay put.
Balrampur Chini is the other one. Seva from Bhubaneswar has been holding it for a year and is currently at a loss. He's bought at 520. Samir?
Continue to hold.
Okay, Home First Finance is the next one. Nayan wants a short-term view. Is bought at the levels of 1250. What's the view like, Rajesh, on the charts?
Keep stop loss of 1155. Hold any breakout about 1200 can take stock higher to 1250, 1260.
Neogen Chemicals bought at 1280 rupees per share by Archer from Bengaluru, asking a 2-year view. Samir?
No coverage, sorry.
Okay, Sugar Stocks is the next one. Natarajan wants to know if any of these counters are good to make an entry. Sri Renuka, Dwarikesh, your view, Samir?
For me, Ugar Sugar is the one to buy.
The next one's HDB Financial, or buy, sell or hold, Samir?
Hold.
Okay, IDFC First is the next one. Reddy from Hyderabad wants to know if you can hold or add. Rajesh, on the charts?
I think hold, and you can add in decline also. Keep stop loss of 74, target 95.
Jamna Auto, the auto ancillary company, our viewer has bought it at 97, so he's currently at a profit, asking if he can accumulate more. Rajesh?
Yeah, accumulate more. Keep stop loss of 98. Upside target could be around 125, 130.
Okay, Lemon Tree is the next one. Savio is a long-term investor. From a 2-year perspective, can he continue to hold or even add more at the current level? Samir, your view?
Only a hold.
Akums Pharma is the other one. It's a recent listing and asking, our viewer has bought it at 530. Samir, should he continue to hold?
Again, no coverage, sorry.
Okay, SGS Enterprises is the next one. Soumya from Bengaluru wants to know if this is a good time to buy. Rajesh, your view on the charts?
SGS, yes, can hold the position, and I think in decline also one can add. Keep stop loss of 1650. On the high side, maybe 1950, 2000 would be the next target.
The other one's Polycab. Our viewer has bought it at 7225. Ramana is asking if we should hold on or buy more. Rajesh?
Hold on the position. Stock is very strong. Even in decline, you can add. 7400 needs to be stop loss. target could be higher, beyond 8,000 also we can see the targets.
Okay, Apollo Tyres is the next one. Suresh wants to know if he can continue to hold from a longer term perspective. He's got 100 shares at the levels of 467. Samir?
Yeah, continue to hold.
Okay, so continue to hold. Apollo Tyres is the view that Samir has. But with that, we're completely out of time on this edition of Ask Profit. Samir and Rajesh, thank you so much for taking out the time and answering the maximum queries as possible in that last half an hour. So thank you so much for that. But with that, like I said, completely out of time in this edition of Ask Profit. But know your company on the other side, and we're taking up a very interesting company. So do stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you.
Hello and welcome to KYC. I am Sharad Dubey and with me is Mahima Vachrajani, and the company today at KYC is none other than LG Electronics. A very big issue, IPO recently listed, and of course the earnings. That's also something which we'll be looking out for. But in our entire show, Mahima, we'll be looking at why we're actually calling this company right now. And first question, of course, is what led to a muted quarter? Is it a sectoral specific theme or is it just company specific? We'll be going after that. What's the top line growth? Will it sustain to continue, going ahead in a sustainable manner? Margins, will they be sustainable between 12 to 13% or will we see some pressures going ahead? Also, promoter stake, that's expected to come down from 85%, and as per SEBI rules, it has to come. And market share gains, a lot of competition the domestic players are having. But just give us the details about, in our segment, about the company, what the company is all about.
Right, so I think everybody is familiar with the brand of LG Electronics, right? It was established in 1997 in India and focuses on various consumer electronics and B2B business as well. With regards to the business-to-business segment, the two business segments that it has is home appliances and air solutions, which is the first one that has your air conditioners, refrigerators, microwaves, ovens and washing machines. It also has something like a dishwasher, compressors, HVAC, water purifiers as well as air purifiers. And the other segment, that is home entertainment, that includes your televisions, audiovisuals, monitors as well as personal computers. This is the overall view of the two segments that it operates in. With regards to where manufacturing unit is concerned, the manufacturing unit at Greater Noida and Ranjangaon, Pune is there and has the capacity to manufacture LED TVs, air conditioners, commercial air conditioning system as well as washing machine, refrigerators and monitors. So it has a good setup in India with regards to where their products are concerned and manufacturing unit is concerned.
Well, that's true. A lot of products are there. But we also have a lot of criteria. In our KYC segment, there are almost 8 parameters where we judge a company. And I'll just quickly go through that. That includes income statement, balance sheet, cash flow, return ratio. These are the numbers. Also shareholding, street cred, which is nothing but your stock reaction coming in. Of course, it's just 1 month, you could say. So the time is less. Valuations and the street coverage, especially from the analyst community. So these are the important rating parameters. But first parameter is income statement. What are you looking at?
So, Sharad, it's been a strong growth for LG Electronics when it comes to the top line as well as bottom line. If you take a look at the past 3 years from past 4 years from FY22 to FY25, the overall 3-year CAGR for the top line has been at that 13% mark. Even in terms of EBITDA, it's grown over that 22% mark from FY22 to FY25. So essentially, from a 16,800 crore of top line, they've gone to 24,300 crore of top line in the past 4 years. Even with regards to where the net profit stands, that has also grown at a CAGR of 22% from a 1,200 crore, around 1,200 crore in FY22 to that 2,200 crore in FY25, and that CAGR has been at 22%. Margins have also been steadily improving. Of course, this quarter they had one-offs which has led to a margin downtick, but overall if you take a look at the margin trajectory, that has increased from 10.2% to 12.8% in FY25. If you take a look at the Q2 numbers, revenue was hardly up 1%, EBITDA was down around 28%. Margins came in at around 9% versus that of 12.4%, and net profit was also down by about 27%. But this quarter was largely impacted by the GST rate rationalization, where they had a lot of channel inventory in place, and the consumers were waiting till 22nd of September to buy a lot of consumer electronics once they get cheaper in terms of, especially in terms of ACs and TVs and dishwashers. So that has impacted the quarter, and seasonally also this quarter is slightly weak. Quarter 3 is going to be a festive season where we'll see a pickup as to where volumes are concerned. In terms of segmental performance also, home appliances and air solution, growth was flat. GST rate change temporarily, of course, influenced the purchase timing, and market share, however, has seen a growth and now stands at around 43.2% mark. In terms of home entertainment, the segment grew around 3% and the OLED market share also inched up. So that's the entire view as to how the income statement for LG Electronics is looking like. It's a thumbs up for sure.
Well, that's pretty interesting. Apart from that, even balance sheet is reflecting a lot of strength, Mahima. if you look at it, the book value that has also jumped up, equity numbers are stable, but the number which you'll be looking at on the higher side, that's the cash and bank balance. There is a significant uptick coming in from FY24 to FY25. The company is shoring up for their expansion, and that's what the management had also earlier stated during their IPO. So overall balance sheet is stable and it's looking for internal accrual-led capex also, it seems, because the number is very high on the cash front. So from my side, it's a thumbs up when it comes to the balance sheet.
Right, absolutely. I think 3,700 crores of cash where FY25 ended. Now the IPO proceeds will also come in, and we'll have to see as to how this capex is being utilized, because their ratios have also remained very strong. We'll come to that point, but cash flows right now, overall, if you take a look at the cash flow from operation number, that has slightly come down as compared to where it was in FY23, from a 1,871 crore to a 1,654 odd crore in FY25. So slightly lower where cash flow from operations is concerned, versus that of EBITDA growth that has nearly doubled in the past 3 years. So the ratio of cash flow to EBITDA has come down from a 99% to that 53% mark, translated to a lower conversion of that cash flow to EBITDA, which is why we've given a neutral rating when cash flow is concerned. But at the same time, in FY25, they've turned net cash flow positive, which has not been the case for FY23 or 24, and that's a whooping 1,500 crores. So considering all of this, just because cash flow from operations to EBITDA, the conversion has not taken place and has been coming down, we've taken a conservative approach here and given it a neutral rating.
That's pretty interesting. Earlier, Mahima, you had mentioned about the return ratios while we were discussing the balance sheet, and she's right. The return ratios have outperformed, their own industry numbers also. Return on net worth, that has seen a bit dip, but look at ROC. This is an important factor to actually factor in. For FY25, it's coming in at almost 43%, a slight decrease coming in, but it has upped up its guidance from FY23. So H1 numbers also would be on the elevated levels. That's what we are expecting, and of course the company has given its numbers also. So net the return ratios have improved, and you need to see a long time frame to give these numbers and our ratings. And from my side, it's a thumbs up when it comes to the return ratios.
Right. So I think return ratios we'll also have to see as to how FY26 pans out, right? Because if they're taking up capex, there will be a slight dip in the return ratios. But anything above that 20% mark is a healthy, ratio to consider for ROC, and hence we've, given it a thumbs up when ratios are concerned. But shareholding pattern, not much of a data in terms of where shareholding pattern is concerned, because this is just as of October when the company got listed. Promoters are holding 85% as of now, the parent company of LG Electronics per se, and at 75% mark anyhow they will have to come to, and 25% is what the limit they'll have. So we'll have to see as to whether it will come from that 85% mark to just that 75% mark, which is the overall legal requirement, or will the parent company actually dilute further stake? That will be something to watch out for, because recently Whirlpool, we saw as to how the promoters of the company had sold eventually stake in Whirlpool, considering that they wanted some cash out from Whirlpool India. So that is something that we'll of course keep an eye on. FI holding at that 3% mark, so nothing to compare to right now, but we'll have to see if this continues to grow for something like an LG Electronics. 4% is DII and 8% is around public. So the promoter, coming down to the legal range of that 75%, whether it will be covered by FIs or DIs is something that we'll have to watch out for. So considering, there are some questions that need to be answered as to who will buy next. We've given it a neutral right now.
Well, that's pretty interesting, and DIs have been buying post the listing also. So these numbers will be reflected in the last quarter. So that'll be pretty interesting. This number might change for the DIs front at least. But Street Cred, which is of course having the entire stock price movement, not much to share because this was just listed stock last month itself. It listed with a bang on 50% listing, but from IPO price, you could say it's up 43%, but from the listing price, stock has not done much. So right now, of course, the timing is very small. So it's better to have a neutral stance and give the company more time so that we can judge the company on their stock price movement and the street cred follows. So it's a neutral impact coming from my side.
Valuations is the next one. We've been talking about valuations a lot since the company, of course, came out with its IPO. This compared to its peers is fairly priced. There's no question question there, and that's one of the reasons as to why it garnered a premium of almost 50% while listing as well, because as compared to something like an LG Electronics, we've seen new age companies come at a very heavy valuations and then see a muted listing, right? So the kind of premium it got listed at was justifying the valuations at which it was sitting at. FY27 forward PE stands at around 29 odd times. Now this as compared to something like a Blue Star at 46 times, Havells at 45 times, Voltas at 40 times, Whirlpool at 27 times, Crompton Greaves at 25 times, and overall if you take a look at the Samsung global valuations, that at 11 times. But considering the listed peers in India, it is fairly and cheaper as compared to where the peers stand, but still just taking a conservative approach here as well, because 29 times is not cheap, right? FY27 forward, and considering if they continue to grow at that CAGR of 13%, slightly might turn out to be expensive. So that's why we've taken it a neutral approach and given it a neutral rating.
Mahima, the company size is very big, so the expectations of massive growth should be limited for most of the viewers and even the investors who are there in the stock. But the street coverage, of course, we saw almost 10 calls coming in, 10 analysts are tracking this, and all of them have a buy rating also from the current levels as well. So we are expecting that more analyst coverage comes so that we understand more, and because of that we need to give more time frame to it. So right now it will be just a neutral aspect coming in from our side, but let's just get all the rating parameters again and revise the total KYC rating which me and Mahima are giving for this stock. Of course, let's get out the income statement. We're largely given a thumbs up for income statement. Mahima pointed out, of course, the Q2 numbers were questionable, muted set of numbers coming in. Balance sheet very strong. Cash flow neutral. Return ratios, Mahima had also mentioned there was strength. Not much happening here in shareholding, street trade valuation and even street coverage, and this is because of a very small time which we have taken frame, but overall it comes at 5.5 out of 8.
Without any thumbs down, right?
Exactly.
Without any thumbs down.
Mahima,
and we've taken a very conservative approach.
And it's after conservative, it's coming at 5.5, and this is like a higher band average when we come with our KYC rating. So that will be pretty interesting. But Mahima, you had a conversation also with the management. What was that entire tone of it?
Right, so I did talk to the management of LG Electronics. I spoke to Sanjay Chitkara as well as Atul Khanna, and I started by asking Atul with regards to this quarter particularly, because this quarter is seasonally weak and of course impacted by that GST transition, and I started by asking him with regards to what were the hits and misses this quarter. Listen to what he has to say.
If you recall that FY26 began on a cooler summer impact, where consumer demand was also little subdued. There are geopolitical uncertainties, Indo-Pak war, tariff tensions, right, which impacted the industry, and the inventory level goes up. When we started the Q2, the inventory levels was the trade in the on the higher side, and then the GST rate cut announcement begins on 15th August, and which has also deferred some decision making by the consumers and the partners. And the actual implementation started from 22nd September, almost a week before of quarter end. Though we have seen that upswing in the sellout in the market for the premium product category after that, and though during this quarter also there was a high inventory levels, whereas which we foresee is normalizing after that, and particularly our revenue for Q2 was almost 61.7 billion INR with a year-on-year growth of only 1.0%, whereas the margins was little contracted because of some external factors where we have absorbed the cost of through our go-to-market initiatives and consumer promotions offer to boost the partners' momentum and our trust of our consumers. Which we are foreseeing that the momentum is building up, whereas our natural revenue growth almost 1% up, which also impacted some our fixed cost burden also, and we have seen some global headwinds also, which and rising commodity prices. After that, some corrective actions have been taken by slight increase of some prices in the washing machine and refrigerator. And we are foreseeing that due to this upcoming festival has just closed, and there is a upcoming wedding season, and then the winter season is coming. And most important part is our for the air conditioner business, where new BE ratings are coming in effective January 26.
Correct.
Where there would be again a price increase impact, which will be neutralized with the GST rate cut. So there is a good period for the month of November and December, where we are foreseeing that air conditioner business will boom.
Okay. So Sanjay ji, then I wanted to understand, because you did mention, right, that margins had taken a hit because of a one-off. You also have cost of raw materials slightly going up. By the end of FY26, I'm understanding that this is just a one-off in this quarter. By the end of FY26, you'll be able to maintain that 12 to 13% of margins?
See, we never pursued the short-term margin tactics. So our strategy is always for long term, because in any business, the market share drives the revenue and revenue drives the profitability. What Atulji has mentioned, I want to add, during this period, we improved our brand strength and we improved our market share. If we see, we improved our market share for refrigerator 1%, TV 1.4%, and air conditioner by 0.5%. So this way, we have already expanded that advantage. As Atulji have mentioned, we have also rationalized our promotional intensity, taken a price increase also, and we should be mindful that in quarter 2, almost 1.5 months was there for this GST transition. In fact, in just 1.5 months, we covered the last year turnover, registered a 1% growth, and our margin, which we registered, is 8.9%, which was 5.48 billion, and it is still industry leading. So that way, there is absolutely no business issue, no company's fundamental issue. It was just a timing shift due to GST.
Understood. And I think that should pick up in Q3 because of festive seasons going very strong this quarter. And that's the general, outlook that I've got from analysts as well. But with regards to, now that you're listed, you'll be able to give us some perspective and your investors some perspective with regards to where FY26 will end. You've grown at a very strong CAGR of, the 10 to 13% mark in terms of your top line, over 20% in terms of your bottom line as well. Do you think that CAGR will be maintained this year as well?
See, if we go to our history, our CAGR growth is 13.1 from financial year 22 onwards. And we have been registering a double-digit growth, double-digit EBITDA margin.
Correct.
Being a sales leader, definitely, our efforts would be that we catches that margin level and growth level. But since half of the year has already passed, and to cover up this year have been was a very tough year, and but we are very cautiously optimistic for the future, and definitely the better time. We have already passed the toughest phase. So the toughest phase is already over, and best is yet to come. That's what I cannot give you the forward-looking number, but definitely things will normalize. Inventories are getting normalized, and you will see a better results in coming time.
Okay, so I understand that you cannot give me a forward-looking statement, but when you say that you'll be cautiously optimistic, that 13% that you mentioned that you've grown from at a CAGR of 13% since FY22, do you think a double-digit growth on the top line will be possible in FY26 as well?
See, I again repeat that. See, I handle the sale and I am a sales leader. So my always efforts are that we grow and we meet the expectation of our investors, our management. So we are doing a lot of hard work in the market. But the best thing is we are getting a positive demand signals from the market. And there is a healthy pipelines are there. So there is not a structural issue with the market. It was just a timing shift. So, this indicates the things are positive. As Atulji mentioned, next year the new star rating guideline will come and we are preparing for that. The best thing is after GST cut, the affordability of our products have improved. We faced that 1.5 month tough month when the buying deferred. But now the things are normalized. Customer sentiments are good. Products affordability is good. So things are very bright and optimistic.
Understood.
I will add, Mahima, I will add. Actually, our organization focus always remains on the long-term segment level strategies that support to sustain our margins as well. And our product portfolio is having a good combination of premium segments and with a less pricing competition, where we are offering differentiated customer experience and product innovations. As we have launched LG Essential series also in the month of October, which is giving a good early traction with a very limited SKUs, but we would be coming up with more SKUs in the increasing the family size. So we can say our driving focus would be always sustainable growth with a profitable, meaningful venture. Even in the mass premium segment, and we are securing our number one position in both premium and volume categories.
Okay. Okay, fair enough. Sanjay ji, with regards to where the market share is concerned, you've gained market share where home appliances is concerned. What has led to that growth? And going forward, right now, if I'm not wrong, the market share is around 43-44%. How early do you think you can reach that 50% mark?
If you see our side-by-side market share, it is nearly touching 44%. OLED's market share is 62%. So we will definitely try to benchmark these market share. But we should also be careful because this market is highly competitive and we respect our competition. But the one good news is in September month, market share result, our brand strength was its peak and we registered a ever time highest gap with number 2 player. In TV, the gap was 6.7%, which is historically highest. And refrigerator, it was 6.2%. For side by side, it was roughly around in a range of 12 to 13%. In washing machine, 15-16%. So TV case and refrigerator case, historically highest gap we have registered. Air conditioner case, we were number one for inverter air conditioners last year. But this year we have become overall number one also and created a gap with number 2 player.
One last question to you, Mr. Atul. Right now your promoter holding is at 85% mark and eventually you'll have to bring it to that 75% mark. How is the transition going to be like? Any plans in place?
So I have mentioned that we will follow the CB guideline in this. And as per CB guideline, up to 25% we can do. But for this, we have been given a period of 3 years.
For a period of 3 years. And you'll be looking to dilute that 25% completely, or you'll just bring it back to 75% and let it be at that?
The board will decide about this. I mean, I cannot disclose it right now in this meeting. We are focusing on our business growth and profit for next quarter.
Well, that's a pretty interesting take, and thanks a lot, Mahima, for interviewing the management. And management's tone was overall bullish. Of course, there was a seasonality also. What are your, key takeaways from that?
I think the key takeaways, rather than being very bullish, I think they said that they're cautiously optimistic because first half of FY26 has already gone, which is, second quarter especially impacted by the GST rationalization and seasonal impact as well. So we'll have to see whether they actually grow at that 13% CAGR this year as well. The second one is the takeaway of Q2 being impacted by GST transition, of course. And third one is that market share gain is something that they're focusing on and will continue going forward as well. So this, of course, is a bullish commentary coming in.
So will this be a third quarter also? We'll see some kind of up move?
Yeah, so third quarter being a festive season and we'll see the Diwali sales also translate into, I think that's going to be the strongest quarter for them.
Okay, let's just revise the KYC rating. And you see income statement, balance sheet and cash flow. We have given almost 2.5 out of it and return ratios have been good. 3.5 already here. Not much here because of the timeline which we had actually discussed most of these parameters, and overall, Mahima, it is 5.5 out of it. Those strong numbers coming in, but management's commentary, as you stated, is still cautiously optimistic for FY26. So this is all we are giving you at this KYC show. Thank you very much and stay tuned to NDTV Profit.
NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank.
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान
सोनू निगम के लिए जोरदार तालियां।
Counting is underway in the crucial Bihar Assembly elections, with early trends showing that it could be a landslide victory for NDA in Bihar. RJD's Tejashwi Yadav is trailing in Raghopur, while BJP debutant and singer Maithili Thakur is ahead in Alinagar. NDA is heading towards a landslide victory in Bihar. Independent Purnia MP Pappu Yadav has called the outcome very unfortunate for the state. Meanwhile, markets rebound from day's lows. Nifty trades in the green as Adani Group stocks and financials lead the recovery. Major relief for transformers and rectifiers. World Bank removes the company from fraud list. Stock jumps 10% in early trade. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar, and the big story of the day that we are tracking is Battleground Bihar. So first, let's take a look at this, because a lot of the market movement will also depend on the final results of this big state elections. So these are the latest rates that are coming in. NDA at 193. Remember, it's a fight for 243 seats, and NDA looks like for a landslide victory given the kind of lead that it has gone. Mahagathbandhan 49 at the current moment. It's a poor showing when it comes to RJD as well as the Congress combination, and others are at 4. Let's also take a look at the critical components of the two big alliances. And here you go, NDA with Nitish Kumar. And here the most important aspect to also note is that BJP has got 86 leads in 86 seats, and JDU of Nitish Kumar at 76. They have been running neck and neck for quite some time in leads, and very critical to note who turns out to be the single largest party in the state of Bihar. So this is going to be a very big also deciding factor whether Nitish Kumar is clearly emerging as the Chief Minister of Bihar. All right, moving on then to the other vote share aspect. NDA with 78.2, Mahagathbandhan over 20%, while others didn't make it to the cut with less than 2% of the vote share. Here, remember that NDA has seen a huge uptake and similar, so that means they had pretty much taken all the vote share from Mahagathbandhan, and that's the kind of gain that NDA has got. All right, looking at the key things and the headlines from the numbers that we are getting at this particular moment. Remember, a large part of it is leads, and we have to really see the real wins for the final results. But state from the leads looks like it's set for a landslide victory for NDA. Tejashwi Yadav trails in his home turf of Raghopur. Remember, this particular turf is a very strong hold for the Yadav family, for Lalu Yadav, and that is a big concern. JDU BJP neck and neck emerging as single largest party is one of the most important aspects to watch out for in the Chief Minister's position for the state of Bihar. When we look at the other aspects of this particular election and the results, Chief Minister of Bihar, Nitish Kumar, well, a lot of effort has been made despite being trolled for his ill health. He did manage to garner a lot of public sympathy with the kind of results that NDA is getting, and especially JDU has got. The two important aspects that really stand out: women 10,000 rupees, and pensioner largest. Remember, the pension amount has been increased ahead of the elections, and this seems like has weighed above the caste politics which really govern Bihar elections. Looking at the other aspects, remember that the highest voter turnout probably looks like has proved a good positive move for the NDA, and they have managed to gain. A lot of migrants from Bihar have come back for Chhath Puja to cast their vote, and also they were under this stress of losing their name from the electoral list. and therefore that looks like has added to the weight of NDA's seats. But the vote share of RJD is also very important to watch out. Now, RJD's Tejasvi Yadav's employment push seems to have failed and doesn't make a cut because of the poor showing by Mahagathbandhan that we have seen and giving an edge to the NDA. Prashant Kishore's Jan Swaraj Party. Now, this has been one of the very big talking points, and this has not made much of an impact. So this is the synopsis right now. Looks like it's going to be a landslide for the NDA, and of course, the results have to come out. Let's take it across to an important voice on the Bihar elections. Let me welcome on the show Chetan Bhagat, columnist, a well-known columnist. Chetan, good to have you on NDTV Profit. This is Nisha Poddar here. My first question, looks like a landslide victory for NDA. What, in your view, really worked for NDA this time around?
It's a couple of things, obviously. When you have such a big victory, it's not just one thing. Some of the points you also mentioned in the 10 points you just gave out. But I would put it as maybe 3 or 4 Ps. One is the personality. You know, the personality, one hand you had a Modi and Nitish together. So both the brands are very strong political brands in India. People trust them, people like them. They have very strong fan bases for a very long period of time. On the other hand, you had Rahul Gandhi and Tejasvi Yadav, who probably were not as strong brands. Although you could say that maybe the Gen Z could have been more drawn to Tejasvi and Rahul, but that didn't happen, looks like. So one is the person. Second is the passion, I think. There's just the passion the NDA brings into, and especially the BJP brings into every election, is unprecedented. The leaders are there. They just work really, really hard. Third is the policies. That the third P is the policies, which is basically the policy of giving I think 10,000 rupees to women. That not that alone, but a lot of measures done over the years to win the women voter base. Just the one announcement will not do it. But that announcement, coupled with the generally image of being pro-women, whether it's even the liquor ban or things like that, I think all that just added up and just led to this thumping sort of unexpected victory. I mean, nobody expected, for a long time people were saying it will be an even fight, and then even an NDA victory, nobody predicted it will be so big.
That's right, Chetan. Good you pointed that out, because most of the exit polls were saying that NDA victory is imminent, but it was supposed to be a very close contest. And a lot of factors that you mentioned, the largest doled out to the pensioners, the women, also the huge turnout, but also, Nitish Kumar's effect. How much would you really owe this particular victory to them? And what is your view on BJP and JDU almost neck and neck, at least in leads, when it comes to becoming the single largest party in the state of Bihar?
Yeah, I mean, Indian politics in a lot of places works on alliances, and I think this alliance worked beautifully because the strike rate of their seats, both of them are 75%. They divided the seats equally, and both of them, it's not like one party came out stronger. It's more or less the similar numbers of strike rate, which is like a 75% of the seats they contested in, they have won, which is basically the final number as well. And I think Bihar won. Anybody would tell you that caste equations are important all over India, actually, but in Bihar particularly. And I think the NDA alliance brings together more castes, more people from different backgrounds together better than the Mahagathbandhan. Supposedly it's Maha, which means the great gathering, but that did not seem to bring out as many different communities to vote for them.
That's right, Chetan. Now, a very big question on the future of Tejasvi Yadav. Currently, he is trailing in Raghopur, which is a stronghold of Yadav family for so many years. And also, not a good showing on RJD in terms of seats, but maybe in the vote share, they have been maintaining. We have to see the numbers. But putting all this into light, the future of Tejasvi Yadav now.
Yeah, well, maintaining a vote share is great, but maintaining a vote share of a losing vote share means nothing, right? I mean, they may maintain their vote share, but last time also, but they should have been gained the vote share if they really wanted to like comfortably be in power. Tejasvi's own seat losing is also like it happens sometimes. The big leader also loses, but that also creates a further when you've already like if they're at least won the election, but he lost his seat. Okay, people would have said this is a one-off, it happened. But here, if he loses his own seat, which is a stronghold seat of the family, the party itself, while vote share is what it is, but finally the results matter. You can analyze the vote share and say, yeah, it's there, but the number of seats, like it's 80% of like this, the difference is 4:1 between the other side, and that is a decimation. It is not just that you fought a close contest. So that definitely puts concerns on his career, Tejasvi's career, but also on the Lalu Yadav's family. That political brands, family brands, can help. Sometimes it helps, but when the family name gets tainted, I think it can work against you.
Yes.
And no matter what you do, it just doesn't happen, because like I said, a lot of people, he's young, he was the youngest amongst all the major and prominent names in Bihar, so the Gen Z should have, and he's son of the soil, I mean he's from Bihar, so the Gen Z should have rallied behind him. It didn't happen.
That's right. You said it, that NDA has decimated Mahagathbandhan over there. But one word answer, and we are completely out of time on this, Chetan. But looks like Nitish Kumar is clearly the next Chief Minister of Bihar.
For sure. I think because if it was an uneven kind of thing, where like a BJP had a lot more seats, then you could have maybe even considered that possibility. But also Nitish Kumar supports the NDA government in the center. So you need that. They both need each other. It's an alliance that they both benefit from. So in those kind of alliances, chances of like things really being changed around too much is not there. When the BJP that way, although they can be very aggressive in some things, they are very poised kind of political party. When they see that it's working, don't fix it. When it's working, don't change anything. And it's working so well, why would you change anything?
Right. So Chetan, thank you so much for all your thoughts and perspective. Looks like a very interesting election. Thank you so much for joining us on NDTV Profit.
Thank you for having me.
Thank you. Bye. All right, let's shift focus to Paras Defense. It's up above 8% in today's trade, and this comes after the positive numbers in the second quarter. We are joined by Amit Mahajan, who's the director at Paras Defense and Space Technologies. All right, Amit, many congratulations. You've got a good showing when it comes to the performance and the numbers. Key discussion points to get some more matter on how the performance has been and the way forward from you. So the Q2 FY26 results also show that your optics and optronics growth remained flat YOY. Expected shift in contribution and mix from this segment from here on, or will this be the normalization that you're looking at for going forward of the performance?
Firstly, thank you for having me over. Good afternoon. I will first answer your second question and then I'll go to the first one. Optics and optronic systems contribution to the revenue of the company is going to grow from whatever we see today or whatever we've been seeing for so many days. The projected opportunities that we have are largely skewed in favor of optics. I'm not taking any credit away from my other division, but other division, the inflection point is linear in nature. The inflection point in front of optics business is exponential. And that's the kind of growth I am expecting optics to start influencing the revenue in the coming months, if not years. So that is the positive trend. It also influences the profitability to a large extent, and hence it is going to be a great profitable years to come as optics starts doing more revenues. At the same time, I also want to give you a slight focus that the other division, which otherwise used to have a relatively low profitability, has shown better improvement in profitability. Even in spite of being in competitive zone. So again, there is all the reasons for us to smile. So this is as far as that is concerned.
All right.
Now, looking at the business perspective, this company is not a quarter to quarter company, and I would maintain that even if I am having a good quarter like this, but what happens is the reason for performance always will be two factors. One, the orders on hand, because then the ball is in my court. And the second is the kind of opportunities a particular company and the positioning of the company for those opportunities. And in these three areas, I think Paras is excelling when it comes to the orders on hand and the kind of opportunities that we have on hand, and our positioning for those opportunities is very, very strong. So the probability of we winning the future orders is also very high. So
all right.
This
so
is the
Amit,
reason
I
for
got
this
your point
performance.
on that, and I'll add to that the execution ability is going to add to that momentum. Now, your margin guidance of 27%, what aided the growth, and what are the key levers which will lead to this guidance being maintained?
So the nature of business in defense, we need to realize, is changing. When I'm saying there is an improvement in margin of defense electronics or defense engineering vertical of ours, this is currently doing more than 55% revenue of the company. Now, when I'm seeing I'm no more doing development projects alone. There is a development segment which is happening within the defense engineering, but at the same time, I'm doing repetitive business. I'm doing larger quantities of the same system where I can improvise and optimize my processes, improve my profitability, at the same time improve my quality of product. So this is the change that you are seeing in Indian manufacturing for defense, that now you have long-term visibility of business. At the same time, you're more production-centric kind of business you can expect.
Right. Very good points made there, Amit, about the whole defense sector. It gives a good view for a sector which has been really catching all the attention this year. Now, order pipeline, you'd mentioned a lot about the order wins and the opportunities that you have. And can you give us a sense of what is your current order book and what is the target and expected order book going forward for this financial year?
So I've always mentioned that our order book, by the end of this financial year, we will close somewhere around 1,200, 1,500 in spite of delivering whatever we are expected to deliver. So our current order book, in spite of delivering an H1 performance, is still close to 1,000 crores. Now, the reason, there is a slight reason for us to smile, is because about 200 crores of this is for anti-drone application, right? So it is for an anti-drone application, and the efforts that we were trying to do in this particular segment is now taking shape. Now the future is becoming more and more clear, and now we can expect contributions in this dimension of our business, which is relatively newer as compared to others. So now this is also picking up. So the visibility that I have for order inflow, the space programs, the laser programs, all of this gives me an opportunity size in excess of 2,500 crores.
Right. So also, Amit, there are opportunities emerging in the submarine periscopes. Are you aiming for 30 to 36 periscopes, and what is the opportunity over there?
The periscope product has become our flagship product. It is not just a sense of business that we are trying to do here, but it is also a sense of national pride, according to us, that we have come out with a product like this. The pipeline, you are right there. I want to be a little conservative, but this pipeline is realistic, what you mentioned, and we are aiming for that. And, the product is completely homegrown. So we are excited that we should be able to do justice to all the opportunities that are there. I am also given to understand that this opportunity may only increase from here on.
All right, more opportunity there, but high value opportunity of 6,000 crores in optics versus the near term view. How do you put the opportunities in optics currently?
So the optics opportunities are humongous. Means if I just have to talk about them, then I will dwarf the opportunities that I have in defense engineering side. But when you say 6,000, there are electro-optic systems that we have partnered with an Israeli company named as Controp. Now the one single product of that company has a application into very many projects, totaling to more than 5,000 units being sold. And this is where, one system, multiple quantities, and long-term business. This is the nature which is going to completely revolutionize the Indian defense industry, and so it is doing it with us. Now, apart from this one product, there are very many opportunities in the space area related to optics. So one which is with ISRO, the other one which is non-ISRO. Now, all of these opportunities, even if I club it together, only optics would go to more than 2,000 crores by themselves. So it is huge.
Yeah, so that's a great space, but also outlook on the counter-drone solutions. Very quickly.
So like I mentioned to you, counter-drone solutions have now picked up steam, and with this confidence of the customer levying on us, and the moment we deliver, this only just opens the floodgates for us, and that's something that we want. We are prepared for strategically and financially, but from our happiness quotient, we are still taking it a little easy. We want to perform, we want to deliver. Our proof of concepts have played well when it comes to field trials. So we want to deliver these systems, the orders that we have on hand, and then next year it seems to be very, very glorious.
All right. All the best for that, Amit. Great chatting with you. Thanks so much for joining us on NDTV Profit.
Always a pleasure.
All right, let's take it back to the big story of the day. We are talking about Bihar elections and also on the companies with meaningful exposure to the state, from retail and housing to beverages and also telecom services. Several listed firms are really seeing activity linked directly to Bihar's expanding consumption and infrastructure push. Let's take it across to our colleague Sharad, who is joining us with the entire detail. Sharad, you also have pulled off a gamcha to go with the theme of Bihar elections. Take it away.
Yes, and Bihar में सिर्फ और सिर्फ चुनाव नहीं है, stocks भी हैं. Stocks or business, all of them are there. Let's actually pull out the stocks which are having the highest exposure in Bihar. First and foremost, Aditya Vision. Aditya Vision is the largest electronic retail chain player and of course a good multi-bagger also. Reflex Industries, they have got a significant presence in the refrigerant gases space. And if you look at the SIS, it's interestingly headquartered in Patna. They're having, of course, global services also in Asia as well. Gina Seco Lifecare, interesting name, 1 hospital and 10 clinics, interestingly in the Ayurvedic space. And if you look at Ashiana Housing, they are also having lots of projects in Bihar as well. V2 Retail, they operate roughly 27 odd stores. And also Hindustan Media Ventures is something which we'll be looking for. Recent announcements in Bihar, that is also very important. Railtel has backed 7,000 crore order just from Bihar Education Board. Varun Beverage is a huge property in Buxar, and even Global Spirits, if you look at it, they are also having a big manufacturing facility. Looking at the overall infra space, that is also very important, and the way the infra space has gone up, GR Infra had recently a 1250 crore order coming in. And also PNC Infratech, they have completed projects in Darbhanga, Patna and even Muzaffarpur. Looking at L&T, the expectations are coming from the street for Bharatmala as well as Gati Shakti projects. And NCC, recently they got almost a 2100 crore order coming in from the Water Resource Department. And lastly, Ashok Buildcon, they also got a 520 crore order. Bihar might have a lower base, but because of lower base, the growth can be very high, be it industries, be it listed space, and even PSUs.
All right, Sharad, thanks so much for getting us the whole host of stocks impacted and related to Bihar elections. Let's take a look at the markets. Markets are also holding their breath, looks like, tentatively moving today. When we talk about Nifty 50, ahead of the final election results. But one must also note that after the exit polls, the market had shown a huge amount of exuberance. So waiting for Bihar elections, there you go, markets. Nifty 50 at the current moment, 0.2% down, of course, 25,800 odd levels on Nifty 50. And let's take a look at some of the other aspects like mid-cap index. That is clearly showing an outperformance to the key indices, 0.4% up on the mid-cap index. And when we talk about certain pockets, well, IT sector is the one which is not performing today and is definitely seeing some profit booking. When we talk about the key contributors to Nifty 50, well, it's big boy Reliance Industries, Bharti Airtel. From the IT pack, TCS, it's pulling its weight, HDFC Bank, and also Adani Group of stocks performing very well. And those are the contributing factors coming in on Nifty 50. Otherwise, it is a tentative and a quiet show on the markets awaiting the big election result from Bihar. With that, it's a wrap on Markets at 12. Thanks so much for tuning in and keep it with NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
And what a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer.
Hello and welcome to Profit Buzzers. I'm Sharad Dubey and with me is Anushi Vakharia. Anushi, a very choppy market, coming in. Of course, initially the markets are cheering the NDA's majority expected to be there in the Bihar elections, but the markets, both Nifty and Nifty Bank, you look at it, they have been very choppy. Nifty still sustaining above that 25,800 mark. Nifty Bank also a recovery is happening, and interestingly, the 20 DMA levels, that is very important to actually watch out for. But domestic cues are taking over the global cues, so it doesn't make sense for global cues to actually impact the markets. But broader indices, there is some action happening, right?
Yeah, today it's all about elections, as you spoke about, and you've covered that pretty well, in the earlier shows as well. But in terms of what's happening with the broader markets, in a better position as compared to the benchmark indices, we are looking at a flattish moves for where Nifty Mid Cap 150 is, but still holding up in green is what we are looking at. Small Cap 250, we're looking at a 0.3% of an uptick. Let's just pull the advanced decline ratio to see how the breadth is currently for in terms of where. Rightly at the same stage as what says, in the early part of the day, in the early start of the day, there was a huge gap in terms of where the declines are concerned, but now that has started consolidating as well. About 1100 advances in comparison, the declines of the same ratio is what we are looking at. In terms of the sectoral picture also, if we are just looking at that, let's see the top ones at the Nifty India Defense leading the chart. 1% is the kind of an up move that we are looking at, and a lot of these defense companies have just announced their results. This includes the likes of Bharat Dynamics, which also received a 2,000 crore plus of an order win as well. Apart from that, even Nifty Pharma, we are looking at about a 0.4% of an uptake, while Nifty IT, some bit of correction is what we are looking at over there. 1% is a kind of downside that we are seeing. In fact, let's see Nifty IT, how that is doing. If we just take a check at that, all the constituents are in red today. Infosys down about 3%, Coforge also leading to these kind of downtick that we are looking at. But Sharad, that's the overall picture that we have for the markets currently, right?
Well, yes, interestingly, and we have advised our viewers also yesterday that to put your trade positions on a very lighter manner,
right?
Because things can move around a lot, and even if you are trading, you should have a very strict discipline and allocation going ahead. But moving on, let's focus on Adani Group. They have announced a massive investment of 1 lakh crore rupees in Andhra Pradesh over the next decade, expanding its footprint across ports, cement, energy, data centers, and advanced manufacturing, unveils Karan Adani speaking at the Andhra Pradesh Investor Summit. Listen in.
Over the next 10 years, we plan to invest an additional 1 lakh crores across ports, data center, cement, and energy business. The flagship of our commitment is the Vizag Tech Park. This is not just another tech park, it is the foundation of India's digital sovereignty. We are building one of the world's largest hyperscale data center ecosystem in partnership with Google and powered by complete green energy. This is a combined $15 billion vision that perfectly aligns with your twin goals of sustainable and high-tech growth. But what truly humbles us is not the scale of the capital, it is the scale of impact. Our operations here have already generated over 1 lakh direct and indirect jobs.
Okay, so that's Karan Adani and his address is what we are looking at. But apart from that, if we are seeing what's happening in terms of sectoral action as well as what's happening with particular counters, Man Industries as the stock in focus, we are looking at its result as a strong reaction as what we are seeing in trade currently. 3.5% is the kind of growth that they reported in terms of revenues, but it's the margins wherein we are seeing a high expansion, 14.5% versus 7.9%. Even net profits are about a 16% of a growth. Order book, if you look at that, that's still at about 4,750 crore. Most of it to be executed by these next 6 to 9 months itself. And what's interesting is that they have an order pipeline of around 15,000 crore. How would the H2 shape up is a question that we should be asking, and we have the management, Ramesh Manchakani, chairman at Man Industries, joining us on this show. Mr. Manchakani, hello and welcome to the show. Let me start off with the second quarter numbers that we are looking at. If you see the overall first half, considering the second quarter results that we are looking at, 3% growth in the second quarter, while 1% growth. So just want to understand your guidance. You have emphasized this before also that H2 would be where, there would be a lot of heavy lifting. So just want to understand this 20% of guidance, does that stay in line? What's the outlook that we are seeing for the second half of this financial year?
Yeah. Good afternoon. The second half always, traditionally we are 60% and the first half always 40%. And considering the order book position around 4,800 crore, roughly, we are very confident in this second half will be around 2,500 to 2,003. We are estimating 2,300 to then whatever our estimation guidance we gave beginning of the year, we are expecting to achieve comfortably.
Guidance remains in terms of where the top line is concerned. Now, for the second quarter, we are looking at a huge expansion in terms of where the margins are there, which brings your consolidated margins at the end of H1 to also about 11.5%. Now, you've guided for a 10% of mix. Does that change for the margins? Firstly, explain what led to this key growth in terms of where the EBITDA was concerned, and what's your outlook for FY26 along with FY27?
Yeah. The guidance for the EBITDA would be almost same between 11 to 12%, which is right now the quarter one, quarter two. If you see 12.5% and 11.5%, so it will continue. We got some good order also. The product mix as well as value-added products. The margin is high, as well as one more important issue here. We are mostly now we are doing export. Our 80% is export. Compared to last year, it was a little low. So that's we are very confident. So we will achieve the higher profit margin, PAT, as well as to EBITDA also, and the top line also.
Pretty interesting, Mr. Mansukhani. This is Sharad here. Hello and
Yeah,
good
Sharad.
afternoon, sir. So executable order book, that's roughly coming in at 4750 odd crore rupees, and the overall recognition, if you see, 80% of them will happen in FY26. Now, will this translate into improving cash flows in the next 2 quarters, or we could say that these billings can happen next year? How does it pan out?
So out of 4,800 crore order, around 50% we are going to complete in 6 months, 7 months, up to March. Then we will achieve our target. The balance, roughly 50%, 2,500 crore, will carry forward for next year. As well as we are bidding around 15,000 crore, so we are very confident to get the much more better share for next year. And our next year will be the much better order book as well as to EBITDA and the top line, which we are going to calculate once again over there. So there is a very bright future as regard to next 2 quarters and the further 4 quarters of the next year also.
So Kaniji, you had spoken about your international business. That's roughly 80 odd percent you had stated here. But now the Saudi plant commissioning, that is something which the street is actually wanting to know in FY26. When will it start? What are the capex numbers which you have already announced? And will we see any further capex on these plants? Because channel checks suggest that the Saudi Arabia or the GCC segment itself is giving out more orders also now. So will you be upping your guidance? What is your view in this entire GCC MENA segment?
Yeah, GCC segment, particularly Saudi, we are likely to start first quarter. First quarter means the calendar year first quarter. The fourth quarter is per your definition of this current year. So then the production is going to start, and our new capacity, we are estimating 7,000 crore 26-27, along with the Saudi and India balance orders. And our Jammu project also in the full swing, and it is going to give the yield the first quarter, again, the first quarter of the next year. Saudi will be much more faster, will be from January onward, we are hoping to start production. And that's why our projection is almost 60-70% more at a consolidated level.
Just on that, just want to understand the 7,000 crore mark that you're giving. This is including, the incremental capacities coming from the Saudi plant as well as Jammu plant, or it's just from the Saudi plant that you're seeing?
No, including Saudi plant, because there will be the beginning of the plant over there in beginning. Then we are estimating good revenue from there as well as from Indian operation. So 26, 27 will be the good growth. And this year growth we estimated 20%. Next year will be much more.
And also just want to get a picture on that, you've already spoken about a 15,000 crore of an order pipeline opportunity which is there. Is this inclusive of new inquiries coming from this particular region, from Saudi Arabia itself? Just want to understand this market in a deeper sense, from which particular segments, for which particular areas that you're seeing more of these inflows coming up?
Mostly 80-90% business and bid in the international market. So in any case, 25, 26, 27, mostly will be the export earnings with both the plants, plant in India and plant over there. That's why the revenue projections also are very high because of this export base mostly. And the Indian also growth is there, but our more focus, more EBITDA, more profit. That's why we are focusing more on the export this moment.
Okay, currently what is the mix, if I just want to get a breakup in terms of exports and domestic, and how are margins different across both of these?
The domestic margin is 8-9% and export is 12-13%. Average out because of the weighted average of the domestic is very less. So that's why not going to impact this thing. That's why 11.5 to 12% we are maintaining. And Saudi, we are expecting little bit much better EBITDA. So overall EBITDA for 26, 27 will be more, we have to give the more estimation in coming time. But we are very confident there will be growth continue on this sector.
And last question, Mansukani ji, is that there was an inventory build-up also in the previous quarter. Now that was liquidated in Q1 FY26. Was there an issue in this quarter also? Because if I'm not mistaken, the working capital numbers, they are volatile. I checked last time. So the inventory build-up, will this continue as a pressure in this quarter also, or you're expecting that to normalize now?
No, sir. It is going to normalize. That's why the projections, whatever we say, the 2,400 crore for the next 6 months, which is much 1.5 times roughly from the first H1. The reason, whatever the inventory already checked, already shipped, and then money has to come. So that's why there is no cash flow, any pressure, etc. And the other important matter, we have the letter of credit also for suppose 60 days, 90 days against LC, against the deferment payment, which we can encash anytime discount LC also. But this moment, we do not need the cash. That's why we are waiting to money should come down comfortably. That is a good strategy of the company, and that's why we are following up.
All right. Thank you very much, Mr. Mansukani, for joining us at NDTV Profit and speaking of company's growth prospect, especially the export front. Moving on, we're joined by CA Tapan Doshi. He's the research analyst at catapan.in. A very good afternoon to you, Tapan. And interestingly, seeing the market flavor, it is still volatile, but we are seeing some kind of green shoots happening. And in that, any sector which is looking good risk-reward ratio right now, because earnings season is over. Majority of the overhang of the elections, the results that's factored in the markets. Global cues is changing, but domestic cues is actually taking the markets forward. What are your views on it? Which sector's risk-reward ratio is good?
Good afternoon, Sharad. See, of course, the market is little bit volatile, but yes, I thought because of BJP win, NDA win, I think the market will go up, but it is not going up as such more. But no, I think overall, if you see, there are few pockets. I think banks and NBFC is quite doing well. They are hitting all-time high. If you see bank index also now, and NBFC is also doing well. The results which came, there I think see much more favorable results were there. And of course, if you talk about affordable housing or you talk about consumer finance, finance, there I can see a good shoot up. Even if you talk about banks also, I think PSU banks are quite doing well compared to the private banks. So in NBFC, I think L&T Finance and LIC Housing Finance, that one can think. Even Muthoot Finance, I think that is also doing quite well. You see gold loan. So I think financial sector more than that, in that banks and NBFC doing it. Selective FMCG stocks like you can say the Tata Consumer and all that, I think one can watch about it. Also, if you talk about capital goods, I think they are came down a lot. I think ABB or Hitachi, one can think about it because it's now coming at a value level. So yes, few pockets one can look at it. Defense is a flavor. So defense also even if you see some of the results were quite good. So yes, defense is also another counter one can look at it.
Defense, capital goods and financial. These are the three sectors which Tapan has recommended where the risk reward ratio is good. But now let's move on to another sector which is buzzing. Of course, the power related segment also is something which we'll be talking about. Joining us, new management on the earnings, Bharanidharan Pandian. He's the joint managing and whole-time director at Quality Power. A very good afternoon to you, sir. And I see the numbers, they are on a pretty strong side, operational numbers also, the Q2 numbers. But interestingly, there was a guidance given by your company and you have already achieved more than 50% of the guidance. That means will we see this guidance actually going up now? Because will you up it now? You have played conservative till now.
Ideally, we would do it at end of Q3 once we have the numbers in our control. At this moment, we are focusing on order book. We are normally very heavy on the H2 on the order book. Once we have guided the order book and the raw material supply chain issues, I think in end of Q3 we may look at a better guidance. The margins are looking fairly good with the kind of order books that we are sitting on hand.
Yeah, I just want to understand about that. So 700 to 850 crore is the kind of guidance that you've given. 413 crore is what you've reported in the first half so far. So just want to understand what is leading to this kind of growth that we are seeing for the particular counter. And even for margins, if we are looking at Meheru's margins are now improving as well. It's at the mark of around 12%. The aim is to get this to 15%. What should support this forward is also something that I want to ask you.
I think a good product mix. We've got approved in utilities in Europe. We have been walking the talk. We have guided to 15% margin. We have had a tie-up with Hyosung for the GIS collaboration. The product and the demand profile at the high voltage segment is through the roof. It is more that how much capacity that the market can deliver to the market. That is more important than how much order we can take in right now. I believe the floodgates of the orders would be starting in Q2 of next year when the new factory is being commissioned at Quality Power. But across all divisions and factories at this moment, the tender pipeline is extremely strong.
Can you explain what's the kind of tender pipeline that we are seeing currently? Because across your segments, if you are seeing HVDCs where, there's a huge tender pipeline as well. Facts also, you are adding capacities for that particular front as well. So just want to get an update in terms of this current order book that you have of around 830 crore. By end of FY26, what is the expected, increase in terms of this particular number? And what's the order pipeline opportunity that you see?
So most of the orders that we get have to be executed in about 12 months, which means the raw material supply chain is more important when we book in an order. At the tender level, I believe at a group level, we are in excess of 3,000-4,000 crores at this moment. But we need to cross-check our deliverables that we can deliver from the current supply chain. We are expanding into CTC magnet wires for HVDC and fax applications. Those shall help us get in more orders for the new facility. Apart from it, we are also quite gung-ho on the inorganic front. We believe we will have some good news shortly on it.
Interesting version of that. But just looking at the Meheru segment, they have delivered margins this quarter to about 12%, aiming to get it at 15%. So what will be the growth trigger for actually getting these margins to those levels? And the core business, the blended margins are still on the higher side at 25%. So give me three outlooks: the Meheru business, core business, and the blended overall margins outlook going ahead.
So the traditional businesses that we have are operating at north of 25%, and I believe those are stable because the order books for the next 9 to 12 months are already in. So I do not see a margin drop on the core businesses. The newer businesses that are being acquired, we acquired Sukrut the last quarter, so that would get merged in. So from an EBITDA at a consolidated perspective, there will be slight changes, but at group level, every business is expanding margins. Even if you look at Mehru, the 2 quarters back, they were at about 6%. They came last quarter to 10%, this quarter to 12%. I believe they will also be in the northward trajectory. That is how the guidance that was a bit about 20%. We are at this moment at about 22% levels at this moment. So we are slightly above guidance, and we believe to be conservative is better than overcommitting.
Sir, I just want to mix a few questions together now with all that's happening in the company. Firstly, you have the Sangli plant expansion, which is on table. This is to be expected. Expected completion date is about second quarter of FY27. Then there's Cochin plant expansion also, which will focus more on these HVDC and FACT projects that we are looking at. This should be completed by November of 2025. Along with that, you just spoke of the additional line that you're putting for the new magnet wire manufacturing line. Considering all of this, what's the kind of incremental growth opportunity that you see, incremental revenues that we can see? And I'm assuming that majority of this would start flowing from FY27, from 28 onwards. So just want to get your outlook in terms of what's the long-term picture for Quality Power.
So we are going to go on the transmission line segment or the transmission evacuation segment across the world. We are still at about 50-55% global business. Most of the orders that we have declared in the last few weeks have also been global. And as India is actually going into execution, because at this moment, most of the HVDCs are under tender, we believe we will have some good news in the next few quarters on the HVDC order wins. So because of the kind of orders and the tender pipelines we are coming in, it is very imperative that we also ensure our supply chains are able to cater to these kind of growth areas. That's one of the reasons why we are reverse integrating into our own supply chain to be able to ensure that we are able to deliver the numbers. The capacity increases in excess of 9x. So I believe we should be having some aggressive growth pattern coming in from middle of next year.
Okay, well, thank you so much, Mr. Pandian, for joining and sharing that outlook on Quality Power. Strong growth projections is what we are seeing for this one. But, you know, right on the bottom of the flashes, you can see Marico's numbers flashing. We are looking at about a margin of 16% versus 9.6%. Net profit seeing about a 0.7% of a dip or so. But let me go across to Mahima, who's standing by to give us a breakdown on these numbers that we are looking at.
Right, Anushi. So as you rightly mentioned, prima facie it looks like it's a good set of numbers because it's come in at a growth of around 31% for the overall revenue on a consolidated basis. EBITDA also up by about 7.3%. Margins, however, have slipped, and this is something that the street was expecting because of raw material prices still being very expensive. In terms of net profit, it's just flat at about that 420 odd crores. So overall, prima facie, it seems like it's a good set of numbers. In terms of the segmental revenue also, the overall India business has seen a growth from that 19 crore 80 mark to that 2,660 crore odd mark, and international business has also expanded by around 200 odd crores from that 685 crore to that 815 odd crore. I think what the street will be expecting is the commentary in terms of where the volume growth stands this particular quarter, whether volume recovery has taken place, and of course this quarter being impacted by GST is also something that needs to be kept in mind. And despite that, the kind of top line growth that has come in at that 30 odd percent seems to be an impressive one for sure. But net profit being flat and EBITDA seeing a downtake largely on account of the transition of inventory of GST rate rationalization and of course raw material prices being up, impacting the margins overall. So this is the overall first cut with regards to where the Marico earnings are concerned. We'll wait for the press release to come out to get more perspective on how volumes have done and how pricing has also been this quarter, because that will be an important metric to keep a track on.
Very much, Mahima, giving these initial views for Marico. The stock itself, the moment the results came, there was a big spike, and now we're seeing the stock coming down at the levels of between 715 to 720. The stock is gyrating. But Tapan, Marico, I know this has been your bullish bet earlier, when last time we spoke. Do you still have that thesis on for this, Marico?
No, I'm quite bullish here, Sharad, no, because if you see the results is also okay compared to other FMCG companies. They are struggling with the single digit volume growth. Even I think from here also I think mid single digit volume recovery will be there from here. Rural distribution is expansion is good. Even Saffola Foods growth is in double digits. So that is what driving somewhat you can say the margins also. So premium portfolio they are bringing and they are doing quite well. Even digital portfolio is also slowly and gradually going up. So I think overall they are expanding into Bangladesh, MENA and other regions also. See, and if you see the gross margin, that is also stable. So I think from here also, I think this company may do well. I can see the consumption boost for next 2 quarters also. So yes, this is one of my topic. I think this will remain as a topic.
Okay, well, thanks for that view, Tapan. So that's Marico. Currently, if you're just looking at the reaction point, 5% of a downtick is what we are seeing. But coming back to the biggest story of the day, and that is Bihar elections that we are looking at. The highest voter turnout that was recorded has proven positive for NDA. But what really stands out on results day is Nitish Kumar emerging. That's clearly what we are seeing right now. But NDTV Profit's managing director joins in with her take. Taman, over to you on this.
Okay, so there is a win, there is a landslide, and then there is a steamroller. What has been seen in Bihar is steamrolling, or you can say vacuuming up all the votes. This is the tally as of this point, 196 to the NDA. The Mahagathbandhan reduced to 41, others at 6. Remember, this is a state where the halfway mark was 121. So this is clearly a vote for the incumbent, for the same government to continue in a massive fashion. Even the vote share, and I don't know if we can pull up the vote shares at this point, also give you a sense of how strong the mandate has been for Nitish Kumar this time round. Having said that, what does this really mean? What are the big takeaways from the Bihar election? I mean, this is astonishing. It's an 80% vote share. That means 80% of all voters that have gone out have voted for the NDA. I don't think this has been seen in any election in India for a while. And that too one which is as fragmented as Bihar. Bihar's political landscape is quite deep. To see an 80.7% vote share is historic beyond all measure. Of course, the pain coming from the Mahagathbandhan and exact transference of vote there, 30% down for the Mahagathbandhan. Now, what does this mean and what are the takeaways? I'm going to start with that. And first of all, let's be very clear. It's all about Nitish Kumar. That's why I'm saying Nitish has proven Tiger Zinda hai. This is actually posters which came up in Patna this morning. He has been CM for 20 years and will be the chief minister for a record 10th time after this election. Why this becomes even sweeter from Nitish Kumar's perspective. The victory is despite questions on health and capability. That was a big talking point. Can Nitish really do it because of age, etc.? What it also shows is all calm on the central front. When that exit poll came out saying it will be a close fight, the concerns were whether this will impact the mandate for the NDA at the center. Well, clearly not. Performance of all constituents of the NDA have been beyond expectation. So if you actually break up, and let's do that for a second. Let's break up the NDA and all constituents of the NDA. We'll come back to that. You'll see that all the constituents of the NDA, the BJP, the JDU, LJP have all done very well and have increased their seats phenomenally. Even the LJP has done extremely well. HAM, the BJP at nearly 90 seats. So it's been a very, very strong mandate for all constituents of the NDA. Point number 3. After all calm on the central front, the next point also talks about how this is a very poor show for the Mahagathbandhan. The Mahagathbandhan will of course have to go back to the drawing board on what hasn't worked, and clearly a lot hasn't worked both for Tejasvi and for the Congress. Congress's relevance even as an alliance partner will now be questioned further, maybe by other alliance partners in different states, because Congress's tally has seen the worst hit even compared to the RJD. Now, the woman voter is something I want to talk about because she has spoken loud and clear. They have outpaced men in turnout in this election. In absolute terms, more women have voted in Bihar than men have. And people will put it down to the 10,000 rupee dole that was given to, socially and monetarily backward women or from weaker sections. But it's much more than that. It's a tectonic shift in Indian politics that you're seeing. Every politician in every state and every government now has to think about what they are doing for women voters ahead of an election. The women of Bihar have ensured that there's a huge shift in the way Indian politics works. Now, the next factor that you should actually look at is Jan Suraj. So much hype around Prashant Kishore because he's been an advisor to pollsters. This was the first time, remember, after Prashant Kishore that there was a very corporate way of advertising and promotion as far as political parties go. And then when he said, I'm bringing up my political party, everyone wanted to see what happens. It's clearly a non-starter. It has not impacted either the MGB or the NDA. It shows that Bihar's voters prefer to stick to the tried and tested and weren't really in the mood for any new experiment. So all in all, these are some of the big takeaways from the Bihar battle.
Okay, well, thank you so much, Tamanna, for breaking that down. You're clearly seeing the numbers on the screen on what's happening. It's a big win for NDA is what we are looking at. But it's time that we slip into a short break. We'll be right back. Lots more lined up on the other side. So keep watching NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very good.
watching Profit Buzzers here at NDTV Profit. Now, with regards to where the markets are concerned, the Nifty 50 under pressure, down by about 0.3% below the 25,800 levels. Right now, trading at the 25,795 odd levels, and almost at its day's low point. Not yet there, but kind of seeing pressure. With regards to where the Bank Nifty is concerned, that is also down by about 0.2 odd percent. The broader markets, though, the mid cap 150 has remained under pressure and down by about 0.2 odd percent. The small cap 250, however, is seeing a tad bit of gains, up by about 0.1 odd percent. With regards to where the counters on the Nifty 50 are concerned, you're seeing gains yet again in something like an Asian Paints. Something like Adani Enterprises is also up 1.9 odd percent. Axis Bank seeing gains of about 1%. Eternal also up by about almost 1%, but something that's under pressure today includes your names like Infosys, which is down 3%, putting a lot of pressure on the Nifty IT. You have Eicher Motors, Tata Steel, Tech Mahindra, as well as something like JSW Steel, HDFC Life and Hindalco, all down by about 1% each. Let's also try to pull up the advanced decline ratio, because that is going to be an interesting one, right? The advanced decline ratio it's a tough journey for them today. It's a crisscross chart that you're seeing right now. You have around 1,000 odd advances versus that of 1,300 odd declines. So that's with regards to where the overall market picture is concerned. Clearly right now under pressure, despite, I think the street was expecting this NDA win to happen with a far better majority, and that's and on the back of that we saw a rally in the markets just before the election outcome came out, and today we're seeing some amount of profit booking with regards to where markets are concerned. But moving on and shifting focus to the textile or the garment space, despite the kind of hosiery industry facing one of its toughest phases with weak demand, price wars and internal succession issues as well, Dollar Industries has emerged as a standout performer. To understand more about why has it stood out in a beaten down hosiery sector, Sharad breaks us down for us.
Well, thank you very much, Mahima, for that. This industry has not been the talk of the town, but this stock itself, Dollar Industries, that has been an outlier. So is it a right tagline, fit hai boss, in this hosiery industry? So let's actually see the Q2 numbers, how they've actually panned out, and I have taken the numbers, especially the margins and PAT. Look at it, it's up 190 basis points. Other competitors, Lux, Rupa, Page Industries, all in the negative. PAT numbers, that's the high number you're looking at, 33%. Over here, nothing much happening. But the question remains, if the entire industry is under plague, how come Dollar Industries is doing well? What's plaguing the industry, that's very much important. Succession and division issues are there in a lot of players, especially from the Eastern India. Price wars amongst the peers are there because of this, and because of this the cotton prices also are giving an issue. Overall the demand has also been relatively weak, and we have seen that from Page Industries con call. And also there's a shift in the business model. Now from innerwear they're moving to lifestyle brands, leggings. So that is something which we are looking out for. But apart from this, how the stocks have performed, it has been a weak setup, from the lifetime high levels. Most of these stocks hit their lifetime high in 2021, 2022. From there you see the significant downtick coming in. Page Industries of course carries a valuation premium, so less correction. And amongst all these three, which are the actual peers which we should compare, it has fallen the least, that is Dollar Industries. But what separates Dollar Industries from the others, especially Lux and Rupa? They have a Project Lakshya where they benefit from the distribution playing out, and they have been doing that for the last 2 odd years. That has been an important factor. Also the question asked is there any succession plan issues? And we check, there is a family charter in place for this company, so there's no major succession issues in Dollar Industries. Also Fidelity, it's a long only fund, they have been increasing their stake. It's likely that they'll be increasing their stake more on this, and that is where we are seeing there's a significant FI action happening in this counter as well. And lastly the valuations, if we compare them, they are still cheaper as compared to Page Industries. That's why Dollar Industries becomes a star of the pack in this beaten down sector.
Sharad, thank you so much for bringing us those details, and of course a deep down analysis of how Dollar Industries is stacking up against its peers and standing out as well. On this side of the show, we're also joined by Swati Hotkar, AVP Technical Research at Nirmal Bang, joining us now. Swati, quick view on the charts for Dollar Industries.
First of all, good afternoon, Mahima. Definitely, today we have seen a very good bounce back rally, almost of 7%. The stock is showing a positive divergence from the lower side. So we need to keep eye on whether this rally will be a short-lived or not. Today, we need a very strong closing basis above at least 370 level. If it manages to sustain above that level, such kind of a momentum is likely to be carried forward, which will take a stock towards to 400 to 420 levels. So the depth is limited on the downside. Those who are having any long positions, they can definitely hold on by keeping a tight stop loss of 350 rupees on the downside.
Okay. All right. So that's the regards to where Dollar Industries is concerned. Tapan, I'll also come to you. Not just Dollar Industries, right? You have a lot of garment companies that have come out with their Q2 numbers. And it's not like it's been an impressive quarter this, Q2 as well. And that's been the case for a lot of these companies, especially for something like a V2 retail or a V-Mart retail, where the base is also on a higher end. And on the back of that, I think a lot of these counters are seeing profit booking now. What's the view like for this garment space and any preferred pick there?
You see, as you told, this whole segment is struggling a lot, and one of the other reason is the trade war, India and US. That deal is still not happening. That is also hurting because the export is not happening, and that is where the margin pressure and also the revenue hit is getting. If you see maybe these 3-4 months will be quite tough for most of the export-oriented textile businesses, and that is where one has to keep in mind that we have to see what type of impact we are getting here. Of course, government is supporting in one way or another way to credit and all that, but no, that is not going to repair the profitability as such. So I think one has to be little bit careful here. But yes, talking about any preferable pick, I think dollar is also looking quite exciting the way you told, and also if you see the valuation is quite compelling now. And now slowly and gradually they are at a one sort of value peak. So yes, that is one take you can take it. I think there if you want to have a little bit position in SIP when one can invest. But yes, overall textile sector I think it's better to avoid currently and wait for the trade deal to happen and then take a call.
That's pretty interesting, and just to put in perspective, the innerwear is generally domestic oriented and there is an export play also which is panning out for the textile industries. We'll get in more details about it, but the stock which everybody is talking about and the strong up move coming in is Muthoot Finance. Strong Q2 numbers with a sharp AUM growth and higher yields are there. My colleague Vishwanath joins us and he has asked George Alexander Muthoot, he's the managing director at Muthoot Group, on what led to the AUM growth. Listen in.
Yeah, because there are some people who feel that they need more money, and when they feel that according to the present loan to value, they are eligible for more, they come and take more. But not a very few percentage only does that. Because just because the price of gold has gone up, they need not take the money. They'll take the money if they really need it. If they need it, they'll take. If they don't need it, they don't take. So if you look at our loan to value today, at today's price, our loan to value is less than 60%. That means people have not borrowed to the hilt. People have borrowed only 60% of what is eligible to them. 75% is the RBI stipulated LTV. They have taken only 60% or less than 60%. That means, although the price is high, not that everybody has used up the full headrooms.
And that's the management for Muthoot Finance, and stock holding up pretty well. Stock is up 9% Interestingly, if you could show the Manappuram Finance chart also, that how that has been doing. Is there any kind of rub-off happening in that counter as well? Yes, there is a rub-off happening, but not so much. It's up all 2%. Tapan had mentioned earlier in the show that he's looking at the BFSI space, especially the gold financing companies as well. But Swati, I need your opinion on that. What are the technical charts suggesting? Good time to book some profits in Manappuram, or should someone who is already having, say, a positional holding on this should stay with it?
Talking about the Manappuram, definitely today we have seen a smart rally of almost 2.5% on the daily basis. Volumes are really doing very well along with the price momentum. The interesting fact that it's facing a very strong resistance of 50 DMA, which comes to nearby 285 levels. We need a positive closing above those levels. Then the rally is likely to be extended towards to at least 300 and 310 levels. For those who are having any long position, can hold on, but keep a tight stop loss of a 270 rupees on a downside and carry the long position for immediate target of 300 rupees.
Okay, all right. So that's the view with regards to where Manappuram Finance is concerned. But moving on, Jasmeet is joining us with more details, and in fact, there's more pressure, and there's outperformers in the earnings. So we have good earnings as well as bad earnings. In this earnings season, we've seen Rubicon Research, PG Electroplast, and Voltas that has come out with divergent earnings. Jasmeet joins us with more details on this one.
Well, Raj, thank you for that. Starting off with PG Electroplast, if we look at the overall financial figures, we see the stock is facing a lot of pressure in terms of key financials. Well, the revenue fell on the back of reduced room ACs, down at 46%. On the other hand, the top line was still maintained with the given scale up in the washing machine is nearly up 55% YOY versus the electronics, which is again up by 50% on YOY basis. If we look at the overall cost, the under absorption of cost and the forex loss is sometimes impacting the EBITDA. On the other hand, the management has reaffirmed the guidance going forward, which brings out a confidence in the stock move. If you look at the revenue, it's down 2.4%, but the EBITDA is down 46%, and the margins are also down at 4.6 from 8.4% earlier. Moving on to the next stock, that's Voltas. While the company has missed earnings estimate, while they also see that the cooling product is seeing a drag. This drag comes on the back of the GST deferred buying by the consumer, also the very lean summer season which was seen in this particular quarter. While we also see that the RAC sales were seen towards the higher channel sources. If you look at the key numbers, the revenue is down by 10%, but the EBITDA is down 56%. On the other hand, the net profit is down by 74%, and even the margins seeing suffer in this particular quarter. We also have a brokerage note, that's Morgan Stanley on Voltas. They maintain equity with a target price of 1501. Now what they see is they say the UCP margins tanked while the earnings sharply saw a decline. While the UCP margin fell owing to operating deleverage which was seen in this particular quarter. But though they say the Voltas continues to retain the market leadership going forward. Moving on to my next stock, that's Rubicon Research. This was the first earning for the company post the IPO, which the numbers came in a very strong move. We look at the growth which was led by the new product launches and the steady traction in the existing product. While we also see the strong operating leverage which are displayed by the company on the account of lower cost, which helped support the margins in this particular quarter. The EBITDA expansion was led by better operational efficiency, while the company launched 6 new products in the Q2. Also, the EBITDA margin is expected to sustain going forward from here on as the management remains confident from this particular figures. If you look at the key numbers for this particular company, the revenue is up by 39%, while the EBITDA is up by 52%, while margins have gone up to 22.9%, which is expansion from the previous quarter, that's a 20%, and the net profits are also up by 56%. So all in all, mixed earning, must say there are few negatives and few positives.
Okay, all right. Thank you so much, Jasmeet, for bringing us those details. 8% on Rubicon Research is what we're seeing, in trade today. Tapan, any view on this particular counter?
See, if you talk about all these 3 stocks, now we know that PG Electroplast and Voltas, no, it's a cyclical business. And last time also management told that they had a good amount of inventory. Even PG Electroplast told almost 2,000 crores. And still they are not able to clear it out. Even Voltas is facing the same issue. I think this quarter, October to December, will be the decider for both these companies, even Blue Star, how the things will be pan out from here. Hopefully this quarter may be good and next quarter I think things will be better. But both the stocks are available at a good valuation, so one can look at it and slowly and gradually build the position, thinking about that things will be better by next quarter. Talking about Rubicon Research, of course, a very strong numbers and they are doing quite well. And if you see even the guidance and all that is quite good. The problem is the valuation is quite too high. So at this valuation, I will not enter it. I think maybe 20% down. I think one can look at it, but otherwise a good company for a long term.
All right, the valuations is something which we would be looking at, and there's a seasonality aspect to PG Electroplast as well as Voltas. But moving on from these stocks, a defense theme is also in focus on the back of Q2 earnings, and the one in our focus is Paras Defense. In fact, we spoke to Amit Mahajan, the director of Paras Defense, about the quarter gone by and outlook going forward. Listen in.
Optics and optronic systems contribution to the revenue of the company is going to grow from whatever we see today or whatever we've been seeing for so many days. The projected opportunities that we have are largely skewed in favor of optics. I'm not taking any credit away from my other division, but other division, the inflection point is linear in nature. The inflection point in front of optics business is exponential. And that's the kind of growth I am expecting optics to start influencing the revenue in the coming months, if not years. So that is the positive trend. It also influences the profitability to a large extent, and hence it is going to be a great profitable years to come as optics starts doing more revenues. At the same time, I also want to give you a slight focus that the other division, which otherwise used to have a relatively low profitability, has shown better improvement in profitability, even in spite of being in competitive zone. So again, there is all the reasons for us to smile. So this is as far as that is concerned. Now, looking at the business perspective, this company is not a quarter to quarter company, and I would maintain that even if I am having a good quarter like this. But what happens is the reason for performance always will be two factors. One, the order on hand, because then the ball is in my court. And the second is the kind of opportunities a particular company and the positioning of the company for those opportunities. And in these three areas, I think Paras is excelling when it comes to the orders on hand and the kind of opportunities that we have on hand, and our positioning for those opportunities is very, very strong. So the probability of we winning the future orders is also very high. So this is the reason for this performance.
That's the management of Paras Defense, and the stock doing really well in the trade. Strong Q2 numbers coming in. Guidance also looks on the positive side. Swati, just looking at the technical charts, do you suggest there's more up move coming in this counter? It's up, strong strengths coming in the technical charts as well, and it looks like on a medium term basis also some good breakouts are happening. What will be your views on that?
Yes, my view is definitely positive. You have rightly pointed out that we are likely to witnessing some consolidation breakouts. If you look towards the larger degree charts from the June onwards, we are witnessing that the stock is taking a very strong support of its 200-day moving average and heading towards in upward directions. Today, it has given the breakout of the consolidation phase that was at around 765 levels. If it's maintain a positive closing above the same, rally is likely to be extended towards to 840 to 850 levels. So definitely one should hold their long position by keeping a strict profit stop loss of 750 rupees on a downside for a target of at least 840 to 850 levels.
Okay, all right. So that's the view with regards to where Paras Defense is concerned. But in the QSR space, one counter that has stood out is Jubilant FoodWorks for sure, and this has been the story for the past 2 quarters as well. The stock is up 7% as we speak, and this is on account of strong Q2 numbers where like-for-like growth has improved to that 9% mark. In fact, Citi came out with a note for Jubilant FoodWorks where they've maintained buy but slightly cut the target price to 800 from 820. They said that they're delivering growth and profitability. Second half performance will be key for re-rating and to see whether any upgrades are possible on this counter or not. They've also said that like-for-like continues to outpace other QSR players and profit growth is outpacing revenue growth, and that is why they're seeing a scope of re-rating going forward. They expect Jubilant to still deliver mid-single digit like-for-like growth led by tailwinds from new product innovation, and this has been the case for them. Delivery has picked up really well and now contributing a large chunk to the top line, as well as something like innovation in their products has also worked out very well for them in terms of auguring the top line. So this is the overall view as to how things have panned out for Jubilant this quarter. But Tapan, I'll come to you on this one. What's the view like for Jubilant FoodWorks and anything else that you like in the QSR space?
Jubilant FoodWorks is my top pick in this segment, because they have been doing well in last few quarters. If you see, they've same store growth is also quite good, and even they are going to expansion through through efficiency and all that. Also premiumization in new products they are going to bring it. Strong brand is there, and that's why it is helping them. Again, the margins, now it is getting stable. Earlier there were some issue, plus inflation is down. That is going to help them to improve the margins from here. And if you see the consumption story, I think that is what is displaying here. Because of the GST cut plus the income tax benefits what they are getting everyone. So I think yes, Jubilant Food is a stock which may do well even this October to December, the festival season. It may do well for the next quarter also. So yes, this is a pick for me. I think if here or at a little bit or dip also one can buy.
Okay, all right. So that's with regards to where Jubilant FoodWorks is concerned. But moving on, and taking a look at the auto space, Hero MotoCorp is another stock that is in focus. The company has released their Q2 numbers yesterday, and while the Q2 numbers were a beat in terms of where the estimate stands, the company also had a con call today. My colleague Puneet joins us with all the details as to what the management had to say in the con call.
Hero MotoCorp is in focus after the company reported a strong set of earnings post in the Q2 earnings. Revenue grew by roughly 14 to 15% in this particular quarter, and that's largely led by 11% growth in terms of their volumes. Margins as well have crossed 15% in this particular quarter versus expectations of 14.5%, and that's another beat in terms of margins as well as revenue growth. The key reasons that the management highlighted in the conference call of a 3.7% gain in the retail market share for the company has been led by scooters, and it's a very important update coming in from Hero MotoCorp because they were largely absent in this space a few years ago with VIDA in the EV space as well as multiple model launches in the ICE space for scooters. They seem to have a foot in the door now. The space is largely dominated by TVS in the listed space, and barring them, there's not too much competition. So there's definitely the Hero brand which is gaining traction even in the scooter space, while motorcycle is also having a growth led by the GST rate cut amongst others. The management in the con call also highlighted that they are seeing an 8 to 10% growth for the industry, with Hero expected to outperform for FY26. They've also highlighted that largely a lot of the gains were led by the scooter segment and momentum will be built on that. And in terms of the industry growth, they were ahead of the industry growth in this festive period in October as well as in the previous month of September as well. Finally, they have maintained their guidance of a 14 to 16% margins, and with this quarter coming in at 15%, we could see the management inch up to 16% as well, which is the upper range of the guided margin guidance that they've given. So overall, it's a strong quarter for the company, with the commentary being the cherry on top of the results.
All right, Puneet, thank you so much for bringing us those details. But with that, we're completely out of time on this edition of Profit Buzzers. Tapan and Swati, thank you so much for taking out the time and giving us all those insights. Viewers, do stay tuned. More news and updates on the other side.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Anushi, if you look at the market, it was a volatile session yesterday, and after closing nearly flat, we are down around 60 odd points in trade today. Nifty seems to be in profit booking mode, but we are still holding on to that 25,800 level. Nifty IT seems to be beaten down the most, down around 1.7% in trade, while the Nifty PSU Bank Index, that is the top sectoral gainer, up around 0.6% in trade. Arshi?
Well, it's a choppy day of trade, to say the least, that we are looking at. If you just look at the curve over there, we are looking currently about a downtick of around 0.3% or odd. So, Nifty Bank also seeing about a 0.2% of a dip as well. As Somit pointed out, Nifty IT is under correction. It's the index which is under most pressure today. In fact, if we just pull out the constituents, we'll see majority of them, if not all, in red in today's session. But on the other side, what's doing so well is Nifty Defense. Now here, we've had a couple of pegs here. Firstly, Bharat Electronics, they've reported order wins as well. Bharat Dynamics in focus on the back of its second quarter results, as well as a 2,000 crore of an order win as well. But if you just talk about the broader markets in particular, see the small cap 250 and how the mid cap 150 is doing. It's a mixed picture that we are looking at in terms of both of these indices. 0.1% of an uptick for small cap 250, while mid cap also continues to remain under pressure. But just talking about those small cap names, what's buzzing is something like a KRBL. We'll be discussing about that later on the show. Also, main peg for most of these companies remain the second quarter results. Ather seeing about a 8% of an uptick, and all cargo logistics also about 5% of an upside is what we are seeing. But on the other hand, what's not doing particularly so well is something like a Nalco, seeing about a 3% of a dip, while Sonata Software, if we look at that, is also facing pressure in trade today. 4% is the kind of a downside that we are seeing. Birla Soft also under pressure. Coming to the other constituents where there's higher volumes that we are looking at, Dollar Industries right at the top. We on the show before other shows also, we've covered an interesting piece also, Dollar Industries versus its other peers on what's working out for the company. 7% of an upside is what we are seeing. Sagility, a large block trade that had happened, which is why the counter was in focus today. Promoters almost diluting about 17% of their stake. 5% of an upside is what we are seeing. We'll be watching out for the buyers who will emerge in the by evening. We'll get to know about that. Paris Defense also seeing about a 7% of an uptick on the back of its numbers. Your optics division continues to remain in focus, wherein they are anticipating higher growth going forward. But onto the other, active stocks as well in terms of where the small caps are concerned, we have something like a Ashapura Mine as well. 11% is kind of an uptick on the back of its second quarter numbers that we are looking at. Apart from that, Man Industries as well, if you are seeing. Now, despite H1, wherein they've seen about a 2-3% of a growth or so, they continue to maintain their guidance of a 20% plus of a growth. So that is something that we'll be watching out for. Transformers and rectifiers also interesting moves coming in here. 10% is the kind, it's locked in a 10% of an upper circuit, and this is after World Bank has removed it from its wherein earlier it had debarred the company. So a lot of these players, on most of them, the peg continues to remain the second quarter results. But I also want to bring focus to Vascon Engineers as well after the company reported its numbers. But before we go to the management, Vansh joins us with more details on how did the numbers shape up as well as what's the outlook forward.
Well, thank you for that, Anushi. Now, interesting company, Vascon Engineering. If we have seen a decent run-up in the recent past, but if we look at the broader horizon, we have seen no returns for the investors in the last 15 years from this company. However, if we look at the Q2 results, if we talk about the key takeaways from the earnings, we saw the EPC revenue that was up by 13.5% on a YY basis. There was a strong execution that has continued across EPC projects, and all projects have been executed rapidly. And if we talk about the EPC EBITDA margins, they stay consistent at 9 to 10% as well. If you look at the financials, the EBITDA is up by 5%, net profit is up by 10%. And if we look at the outlook ahead, now the company has an EPC revenue target of 1200 odd crores in FY26. That is up 20% from the previous target of 1000 crores in FY25. Also, for FY27, they are targeting EPC revenue growth of more than 1400 crores, which is, and they are also aiming to secure orders worth rupees 1500 to 2000 crores for FY26 as well. So this is how the overall picture is panning out for Vascon Engineers.
Thank you, Vansh, for that setup. Let's welcome in Siddharth Vasudevan Murthy, Managing Director of Vascon Engineers. So, firstly, to start off with, the guidance of 1200 crore that you have given for FY26, I believe that's the revenue guidance for EPC revenue guidance for FY26. But if you look at your overall revenue that we have seen for the first half, it's less than 500 crore. How confident are you of achieving this target for the full financial year, or are you revising it downwards?
Yeah, first of all, thank you for having me on your show. If you see the trends that we have had over the past few years, the first 2 quarters have predominantly been the least performing quarters. This is because of the rain situation in the country, the monsoons that we face, as well as the festivals that are there in this period. There's Ganesh Chaturthi and Dashera and Diwali. So typically the two quarters that we really perform well in our quarter 3 and quarter 4. In fact, if you see, we've had our best ever lifetime quarter in quarter 4 last year. So that should also give you comfort that, the targets that we have set ourselves, we are in line to achieve them.
So Murthy, you also spoke about the competitive pressures that are there in the industries, because of which we are looking at about a 0.5% of a downtick in terms of where the margins are concerned. But considering that you continue to maintain that 10 to 11% of mark that we are seeing, 11 to 12% of the mark that you're seeing. So just want to understand on what's happening currently, what's the kind of competitive pressures that you're seeing, and would you be able to scale it upwards to 12% or also?
So we're very confident that we'll be able to do this. And the reason I say this is that, we're very picky on the kind of orders that we choose. There is tremendous amount of orders that are coming into the market today, but we are only taking orders where we know that profit margins are healthy. And if you see our even private portfolio of clients that we're working with, they are typically the likes of Capgemini and Vedanta, to name a few. And these are marquee clients for us where we do, big projects for them and margins are healthy. So, we don't see that pressure as much. The challenge has been that we bid for a lot of projects compared to our peers to get the numbers that we need. But, we don't want to trade that off with margins.
Right. So just wanted to understand how has been the order inflow picture in the first half. What is the guidance for second half and for FY27 also, if you could share with us?
Yeah, so one of the key things that we require for taking orders is bank guarantees. And like you would have seen in our board SEBI filings, we have already secured more than 100 crores of bank guarantees from various banks. And this has freed up around 230 crores for us, which typically translates to around 2,300 crores of order that we can take with the current bank guarantee limits that are already available to us. Having said this, like we said, the target for this year is around 1,500 crores that we would like to take in as a minimum order book. And against that, we have already got around 600 crores of orders in the first half.
I believe the guidance that you'd given was 1,500 to 2,000 crore, right?
Yes.
Okay, so that remains in pipeline, but just want to understand going forward with this, high competition that you're seeing, would margins be compromised in terms of, since you're seeing about a 50% or odds of your order intake being completed, but since there's high competition here, would margins be compromised in terms of whether new orders are concerned?
So, with the kind of segment that we are in, most of the jobs that we are taking are upwards of 400 crores. At these numbers, there are few players in the country that are bidding for these kind of numbers. The competition obviously is not as much as those bidding for 150 to 200 crore jobs. So yes, there is pressure. There's no doubt about that. But we are not going to be succumbing to these pressures to reduce profit margins. We're very clear on this aspect as well.
Also, I want to get your sense in terms of what's happening with the real estate space. I believe that you have about 4 real estate projects which are currently under development. Want to understand the overall gross development value of these projects. What are the kind of launch timelines that you're expecting? If you can give us more details on that.
Sure. So right now, the GDV of the projects that we're currently doing is around 1100 crores. We also have a pipeline of around another 1100 crores. We have launched Santa Cruz, which was our latest redevelopment project in Mumbai. We have one more redevelopment project in Mumbai, as well as a greenfield project in Powai. The Powai project should be launched before the end of this financial year. And the second redevelopment in Santa Cruz, we look to launch that in the first quarter of the next financial year. Other than this, we also have 2 projects in Pune. One is a commercial project, which is around 1.3 million square feet that we've signed up in Baner, and a residential project, which is around 400,000 square feet that we've signed up in Kharadi. So these should take off in quarter 2, quarter 3 next year.
Right. So a couple of questions from my side. Firstly, the order book, I guess it's around 2,800 crore. What's the execution timeline for this? And you also mentioned that around 5,000 to 6,000 crore worth of projects are pending decision. So by when are you expecting the decision to come out on these projects, and any probability of how much of these could actually translate into order wins for you?
So generally on a thumb rule basis, and as per our track record rather, we end up executing around 35%, 33 to 35% of our order book in a year. So, that is how also this year we'll be doing around 12,200 crores. And of the 5,000 to 6,000 crores that we have bid, these are in different stages of the bid process with the client. And
okay, I think there's some kind of a issue with the audio of Mr. Murthy. Mr. Murthy, can you hear us? Okay, so there seems to be some issue regarding that, but he was speaking about how the order execution is panning out, how has the Q2 shaped up, and of course about the order pipeline. He continues to maintain the growth in terms of where the EPC revenue segment is concerned. Mr. Murthy, yeah, please continue with just making your point.
Typically do around 1/3 of the order book every year, and that is how the 1,200 number is what we have arrived at for this year as well.
Okay. Well, that was the management of Vascon Engineers. Thank you so much, Mr. Murthy, for joining and sharing that outlook on the company. But with that, let me also welcome in our fundamental guest for today, Sunny Agrawal, Head of Fundamental Equity Research of SBI Cap Securities, joining us. Sunny, hi, welcome to the show. I want to start off this conversation by asking you about Vascon Engineers. We are looking at the first quarter results. While he did say that H2 is where majority of action will take place, or in terms of where the order inflows are concerned, and even in terms of revenue growth. Just want to get your perspective on how this company is.
Good afternoon, and thanks for having me on the show. I think, yes, definitely the company is sitting on a very robust order book pipeline, which is closer to 2.5 times full year FY25 number. And usually monsoon season is a seasonally weaker quarter because usually execution is low over there. So again, I was looking at a number. I think second half the company should able to execute the project in a better fashion, and that should at least help in terms of earning growth. Even on valuation front, the stock is trading closer to 15 times price to earning multiple, so which offers a lot of comfort as far as downside is. So downside is limited on the stock. I think it's a decent bet. Again, a pure play EPC company, and to some extent there is an exposure as far as real estate is concerned. I think it's a decent portfolio stock as far as the small cap stock portfolio is concerned.
Right. Shifting focus to KRBL, that stock has zoomed up really in trade after reporting a strong set of numbers. In fact, if you look at the volumes also, it's nearly 40 times its 20-day moving average. Let's get in Mahima with more details on how the second quarter has panned out for KRBL.
Right, so Somit, as you rightly mentioned, it's been a strong quarter overall for KRBL, and if we take a look at the key highlights, strong earnings as per what the street was expecting. Basmati realizations have improved for them. Gross margins have benefited from lower average Basmati cost of goods sold, lower by around 11%. So that's aided the bottom line as well. Inventory is lower due to lower volume and lower per unit carrying cost, and export revenues have also seen a strong growth, both driven by branded as well as bulk exports. Now, if we take a look at the numbers, overall revenue has seen an uptick of almost 19% to that 1,511 crore mark. EBITDA has grown 85% at that 226 crore. Margins have significantly improved from a 9.6% earlier to a 15% this quarter, and net profit has also seen a growth of around 68% at that 172 crore mark. Now, right now, the rough sales mix of domestic versus export is 70% and 30%, which the management plans to increase going forward in terms of exports, and then margins will also improve going forward. I think the important commentary that one needs to watch out for this con call of KRBL is going to be with regards to the independent director that had resigned, and as to how now things are shaping up, because they were going to set an audit committee to investigate the whole matter behind it, and as to whether this is in place, whether this audit committee has actually taken some decision with regards to what had happened, and whether the allegations that were put forward for the company are true or not. So that is something that the street will be watching out for.
Sunny, have you tracked this counter KRBL? The results were quite good, but there were some concerns that Mahima did highlight. How are you looking into this counter?
I think again a very strong set of number by KRBL. So we have seen a very handsome rise as far as realizations are concerned. That has led to a better margin this quarter. Anyway, the company is one of the best play as far as balance sheet is concerned. So very low debt balance sheet business, despite of they need to ensure that inventory stays with them for at least a year. So despite of that, they have managed to keep their balance sheet very lean. Obviously, there has been the concerns in the past regarding some corporate governance issue, and that has always led to a lower valuation as far as KRBL is concerned. But again, looking at a number, trading at a very reasonable valuation, I think it seems to be one of the cheapest stock as far as valuations are concerned in a basmati rice industry.
An optimistic view is what we are seeing for KRBL. But just let's take a deep dive into the derivatives markets as well. And as usual, Sharad Dubey is standing by to give us a snapshot on what's happening with the trade today.
Well, the markets are remaining choppy, but towards the negative side. Looking at the Sensex, of course, the IT space that has seen a big beating. Let's pull up the Sensex heat map to see how the movement has happened, and you can see the Infosys falling almost 3% down in the trade. Looking at the active contracts, there are a lot of contract positioning changing, and we can see which are the active contracts happening in the put and the call space. If you could just get them on the screen. Yes, and you see the fall that has come down almost 84,100 levels below that. Looking at the active call put options, also BankX, not much happening there. It's on the lower side, it's trending, but some support coming in certain segments, especially if you look at the Axis Bank and also HDFC Bank. That has actually reversed. It was red earlier in the last time which we did the BSE FNO snapshot, and now also see this fall that has gone up more down, and that's why it's dragging BankX. Let's looking at the options in the segment of the BankX. Most of the actions happening in the put side. That's where the congestion is. But let's pull out the key longs which are developing in the market, and there are no guesses. It's Muthoot Finance, Bharat Dynamics making it to the list, and also looking at the short covering, two counters are there in focus. They include NBCC and Vodafone Idea, interesting name. And long unwinding, we have a couple of stocks which include Petronet LNG and Max Financial, which the numbers are expected to come out today. And lastly, if you see the short build-up, these include Scoforge and Hindustan Zinc. So these are the important stocks which are buzzing in the FNO space.
Right. Shifting focus to Fabtech Technologies. Now that company had delivered a strong Q2. The stock has jumped nearly 35% in the last 1 month. What could be the potential reason behind this move and what's the way forward? Let's get in Varsha with more details on the same.
Well, thank you so much for that. A lot of things are actually working in favor of this company. Just on the volume side, the volumes are trading at 0.7x of its 30-day average. Let's talk about what this company do before we talk about the key triggers. Now, this company provides end-to-end turnkey pharma plant solution, which covers design, installation, and engineering, procurement, and of course the regulatory validation. Talking about the key triggers, one is of course a strong set of Q2 FY26 that the company has seen. Now, there's been sharp uptick when it comes to margin because of the structural efficiencies and of course the operating leverage that the company is enjoying, and they are taking a high margin capex projects, which has led to this sharp increase in the EBITDA margin. Talking about the numbers, revenue almost grew 105% year on year. EBITDA was up 6%. Margins were at 25% versus 8% last year. Net profit was up 5.6%. So overall, a great set of numbers that the company has seen. Now, talking about their order wins and MOU, they've recently signed an order with an upcoming veterinary manufacturing companies in North Africa, and they've also signed MOU with KP Group to develop green energy powered life sciences projects. With this, if I were to talk about the order book, this takes their order book to almost 985 crores, and they are expecting 20 to 25% of revenue growth for the medium term, that is next 2 to 3 years. And the important point over here is the margins at 25%. They are able to sustain this margin, so that's the guidance that they've given, and maybe margins from 25% may grow to further few basis points over the next 2 to 3 years. Talking about the risk, headwinds, and what are the key monitorables that investors should watch out. One is the revenue and margin, that the numbers you are seeing, there may be a lumpiness when it comes to quarter on quarter because of the a project timing and the client readiness, considering the project expectations also. And lastly, this industry is a working capital intensive industry, and this company has a working capital intensive business, these are some of the key risks. So overall, a good set of numbers and strong order book and the margin uptick that the company has seen are some of the reasons why you're seeing the buzz in the stock in the last 1 month.
Right. Sunny, have you tracked this count of Fabtech? The stock has moved 35% in the last 1 month. Q2 numbers appear to be strong. What are your views here?
Yeah, definitely. I think a recently listed company predominantly operating in a pharma EPC segment. So 1,000 crore market cap, sitting on closer to 800-900 crore kind of order book, where the execution period is closer to 18 to 24 months. I think this is a very strong set of number which the company has posted post listing. So seems to be a player which is going to report a very decent set of earning growth for 26 and 27, purely backed by a very strong order book. Obviously, the one point which one need to take care of is the lumpiness in the quarterly number, which is a very common phenomenon in any order book driven business. Seems to be trading at a reasonable valuation. I think this stock should be on radar for any micro cap investor.
Okay, so that's the view for Fabtech Technologies that we have for you. But let's also talk about Wonder Electricals. Now, if we just pull up that stock performance, currently up over 9% in trade today. This is despite the company having a mixed second quarter, while revenue did see about moderation. Margins have improved on the back of operational efficiencies. Let me go across to Jasmeet for more details on what happened this quarter.
Well, Ray, thank you for that. Before I start off with the key numbers, just to give you understanding, the company operates in the ceiling fan division. They manufacture end-to-end and integrate ceiling fans and other exhaust fans as well. If we look at trading volume of the stock, it's nearly 7 times the 20-day average, currently at buzzing at 9.4%. While talking about the key takeaways from the result, we see a mixed set of results, though the top line and bottom line has suffered in this particular quarter, but the margin has expanded. We see operational efficiency has come at play, given that EBITDA also is an uptick in this particular quarter. Now, well, the downtick in overall performance could be on the back of GST rate cuts, which led to delayed buying by the consumers, and secondly, the lean summer which the consumers saw, an increased monsoon would lead to lesser utilization and lesser upgradation of fans and other materials. Even we've seen the similar trends going in Voltas as well. Now, if you look at the other key aspects and financial cost as well, depreciation cost sees an uptick in this particular quarter. Now, key numbers, the revenue is down by 26% while the EBITDA margin is expanded by 233 basis points, and the net profit is down roughly 51%, currently at 0.25 crore.
Thanks for that, Jasmeet. Sunny, let me come across to you on your view of this company. Sunny,
Coming
I
to
hope-
wonder,
yeah.
coming to wonder, I think it seems to be a kind of EMS player which is supplying products to various brand and what we have seen is that during this quarter, most of the consumer durable companies have struggled because of this disruption due to change in GST, and that seems to be the story with Wonder Electrical. But however, I was just looking at a number and valuation. I would like to avoid the stock. Would like to go with a better, well-established name like Amber or for that matter, PG Electroplast, which are working in the similar industry.
Thank you, Sunny. Thank you for joining us and giving us your views and perspective on the stock that we discussed. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it.
All right, so it is a very, very clear and loud mandate for the NDA in Bihar. Welcome to this special show. Neeraj and I are going to break down Bihar and Bazaar, dono, because there are obviously markets maybe not immediately reacting, it was already played in, but this will have far-reaching impact for how markets see stability at the center and the results, I think, beyond what anyone could think of at all.
Yeah, and Tamanna, I would love your opinion on what this means politically, but just purely from a market perspective, a neck-to-neck finish, right, is considering that the market wants the incumbent party to stay in power per se, a neck-to-neck finish might have been different. This is far away from a neck-to-neck finish, and therefore, you rightly put, it in some sense an indication of what might be the mandate for the center as well.
What the country is thinking, stability for the center. This is not neck to neck, not even head and shoulders. This is head and tail, which you're seeing at this point. So an astonishing victory. Now, even as we talk about the numbers, vote share, etc., and all of that, what does this really mean? What are the big takeaways? And I've just broken it down to some of the key points that you should look at. Well, I think for one, no one can deny this is about Nitish Kumar. Nitish proves, to borrow from a popular, statement, "Tiger zinda hai." And I've actually borrowed this from some of the posters which were seen in Patna this morning, saying "Tiger zinda hai." Well, ye tiger to bahut hi zinda hai, alive and kicking. Why are we saying that? He has been chief minister for 20 years and will become chief minister for a record 10th time in Bihar. This victory is coming despite questions on health and capability, age-related illnesses, etc. All of this was being used to say that he is not the man for the job. Well, clearly, Bihar does not think so at all. And you could call this sympathy. I would say this was a sympathy vote if the numbers were not as starkly in his favor. But this is a vote for Nitish as well. The Nitish and Prime Minister Modi combo is one, and Nitish at the forefront of it. Second thing, which was a big takeaway, it's all calm on the central front, isn't it? It's a huge mandate for the NDA. Performance of all constituents has been beyond expectation. So it's not just the JDU, the BJP, best ever performance, LJP, HAM, all of the individual constituents of the NDA have also performed very well. This means the alliance and the central government gets a further boost. It is, of course, very bad news for the Mahagathbandhan and for the opposition. They have to go back to the drawing board, try and understand what hasn't worked for them. It also questions Congress's relevance in Bihar and as an alliance partner perhaps in other states. What really is Congress bringing to the table, being a national party and part of all of these state alliances, will become a question that is asked even more. I think one of the big takeaways, at least for me, she has spoken loud and clear. Yes, I'm talking about women voters. You know, when this election breakdown was taking place, some commentary about whether women voters are being spoilt by the Bihar government with this 10,000 rupees deal and dole and whatever you want to call it. But clearly, women voters came out in large numbers, outpaced men in terms of voter turnout. And it goes beyond the 10,000 rupee freebie or dole that you're talking about. It's a tectonic shift in Indian politics, which shows that any government that understands the importance of women-oriented schemes and speaks to this cohort will be heard. Women will respond. I think the other big takeaway, Jan Suraj's experiment has failed. Prashant Kishore's party seems to be a non-starter. Remember, he was the first one to sort of corporatize what really happens in politics and give a corporate angle to way political campaigns are run. But because you're the expert at doing that, does it mean that you can have a successful political party? Unfortunately for Prashant Kishore, this election has proven otherwise. So these were some of the big takeaways.
Yeah, the message doing the rounds in a funny manner on various groups is that there's a difference between giving trading advice and actually trading in some sense. So that's the interesting one. And viewers, keep in mind, as of about 2 p.m. India time when the European markets open, etc., all the global markets have been in red, and which is why, if you look at the 5-day chart of the markets, it's not looking very good. But it has got nothing to do with the elections. If anything, that's a saving grace from a market's perspective. Let's get in our experts to try and understand what to do, or how is it that they think about this result in conjunction with the economy and the equity markets and more. Ajay Bagga needs no introduction. He's a veteran, looks at politics and markets with equal aplomb. Joins in, as does Ashok Malik, partner in India Chair, the Asia Group. Firoz Aziz, joint CEO of Anand Rathi Wealth, with us on the conversation as well. Gentlemen, all three of you, thank you so much for taking the time out. Mr. Bagga, I'll start with you. Yes, the early polls suggested a remarkable lead, but this is turning out to be a thumping landslide for the NDA. What implications to your mind from an electoral and from a markets perspective?
Yeah, Neeraj, first I would say, paraphrasing Tamanna, she has spoken. Tamanna spoke, and the women voter of Bihar has spoken. A big percentage of women voted. 72% of the electoral women electorate voted, and they have spoken. Second, I think it's a huge victory for the maturity of Chirag Paswan. Remember, in 2020, he fought from 135 seats. He took away 25 seats from Nitish Kumar, where the losing margin for JDU was less than the votes polled by the LJP. So Chirag Paswan this time cooperating in the social engineering experiment, and see the magic that they have created together. I would say maturing of Chirag Paswan is a huge thing, because it's very important for the future in Bihar. He's a young leader. He will be a future chief minister, and also at the national level, he's contributing. The third big thing, political stability, policy continuity. That's the big message. Again, she has spoken, and here the she is Tamanna. Tamanna, these markets will rally on this, because it's a big relief today. Sentimentally, it's a relief. Any other outcome which could have led, because there are very fragile numbers at the center. Out of 293, 12 MPs are JDU, 16 are TDP. You take both of those out and the government is in a minority. That is what the market keeps one eye on continuously, and this gives policy continuity and political stability.
Very well put and broken down, Mr. Bagga. I want to come to Sanjeev Srivastava as well for a quick political take on it. Sanjeev, so many things to break down, but one, I think, big takeaway would be that the Indian voter never ceases to surprise.
Oh, yes. And like I keep saying, while one could clearly discern a trend of what's likely to happen, which way the wind is blowing, the scale of the verdict is unprecedented. And I always maintain that these wave elections, or what journalists are now calling tsunami elections, they only one sees in hindsight. Oh, tsunami chal rahi thi, badi zabardast wave thi. You can sense what is going to happen, but then once the slide one-way tide turns. So then it is anybody's guess. So now they crossed 200. But one thing I'd like to say, it is a great victory for BJP and the coalition and JDU, and a great setback for the opposition. But I'm already looking ahead at the next set of elections. Where do we go from here? So can the BJP repeat this in West Bengal? They'll try their best. But the big thing is how BJP has mastered the art of not just going it alone where it matters, like in MP or other states, some other states, but also mastered this art of coalition. Now in West Bengal and Tamil Nadu, the next round of elections, they don't have such dependable coalition partners. In fact, West Bengal, there is none. So that's the challenge. So those virgin territories, how will they cross over that and win over those? I'm sure they are going to find a way out because the BJP is just so good at thinking and executing politics.
You're doing what markets do. Markets discount the current
already
event
discounting
and
the present.
markets discount the present and look forward to what's next. You've already moved on to Bengal.
Because this has happened, done and dusted. They have won in a big style. And talking about markets, somebody did ask me how will the markets react. I said, well, the markets would have reacted. There would have been mayhem if the result would have been anything else.
Markets reacted on the day of the exit polls.
Yes, but now Bihar result will not have much of an impact on the markets. It's of course signals stability and continuity in politics. But markets will move on the earnings, on tariffs, on policy decisions of the central government. So everybody has discounted that. Anybody who is serious is discounted. Of course, Tejasvi and company will have to live with it for some time.
Okay, Ashok Malik, so great to have you on, and thank you so much for your time with us here at NDTV Profit. We've called the show Bihar and Bazaar, and not to force fit the connection there, but you know, politics is something that everyone looks at very closely, and the markets had reacted negatively after the first phase because of just the sheer size of voter turnout. It's traditionally seen as a vote for anti-incumbency and everything. If you can give your perspective on why there is a concern if there is a change. Because markets are not necessarily political animals where they have a preference. It's more about stability.
Yeah, so look, you answered the question yourself. I don't think markets and I don't think business stakeholders are particularly concerned about what policies are followed. We would like policies that are supportive, but they more than the particular policy, they want continuity. They want policy consistency. And if the government is not changing, if the incumbent is staying on, then obviously there is policy continuity. Even if you don't like a particular policy, if it's there, you get used to it, you start working with it. In a very turbulent world, a world where elections are becoming more and more unpredictable, this election has given not just Bihar, but the central government, the union government, a certain policy and political space for consistency. If this election had gone badly, the UP election of 2027 would also have been a question mark, and the next 2 years would have been turbulent. Now, the BJP will approach 2027 with some confidence, and should that be okay, it can approach 2029 with confidence, which means you're looking at a long-term potential, long-term stability. Of course, one can never predict the Indian voter. So business stakeholders and markets and investors and others, companies that we at the Asian Group work with, will be looking with some relief to a process of continuity. This result has given Mr. Modi's government in Delhi space to carry out any policy changes it wants. The question is, what are the policy changes it wants to bring about? What is the new legislation it could now try and push, because it has the space for it? And that is where the next question will turn to.
Yeah, fair point. Firoz Aziz, how would you dissect this? Was this, in this election, was an avoidable defeat more important than an expected victory? And of course, today markets are reacting more on the global cues, but had that not been the case, would there have been a thumbs up to the extent and the margin of the victory?
Done?
Good afternoon, Neeraj. I personally think that here a majority of this kind is very crucial. See, because an election like Bihar is not going to dictate the capital markets as much as the extent of victory. The extent of victory tells you UP में क्या होगा, West Bengal में क्या होगा, right? So the extent of the wave is the larger message, and I think that was very crucial. Over the last 1 year of time correction, markets have tested 21,700, 21,100 on the general election day. What was crucial was the momentum and the consolidation of the market from weaker hands to stronger hands has happened over the last 1 year. You see the kind of retail and others, right? BSE and NSE publish minute breakup of what was bought, who bought. If you look at the last 1 year, there's been a lot of shift in the top 5 stocks of Nifty from weaker hands to stronger hands. That consolidation was critical. So this consolidation phase, I was looking at this election as a party spoiler, potential party spoiler. On the contrary, it has, with this kind of a majority, unprecedented kind of a majority, I personally think it gives you immense amount of stability, one. Second, of course, today's reaction could be attributed to global or no reaction from something which was a very good outcome from a capital market standpoint is because how traders are positioned over the last 1 month. If we were sitting in September, I think the same news from 24,500 had the potential to give you 1,000 points on Nifty in 3-4 days. But if you've already seen the last 1 month rallying 6-7%, that automatically implies there is some degree of positioning already done for this. And lastly, I think the most important question which I ask myself, does it increase the odds of median plus returns on Nifty or decrease the odds? I think now the odds of median plus returns for the next 2 years on Nifty median returns are 11, mean returns of Nifty are 14. I think the odds are upwards of 95%. The second question I ask myself is what's the potential catastrophic fall possibility? Now it becomes negligible. Catastrophic falls I call more than 15% because 15% peak to trough has been the average for the last 25 years. So both these questions have got more concrete answers. The 28,000 Nifty target for the financial year becomes a little more solid.
Constructivist Firoz Aziz, Mr. Bagga, the follow-up question to that would be, if there were 3 key levers that the market, or 3 key developments that the market would have been eyeing: earnings, the Bihar election in some small fashion and the extent of that victory, and then the trade truce, right? 2 of these 3 seeming to be falling in place. If we get a third one as well, right, is that a necessary and a sufficient condition for a rally, or is more needed?
No, a lot has already happened. We have underperformed for 13 months by about 30% versus emerging markets. So we have paid the price. Second, the government has made up to 12 lakh rupees no tax. So on the income tax and some relief has come. Your GST cut has come, so consumption tax cut done. RBI has done 100. I still think they should do 50 more because given where the inflation is, we can have a lower interest rate. You can't have real rates at 5% plus and expect to grow at 12-13% nominal. So RBI should target a good, strong nominal growth and especially in a low inflation environment. So over to RBI on that end. Add all this and you have a troughing of earnings downgrades. Now we are seeing more of upgrades coming in. So earning trough has passed for us. It's going to improve from here on. You're setting up the markets for very good returns for the next 12 to 24 months. Add to that a sentimental breaker, which could have come in if there was a hung assembly or if there was an adverse to the NDA kind of an equation because of the fragility of the central coalition, the arithmetics of the central coalition. I think that gets taken out, and now there is no visibility on that getting shaken for the next 2 years, 2.5 years, what the other panelists also spoke about. So setting up well, Neeraj, for better performance from here, fundamentals looking better, sentiment improving, and as some of the money sitting abroad starts looking at India again, you will see a much better market. even if it stops going out of India, the domestic flows itself are strong enough to give you pretty good returns. Feroz has given the exact algebraic equation also on it, but I would say much better returns here on.
You know, if I look at similarities between those who track markets closely and those who track politics closely, it's a geeky love for numbers, especially when it is elections. Everyone likes to see what the vote share is, the strike rate is, the success rate is, and we're going to come back to more which merges the two worlds. But I want to just go across to my colleague Sharad. And when we're talking about Bihar, especially on NDTV Profit, we also need to talk about what the state is hoping to get. And what is being bet on. There are already quite a few companies, isn't it, Sharad? And I love the get-up for quite a few companies who have bet big on Bihar.
Well, yes, it's completely right. And interestingly, the base of the economy is very low. The moment these companies come up, a strong growth comes up. And that's what we have seen in the stock prices also. So we have spoken about Bihar and its elections, but there is an industry. There is also a listed plays. So let's go and see which are the listed plays. The stocks which are having the highest exposure, Aditya Vision, they're the largest electronic retail chain in Bihar. Also, Reflex Industries, it's a small name, but for refrigerant gases, the ones which you use in AC, they have a big market share in the state of Bihar. Also, SIS, it's a very big multinational company, but it's interestingly headquartered in a place called Patna. That's very interesting. Also, Jina Seco Life Care, Ayurved theme, but they're having one hospital and 10 clinics as well. Ashiana Housing, it's a small cap company, but it's having a significant exposure when it comes to Bihar and Jharkhand. V2 Retail, another value play. That's roughly 27 stores operational in the state currently. And lastly, the recent announcements which have been coming in Bihar, and we have already seen that over the last 1 year, Railtel, they have got roughly 7,000 crore plus orders coming from the education center. And also, if you look at the Varun Beverages, they have a huge beverage facility in Buxar. Also, Global Spirits in the alcohol space, they are having a facility of roughly 30 liters as well. Also, the infra segment, that's very important, and Tamanna pointed out that the 49 major infra projects are going on. So let's look at the infra plays. What's important? PNC Infratech has got a big order. L&T, they're expected to get larger order when it comes to Bharat Mala and Gati Shakti projects. Also, NCC, they got a 2100 crore project from the Water Resource Department, and Ashok Buildcon, a small order, 500 plus crore order from EPC as well. So Bihar, if you look at it, infra will be a very important theme to look at.
कैसन रही तमन्ना?
What do I say? मुझे dialogue भी बता दो.
नहीं, लिट्टी चोखा खाए कि नहीं?
Yeah, not yet. Litti chokha after this. That's the flavor. That's the flavor here in Mumbai as well. Fantastic, Sharad. Thank you for that. So, you know, I think that's, Ashok Malik, I'm going to come to you with that point. So, this thumping mandate, historic mandate, women voters coming in, what are they going to get in return? Now becomes a question that is very valid to ask. And industrialization is something that Bihar needs to have more of, isn't it? What can the new government do to ensure that more investments flow into the state and issues like migration, which dominated this election cycle, then become a thing of the past?
Look, I have a slightly contrary view on this. Industrialization and the creation of jobs and the creation of industry in Bihar is, of course, most welcome. But let's face it, it's not going to happen tomorrow morning. It's not easy. Bihar has suffered because when Jharkhand was removed from Bihar, was bifurcated in the year 2000, Bihar lost its industrial hinterland. And you can't easily recover from that. The fact is the migration economy or the migrant economy contributes enormously to Bihar and contributes enormously to India. Because as the Indian economy has grown, it's essentially been built by Bihari labor, and it's also benefited Bihari labor. And not just blue-collar workers, doctors, engineers, lawyers, civil servants, and so on. Remittances used to contribute some 30 to 35% of household income in Bihar at the beginning of the century. Today, they contribute over 60%. So the point is, of course, industry is welcome in Bihar, but more than that, I would say the immediate target for the government should be to focus on skilling so that Bihari workers move up the value chain from low-end jobs to slightly one echelon above, because that will increase incomes. and that will eventually benefit Bihar. So I think skilling, healthcare, education, to my mind, should take a priority right now, even above searching for industry.
As we wrap the show very quickly, top priority from the new government that everyone on this panel would like to see, Feroz Aziz.
See, I think, from this government, I would definitely look at their budget and see that they have only 22% of their free resources committed to capex, which was 10 years back 39%. Their freebie has gone up from 9% to almost 14-15%. I would say capex, but their promises have been clearly 7 new airports, expressways, 4 expressways. I think the allocation of out of the 2.36 lakh crores or 2.36 trillion rupees, they have 96,000, if I'm not wrong, committed expenditure, the 1.3 lakh crores. I think the allocation to capital expenditure is going to be very critical for those promises which are there in the manifesto.
Okay, very quickly, Ajay.
Special package, help them to reduce their debt, reward the Bihari voters with a special package and help them to industrialize, create jobs.
Sanjeev, last word, very quickly. What should be expected from the new government?
See, the Bihar government should get its 2005 to 2015 mojo back. Those first 10 years of Nitish Kumar saw a lot of development, progress, work on ground, per capita income going up. Last 10 years have been largely stagnation in Bihar in terms of it's still the poorest state, poorest per capita. And like Ashok Malik was saying, industry won't come tomorrow and migrant economy does play a role. But basically, they need to focus now on governance and focus less. Election is done and dusted. Get away from freebies, which is costing a lot of money to the Bihar exchequer, which should be well spent on development and infra projects.
Okay.
So a lot of work for them.
Okay, work cut out. I think the higher the victory margin, the higher the expectations also grow, and that will be the case, of course, from the new government. Thank you so much to all of you for joining us on this special show today. We're talking about Bihar and Bazaar. It matters for several reasons, and yes, if it was a negative surprise, then we would have seen more of an impact in the markets.
Yeah, I think that's the call, Tamanna. It may not be a big positive, but a wrong mandate had it been come, would have been a big negative that has been avoided, and that's a victory in itself. Take a break. If I wrap up this show, thanks so much for watching.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the
Well, thanks for tuning in again to India Market Close, and it's not a great day from a markets perspective, primarily because the world markets are looking very soft. Mind you, Europe has started off weak, 1% lower. So in that sense, India is actually very well behaved. Had it not been for IT cracking, it would have been much better as well. This is, of course, what the Nifty Bank and Sensex have done, but Nifty IT is the principal culprit, nearly 1.7, 1.8% low the last time I checked. 1.74% to be precise, and nearly trading at the low point of the day. Broader markets too, not having the best of days really. But I repeat, I think Indian markets are a lot more well behaved than what the rest of the world markets are doing right now, which is actually a really good thing. Let me get the heat map up on the screen, the small caps in the green incidentally. The heat map on the screen to just mark the large caps. Now, Adani Enterprises up 1.89%, nearly 2%. Now, the last day for getting, being eligible for that rights issue. And that's why I think there is some bit of frenzied buying out there. SBI 0.78, there is strength in Eternal. Some banks like Axis are doing okay. There is Asian Paints, which is continuing to do well. And suffice to say, in the large cap space, along with Adani Enterprises, it's the star of the week, really. What's not done well? IT hasn't, but Tata Motors passenger vehicle, Hindalco. So metals and commodities per se have looked weak because the Hindalco, JSW Steel, Tata Steel and ONGC are all down. And then you have the likes of Tech Mahindra, Infosys, etc. looking slightly wobbly. But even amongst all of these guys, the one good thing is that the breadth on the Nifty has not worsened too much from the start of the trading day. We were about 3:2 in favor of the declines. We're currently at the same level on the Nifty at least.
So, just looking at the broader markets very quickly, also showing the pain, but not to that extent. You have to understand what is happening right now in markets as you see this crisscross. Because you're probably looking at what's on top of the screen as well, with a historic mandate for the NDA in Bihar. I mean, astonishing mandate with an 80% voter share, 202 seats right now for the NDA, and this is thereabouts where it will close finally when the last vote is counted. What's happening as far as markets are concerned? This is done and dusted for markets. The day of the exit polls, which was on the 11th, and the first round of exit polls told the markets very clearly that you're going to have a very sharp mandate for the BJP and the JDU, basically the NDA alliance. Now, that has happened plus. That is something the markets have already discounted. You have to look at what would have happened if this was not the case. Then you would have a reason to move sharply to a shock. That's not the case, so there's other worries. Very rightly said, Neeraj, it is IT stocks which are hurting because of what's happening on Wall Street and on the Nasdaq. Having said that, interesting, theories also coming that India could be the anti-AI play. So I wonder if that's something which is waiting to happen. Nevertheless, let me just go through some of the winners of what is otherwise a slightly painful day, but I think you will see recovery by the time markets close. Transformer and rectifiers, and they spoke exclusively to us when the bad news came about. They spoke exclusively to us when it was reversed. They were on the list of companies that the World Bank had debarred. They have been moved off that list today, and we'll play out that sound clip at least from the management. They're at a 10% circuit. Muthoot Finance, fantastic results, and maybe Manappuram is still, running up in the afterglow, 9% up. Guidance also moved up, and yeah, Manappuram is moving up in the afterglow. Jubilant Foods, Bharat Dynamics, so companies with good numbers have worked well today, and that you're seeing very clearly. Chakri Lokpriya joining in, he's Chief Investment Officer, Equities, LGT Wealth. Chakri, very good afternoon to you. Have you been watching Bihar election results or have you been watching the markets?
Good afternoon. I think, that's rubbing off kind of on some of those infra companies. And, the numbers are clearly removes, and I guess the roadblock now for the bigger thing, which is the US-India tariff deal. So now that, the deck is clear, so hopefully now we'll see a resumption and an acceleration of trade talks.
Let's also talk about a few of the stocks that are not doing particularly well from the broader market. I'm looking at the Nifty 500 right now. You have something like a Premier Energies losing about 5.4%. GMDC also losing ground. And really along the expected lines, and Neeraj was talking about some of these commodities counters that are moving lower. GMDC also losing about 4.4% at this point. Infosys is down about 3.3%. And so quite a few of those frontline IT companies losing quite a bit of ground. And really that is the story of the day. But I want to ask about Muthoot Finance and the financing, gold financing space. Chakri, we've had multiple conversations about lending and the fact that credit growth has moved up to double digit, but there was a commentator who spoke about the fact that quite a bit of this might just be gold financiers, and they seem to be enjoying that Midas touch right now. Would you buy into this, assuming that there's going to be a significant improvement in the second half?
Clearly, yes. The numbers were expectedly good. When the underlying asset of your business is in such a strong, in this case, gold, is doing so really well and has done so for the last couple of years, then the collateral for the business of Muthoot becomes so much more stronger, giving them the ability to lend more and with the confidence that even if there is a drawdown, they could survive that well. So that confidence, I think, will take it well into the next year. And, even if gold prices stagnate or come down even a wee bit, the company will still do well.
All right. A couple of other names. And you know what? One of the stocks that stood out to me this morning, it's a 10,000 crore market capitalization company. Chakri, I'm not sure if you would have studied it. Rubicon Research. And this is on the back of numbers. It's a recent listing. And it is a manufacturer of pharmaceuticals focused on export markets, primarily the US. And they've had a tremendous quarter. I'm just wondering whether you're paying attention to this counter or certain other counters from the space. And would you buy into any of these names?
I'm sorry, I really don't know this company.
But okay, let me ask you about the broader pharmaceutical space then. Because you've seen quite a few results that were positive and the outlook is actually looking pretty good for some of them. What stood out to you?
The CDMO companies, have done their capex over the last 2, 3, 4 years. Their revenue is kind of now picking up because the capex is kind of complete. They're contracting, despite all the US tariff kind of uncertainty. Yeah, pharma has not been impacted, but even then, the contracting out has been strong. So these companies, whether it is Divi's Labs, Sciences, they should all grow north of 20% top line for the next, 2, 3, 4 years. Now, if that happens clearly, the bottom line also is going to grow, and I think the stock prices would follow the earnings growth.
All right. Let's get in a trading view on the show as well. Chakri, thanks for those ideas. Stay on. Amit Goel, partner and co-founder of Blue Oak Wealth, joins in right now on the show as well. Amit, great having you. Thanks for joining in.
Thank you. Thank you for having me.
Yeah, the pleasure is ours. A bit of a down day today, led by IT and the global markets. Is this a dip that you believe you would want to buy, or you want to kind of not enter into a long trade right now?
So I'm a perma bull, so I would always want to buy the dips. But as we spoke yesterday in the morning, when Tamanna asked me whether there are going to be any fireworks or any sprint in the market, I was of the opinion that probably not. Any uprise in the next 2, 3 sessions would probably lead to a downtick. A kind of unfortunately that has happened. Market has given a downtick.
You can feel happy that what you said has happened. It's okay.
But as I qualify that I'm a perma bull, so I would rather want the markets to go up. But yeah, this is a good opportunity to buy me some longs. And the trigger for the market would really be, the tariff deal. Once that comes through.
Okay, I have a counter view on that, or I have a question. If that was to be the case, then you would have not seen the up moves that we've seen with the question mark on the tariff deal hanging around. I mean, Trump ji has been saying, I don't know for how long now, Prime Minister Modi is my best friend, I love India, but we will do a deal, but wo ho nahi raha hai. And markets have moved on.
Markets will continue moving on in spite of what is happening there. But I'm just talking about the trigger for the market, right? It's more of a sentimental factor because I believe the companies are already aligned or realigned themselves to the changing scenarios in the market and the tariff regime. But yeah, that could possibly be the trigger because if you look at the overall earnings season, it has been fairly okay. It's not too disappointing. Yeah, it's if anything, there is some positives only.
Better than expected.
Better than expected.
So from that perspective then, in the near term for the Nifty 50, we saw yesterday it kissed that 26,000 mark and then sprinted away. So is that likely to take place in the near term to say that 26,000 is that major hurdle that may be very difficult for the Nifty 50 to cross?
Quite possible, quite possible. I do not see any major reasons why it should, give a breakaway right now. If you look at the derivatives data also, there is a very strong hurdle at 26,000 on Nifty and at 58,500 and 59,000 for the Bank Nifty. So until and unless, see, the data says itself that there are strong hurdles. Once that's crossed, possible that we could have a short covering rally.
Amidst that, what would you be buying right now?
I've always been asking you, can I interest you in a Reliance? Can I interest you in an IT or a BSC? And they have worked.
IT, you're going to buy today?
I have been buying for the last, Infosys from 1400 levels is what I've been recommending. That IT is a contra play and that has played out. Today there seems to be some bit of profit booking, but that's par for the course, right? Any further dip towards 1400 levels in an Infosys kind of a stock, I would definitely be a buyer.
1400 is like 5-6% away.
Yeah,
so
I'm
we'll
sure.
wait for the 6%
Yeah, we
dip.
will definitely.
Okay, so what are you entering into today then?
So if I had to enter today, I would play for the strength in some of the select banks. The public sector banks are still showing a lot of strength. So SBIN continues to be one of the top picks, right? It has, in this down market also, it has given strong moves today. So maybe enter with today's low as a stop loss for possible targets of 980 or 1,000 rupees. There is also BSC. If you look at BSC also, it has been moving very strongly. It has been one of my recommendations for the last few sessions as well. Again, at the current market levels, we could enter for keeping the today's low as stop loss for eventual targets of about 3,000 probably.
It's remarkable what BSE did in its quarter, right? We spoke about it as to what
Resilience.
NSE has done. Yeah, the resilience and relative resilience as well, because NSE wasn't able to do that. So it's been good.
Maybe
going for
base
that one.
effect, or maybe it's could have come into
But
play.
even October has turned out to be good for
It
them.
has.
And for me, the most startling thing was the
More
fact that
market share to grab because, I mean, NSE is the leader. Maybe if you look at it.
they actually managed to defend their margins, which NSE, the most evident part of that results was the sharp contraction in the margins, which BSE didn't have.
What would you do with a Muthoot today? Muthoot Manappuram?
I'll stay away. If I was long earlier, I would probably take some profits and enjoy the weekend, but not join the rally right now because of this very sharp bump up.
Take some profits.
Yeah, 100%.
Yeah.
Because there's no momentum in the market, right? Any pop is getting sold into, any dip is getting bought into. So there's really nowhere to go.
If you missed the Asian Paints bus earlier,
I'd still stay away.
yeah.
I'll stay away from the strong momentums which they are already giving, because Asian Paints, in a short term, it looks very good, the kind of move it has shown. But if you zoom out the chart, it has not done too well in the last 1 year or so. So I'd probably, take it with a pinch of salt.
Let's see that 1 year chart. You're seeing the 6-month one right now. In 12 months, it's still about 16% up on Asian Paints, but most of that has come from the last week or so.
Correct.
More than anything else. So unless you happen to be at the right place, right time, it would be
it's
painful.
really too much of a timing game there.
Everybody today is talking about Litti Choka, but the stock that is buzzing today, one of the stocks that is buzzing is because of pizza.
Pizza.
Now let's call it pizza.
I didn't say it that way.
Yeah, that's okay.
Say it again. Okay, I'm not going to attempt that. In any case, I wonder what the Italians would say to that. But anyway, Jubilant FoodWorks is the stock that we're talking about. It's up 7% on the back of a pretty strong set of numbers. That is, in fact, the stock of the day that we've selected for you. And Mahima joining in to talk about pizza. Right, Mahima?
Well, the Italians would be devastated to hear that for sure. But speaking about Jubilant FoodWorks, it's been a stable performance this quarter, and this has been the case for the past 3 quarters for Jubilant FoodWorks, and it has outperformed its peers in big way, and that is why the investors are buying in this counter, and it's rewarding its investors as well. Overall, in terms of volume growth also, it's been a good quarter. Overall for Jubilant FoodWorks, store expansion continues, and this time they've done bigger expansion in terms of where the Popeye stores are concerned, and that's growing at a very faster pace versus what the street was expecting. Margin improvement is largely driven by productivity and cost optimization, and overall in terms of the numbers, if you take a look at the earnings, revenue was up almost 20% this quarter, EBITDA up again another 20%. Margins, however, were flat, but gross margin did see an improvement. Net profit at 186 crores versus that of a 64 crore profit earlier. In terms of where the operational metric stands, like-for-like growth this time came in at around 9.1%, which the street would expect that second half would turn into a double-digit like-for-like growth. Dine-in sales revenue, however, remained flattish this quarter. However, the company, of course, is taking into account the store expansion, but revenue per square feet for them is going down for sure. India segment continues to expand and innovate. A lot of innovations in their product categories have taken place, and that's worked very well for Domino's. And strong order growth of around 15% year-on-year basis has also come in. International business, Turkey has become PAT accretive this quarter. Bangladesh has seen a growth of around 54%, and Sri Lanka, which is a very small part of the business, but has grown around 86%, of course, on the back of a lower base as well. Lastly, in terms of Popeye performance, like I mentioned earlier, this has been growing faster than what the street was expecting it to be. Continues to see double-digit same-store sales growth. Gross margin continues to expand, and Popeyes has also entered new territory. So this is the overall view as to what's worked for Jubilant Foods this quarter.
Okay, so Jubilant is the stock of the day. Like Amit Goyal said, if something is seeing a pop, please sell it. That is his fundamental, technical view on it, not the fundamental view. We'll get back to more on the markets, but top of mind right now, and you can't deny it, is what's happened in Bihar. I just want to recap the latest numbers for you, and then we'll get into a quick discussion with Dinshaw Irani and Gaurav Shah, who's joining us. Gaurav Shah, by the way, is the president of the CII Bihar chapter, and I thought it's an interesting voice for us to have when we're talking about elections. But it is an eye-popping 203 seats for the NDA out of 243. I mean, I think we have to invent more words than clean sweep, etc., because that doesn't quite describe what we're seeing right now. The Mahagathbandhan reduced dramatically to 33 seats, others at 7. Pull up the internals and the breakup of who has won what within the NDA, because that becomes important as well in terms of the number of seats won. The BJP at 92 is obviously now the senior partner in Bihar, is an addition of 18 seats. Overall, the NDA has won 80 more seats than the last election, and that's astonishing in itself. The JDU is plus 38 seats at the current tally that you're seeing of 81 on your screen. The LJP, actually, in that sense, is also quite a star of the show, because Chirag Paswan's party has gone from 1 seat in the last election to 20. There's an addition of 19 seats. Percentage-wise will, of course, top that list. And, of course, the HAM and other of the allies have done well as well. On the losing side, RJD is the biggest loser in that sense, have shrunk from nearly 75 seats to 27. We're talking about the vote share within the Mahagathbandhan right now. That's down about 48 seats. The Congress has lost 14 seats this time, from a 19 to a 5. Vote share is also a very important perspective before we get to our next set of guests, because the vote share is truly astonishing. I don't think you have any elections or too many elections in Indian history which has shown 83% vote share for the winner. That, I mean, just look at it. 8 out of every 10 voters at least are voting for one party. The ones which are remaining in the other 2 out of those 10 have to really wonder what's going on. And let's just look at the map of Bihar and how it looks with the orange and the green now, and clearly it's dominated. It's a saffron wave. I don't know if you can see saffron wave entirely because JDU is a big part of it as well. But Dinshaw Irani joining us, Helios Capital Management, Gaurav Shah, President CII Bihar chapter, also with us. Welcome to both of you, and thank you so much for speaking with us today. I'm actually going to start the conversation with Gaurav Shah, if that's okay, as the President of the CII Bihar chapter. Mr. Shah, what do you want from this new government, which has been given a pro-incumbency vote, a vote of faith from the people of Bihar? What does industry now want to see?
See, firstly, thank you for having me here. Since we are on NDTV Profit, I would like to state what profit this mandate brings to Bihar. So, not only Bihar, but India's growth story as well. So, I often say that investing in Bihar is like investing in a company that has all its fundamentals strong, waiting to be listed. And the valuation is just not right. So, this mandate is a clear signal that it is the right time to invest in Bihar. When we speak about what actually the industry looks forward from this government is this policy continuity, the stability that it has already bought, the policy reforms that has already been there. Investors' confidence will come automatically, and there will be a long-term predictability. So these all are the right ingredients for Bihar and the next government that will be taking over. Apart from that, the immediate expectations would be like on these rallies that political parties have done, or rather BJP and the NDA government have done. A lot of EV manufacturing units and sugar units and pharma parks in Begusarai, industrial parks in all the districts of Bihar that have been announced, and we are looking forward to the executions of the same.
Okay, Dinshaw, I want to come to you on this one, because generally when you speak from the lens of a fund manager and somebody that invests on behalf of others or looks at the market and invests, the amount of attention that you will pay to a state election may not be as much as certain other people. But having said that, would you say that this provides a blueprint for elections down the road in state elections? And would you be paying attention from that standpoint? And do you worry at all about dole, about freebies that are giving out?
Thank you first for having me on your show, and a very good afternoon to you and your viewers. Actually, I've been on the road for quite a while now, last couple of weeks, because we're launching our small cap fund. So I went and met most of the distributors out there. And, one of the biggest concerns was, by the way, there was a lot of skepticism on the streets. Very skeptical about the markets. In fact, I heard things like 10-20% kind of corrections. And one of the reasons was that BJP is going to lose Bihar. That was one of the big excuses being given out for being so skeptical on the market. I think that's answered for sure. So that's one big hurdle out of the way. I think the next two hurdles are more or less also, one of them was debt, US debt and stuff like that. I think that's been around for a while. So I don't think there's a problem there. And third one, let it be. It was about geopolitical crisis. So I think basically the fact is that this big hurdle, which is out of the way, is very positive for the markets, one. Secondly, you talked about the way forward for other state elections. I think this was a one-sided election result which came out in favor of BJP. So I'm sure, rather NDA. So I'm sure this going forward also, the other states where there's so much of skepticism and stuff like that, I think that answers a lot. And frankly, I mean, Rajya Sabha majority is what I think the NDA wants to look forward to, and this will help in a great way. And about the doles bit, I think that's a part and parcel of all. You saw that happening in the US also, right? So we can live with that. As long as the demand side picks up appreciably, I think we don't have a problem at all. In fact, one of the questions that Tamanna was asking, that what if Trump again backtracks on whatever he's promised, I don't see that to be a problem, because I think it's domestic demand which is to prop up the economy rather than anything else. So that's it.
So then why, Dinshaw, hi Tamanna, why are markets sulking today? Because, I mean, in terms of what could go right from a market's perspective, everything has. You have a good set of Q2 numbers and you have some nice numbers today as well, which is showing turnaround stories, etc. Overall, even the broader markets basket has performed well. Bihar elections have shown up no negative surprise, if at all a positive surprise. I mean, no real reason for Nifty IT to also sulk because you don't have an AI dependence which is hurting NASDAQ.
No. So, Tamanna, actually, I think this is where the story is, there's a bit of a disconnect. So, I think biggest overhang today is IT on the markets. If you take away IT, probably I don't think the markets are going to be that down as they are today. I'm talking about the broader indices, yeah. So, anyway, so IT, I think the bigger story is not being AI dependent on anything, but I think it's about disruption from AI, which is going to be overhang. For some reason, I think we've been ignoring this. I mean, this big elephant in the room, and nobody's ready to answer that. So our feel is that we remain very negative on IT, and going forward also we're negative on that. And asking about why the markets are sulking. Well, that's anybody's guess. As I said, there's so much of skepticism on the street today. Maybe it'll take a while for things to absorb, to soak in as such. And I mean, as your previous guest put it, probably one trigger could be the reversal of the stance that US has taken against tariffs on India. But that'd be a midterm positive. I think the bigger positive will be if this demand growth continues, if this bullishness that one has seen in the last quarter of September, which continued into October. And I think one of the big positives that one saw in the morning itself was the PMI for the services index, and obviously for the manufacturing, where the labor has come up. I mean, as in the employment opportunities have come up. I think that's a very big positive, which everybody's ignoring as of now.
Yeah, and that's exactly what I want to ask Gaurav about as well. Gaurav Shah, representative of CII Bihar chapter, and I think a lot of people focus on the economics of this, right? Because let's face it, Bihar has a long way to go, a lot of catching up to do. So the question I think that people are asking from the outside in is that what will this large mandate bring to the state now? What industries, in your opinion, can get that fillip and leg up? And do you see movement on the ground as soon as the next couple of months?
So, you just spoke about the freebies that the government has just offered, or the political parties have been offering. So people are taking it negative, while I take it as positive. So while if you see the promises are as big as Bihar budget, or maybe at few parties have gone beyond Bihar's GDP as well. So now some find it alarming, but I have a positive angle to it. When any government commits such scale of spending, it automatically commits itself to raising more revenue as well. And the only sustainable way to raise revenue is rapid industrialization, more enterprise, more jobs, and a broader tax base. So as for industry, we read this message as a clear message. Bihar has no choice but to do industrialization aggressively. Growth is not option here. It's no more an option. It is an essential now. And that's why I see a very bright and transformative 5 years ahead, provided we now convert this mandate into executions.
Dinshaw, I'm guessing I know your answer already, but I'm just trying to understand still. When Chandrababu Naidu got elected, there was this whole talk of companies in that state that you go out and try and see and buy into, etc. It happens for a few other states. I'm guessing for Bihar, as of now in the listed space, because the presence is low, nobody will probably try and do that kind of a trade, right?
No, I don't think so. I don't think so, Neeraj. I think as you rightly mentioned, there are hardly any companies or corporates listed in that space which are of any material presence. So I don't think that's going to happen.
Got it. And I just one quick follow up, Dinshaw. I heard you say that save for IT, the markets would have been doing well. The small cap space, the actual index is also doing well. You reckon towards the end of the year we end this year with a bit of a flourish in that, because two of the three key conditions that the markets were looking at, earnings, the Bihar election, and the trade truce, two of those three have actually turned out fairly okay.
Yeah, actually, Neeraj, that's what I'm saying, that I think the markets are, I don't know what trigger they're waiting for, but frankly, I mean, I think this is a good opportunity for any investors looking at value, getting in and buying as pick, and that's what we're doing. In fact, that's why we're timing our launch of a small cap, because I think a perfect time when there's so much of skepticism in the market is when you want to pick up these small cubs which are going to grow into big lions or such. So I think that's where we are today.
On that note, gentlemen, thanks so much for joining us today. Pleasure having you on the program, and appreciate the insights.
Thank you.
All right, let's go across now for our regular segment, Heard on the Street. This is where my colleague Somit Sarkar brings you all the chatter from the dealing room. Somit, it's been an interesting day, and markets perhaps bearing the brunt of everything that's happening globally, not necessarily focusing on the Bihar elections. But what are the dealing rooms talking about right now?